Having 13 million barrels of oil pumped every single day here in the U.S. The question is, how much more can the U.S. pump? How much is there elasticity there in terms of compensating for further disruption? And these were some of the conversations at a time where it's not clear how we resolve this. And that was really clear to me.
Yeah, especially as the U.S. economy seems to hold up. Demand looking better than expected. Certainly a lot better than what a lot of people had anticipated at the
여러분 안녕하세요.
I wanted to ask you, we know that the Chinese
오늘도 변함없이 뉴스 읽고 준 여자입니다.
There are a lot of negative headlines when it comes to China's economy overall. Moody's downgrading some Chinese bad banks, of course, and then the stock market tumbling before the national team had to come in and buy. To what extent are people even talking about China the way they once did, or have the global elite and have markets kind of decoupled themselves from what happens in China?
It's a great question, Scarlett, because I wouldn't say they've decoupled. It's this sort of understanding that it's going to be difficult, and the businesses that need to do business in China will keep doing business in China. Qualcomm CEO came on and was talking about how they plan to continue working with them. They're the world's second biggest economy. That's what you're going to do.
일단 아직은 사람이 없을 때 뉴스 괜찮은 뉴스 뭐가 있는지 한번 알아봐야겠어요. 오늘도 그럼 탈출가 있는가 보다. 머크? 머크 2023년 전체 채무 실적 발표 예정.
consistent from President Trump's administration through to President Biden's administration, and whatever happens in November, it will continue to be a theme. What are people saying when it comes to the possibility of Trump 2.0?
So we asked a lot of people about this. This was a very hot topic here, and it ranged from a real sense of resignation to frustration to anger to befuddlement to some people just saying,
금요일에 그래서 그런가? 오늘 보니까 발표가 되게 많네요.
And European countries really pulling their own weight. The big takeaway, though, I'm glad that you brought that up, Scarlett, this idea of the policies on trade under Trump are not that different as they are under Biden. And so right now, businesses are starting to understand that the big change with Trump 2.0 is the uncertainty factor. Because frankly, that is
라이언 델바젤
it is the
실적 발표 예정.
이것도 business wants predictability, and that was a big concern for a lot of people here at Davos.
Well, I think the Emmy for dramatic effect goes to Christine Lagarde when she was asked, what was she thinking about in terms of Trump coming back to power? She just paused. I'll have some coffee.
I would give her the Oscar for that. Yeah. The timing was impeccable.
She's from Russia, and this is what she said in response to Francine in regards to the second term of Donald Trump in the White House. She took a slightly more bullish stance. The best defense is a form of attack. ticket. We don't know who's going to be in the White House, Lisa. But one thing for sure is we have two hot wars. We have Hamas, Israel, and we have Ukraine. The Ukrainian foreign minister was with you, and I thought it was quite prescient that he said it's not that they don't want to give us the money, it's that they've got domestic issues that are a higher priority. So
사람이 아직
this is a
없나 보다.
critical issue.
여러분 오세요.
Did it rate at Davos?
오세요. 오늘 금요일이니까 내일 다시 못 보잖아요.
Last year it was very much front and center. A lot of questions about how it would transpire. This year it was sort of the drumbeat underneath as another one of the hot wars. I think people have perhaps moved on a little bit more than the Ukrainians would like. But I think the fact that President Volodymyr Zelensky was here, meeting with all of the business leaders, shaking the hands of Jamie Dimon, shaking the hands of all the different bank executives. I asked the Ukrainian foreign minister, what do you want with these private executives? What support are you hoping to find? You know, there is this feeling, and I will say, and this is just an anecdotal conversations that I had with business executives in private conversations, there's a feeling that some of the public officials are going to business executives for advice for the first time that they've really ever seen. They want to understand what the business landscape is trying to get to be confident. There is a sense of we don't know what to do among a lot of public officials, and to me that was really a noteworthy kind of revelation at a time of so much uncertainty.
Lisa, thank you very much. It's an interesting moment when you get a foreign minister sitting down with Jamie Dimon looking for advice when political leaders are perhaps less present and available. Lisa, thank you very much. Great coverage. You, the team, Anne-Marie and Jonathan, and of course Francine has Linda in Davos. This is Bloomberg.
여러분 오세요. 사람이 없어요.
I got that job when I was 36 years old.
36 years old, you're running USAID. How many employees does it have?
We had 11,000.
Did you feel qualified to run something that big?
I did until, the work started.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division of one of Discovery. It was just Warner Media at the time. He said, you know what, when we send our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. We talk about you. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run
일단 지금 매매 존이니까 조금 좀 부드러운 음악을 좀 듣는 게 어떨까 싶어서 일단 편하게 들어봅시다.
30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said, well, 50 times. I worked through about 50,000 That guy who was at that dining room table trying to pay his phone bill is that same guy today. 30 years later, that fire is still in my belly. I still was scared, and I'm still running after that vision of building the world's biggest
Bloomberg has enhanced search on the terminal to when you need it. Now, you can simply type phrases in everyday English to the command line. Search analysts, find people, analyze markets, enter phrases, or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Surveillance covers the latest in global markets and the political influential world. Join Jonathan Farrell, Lisa Abramowitz, and Andrew Weidner. Weekday morning at 6 a.m. Eastern, only on Bloomberg.
차트 보니까 어제보다 엄청 많이 올라왔어. 제가 어제 원래 매도를 누리고 있었는데 큰일 날 뻔. 진짜 그대로 갔으면 진짜 망했을 수도 있어가지고 진짜 잘 빠져나갔어요.
And myself, I'm Scarlett Fu. Everyone is recovering from Davos. They're going to be making their way back, but we have plenty of news to keep you occupied with in the meantime. And Manis, we're just looking at the headlines that cross on Spirit Airlines. We know the DOJ blocked that merger deal, and yet Spirit Airlines, there's some headlines here with Spirit assessing options to refinance its 2025 debt maturities. Yes, we knew that was an issue, but more relevant to this JetBlue merger is that Spirit Airlines is still saying that the merger agreement remains in full force and effect.
뭐가 잘못됐나 보다.
Announcement of their earnings for the fourth quarter.
그대로네.
$1.32 billion, slightly higher than what the
차트가 그대로네.
estimate was of $1.3 billion. But Spirit still believes JetBlue combination is the best opportunity out there. You could see Spirit Airlines shares moving higher in pre-market trading, up by 12% right now. For the week so far, it's down about 62%. JetBlue, meantime, this week up about 3%. So you know that JetBlue shareholders are kind of relieved, it seems, that merger's not going through. Or at least the DOJ blocked it.
Well, one man's pain is another man's gain. You know, if Spirit has those material issues in refinancing their debt,
오늘이라도 먼저 혹시 갑시다 좀.
that has inherent risk. I'll just leave that thought there. I'm not going to make any predictions on it. I want to give some context around the debt profile within Spirit. So my understanding of it is this: you've got $1.1 billion worth of loyalty program debt coming due in September 2025. I find a fact. I'm going to find a fact. I'm a bit dangerous. So that is the one line of debt that's coming maturity in September 2025. On the broader context of what is the debt pile for Spirit, it was downgraded by Citi. So it was Citi's note that gave you this data. They downgraded it to self-fund neutral, and they said that the debt sheet has risen from $3.3 billion to $5.5 billion overall in the past 2 years. So that's the weight of debt that needs to be resolved. They're also saying they have modified the revolving credit line in November. Now we need to get a little bit
괜찮은
more
것 같아요.
detail.
이제 좀 움직이는 것 같아요.
Can you refinance? What do you pay to refinance? And will you make it through that refinancing? And it's not just Spirit that's going to face this.
No, but Spirit is, of course, facing this first. And the big issue with Spirit is that a lot of analysts had anticipated if this deal did not go through, it would have no choice but to potentially file for Chapter 11 bankruptcy protection. Another headline here, going to what you were saying about the debt due. Spirit had $1.3 billion of liquidity as of the end of December last year, and it's taken several steps to shore up its liquidity during the fourth quarter. Of course, we will continue to keep you posted on this. JetBlue has not made a comment
엄청 많이
on this.
올라왔어,
We'll bring it to you
어제.
when that happens. But if we broaden out our look at what's going on in the
진짜
financial
어제
markets right now,
끈이
you
날
can see
뻔.
U.S. stocks are set to move higher or open higher, and the Nasdaq continues to lead the way. The Nasdaq closed at a record high yesterday, Manis.
Yeah, I mean, so much for the death of Mag 7, so much for.
제가 그렇게 보이나요? 사실 아마 카메라 문제 아닌 것 같고 제가 원래 방송하는 거는 그 메이크업 안 하고 그냥 하긴 하는데 이번에 좀 그 전에 약속이 있어서 메이크업을 했는데 일부러 좀 무섭게 보이려고 그 좀 센 메이크업을 했는데 그럼 성공이나 보다. 이렇게 보시면 좀 성공했나 보다. 잠시만요. 사실 카메라 사실 그렇게 썩 좋지 않긴 한데 종을 좀 좀 괜찮을까요?
Usually when the dollar is higher, we'll see losses in oil. Right now, if you take a look at oil prices, they're holding near a three-week high. WTI just approaching $75, Brent approaching 80, and of course we're keeping an eye on all the developments in the Red Sea. The U.S. and the Houthis trading trading tit for tat strikes in that area. Let's bring in now our first guest of the hour.
일단 봅시다. 어제는 진짜 어제 진짜 잘못된 생각이어가지고 오늘 하루 종일 오늘 매도할 거야 해서 매도를 해버렸어요. 근데 중간에 뭐가 잘못돼가지고 보시죠. 계속 올라가고 있어. 계속 지금도. 아니 사실 진짜 17,200원까지 올라갈지는 몰랐거든요. 왜냐면 지금 일주일 전에 17,000원 넘기기엔 좀 어려워서가지고 뭐 그런가 보다 해서 더 이상 안 올라갈지 싶었는데 엄청 많이 올랐어. 진짜 어제도 조금 고생을 했는데 그래도 좀 잘 빠져나왔어요. 그리고 보니까 오늘 금요일이라서 그런지 모르겠는데 오늘 여러 가지 발표가 되게 많네요. 제가 이렇게 중요한 뉴스 해놨는데 또 머크 정치 재무 실적 발표 예정하기도 하고 라이언 델바젤 4분기 실적 발표 예정도 있고요. 여러 가지 보고서도 있고 아무튼 오늘 좀 재밌는 날일 수도. 그러니까 조금도 긴장돼요. 오늘 같은 날은 저는 그냥 숏으로 오늘도 그냥 숏으로 해버릴까? 그냥 너무 많이 올라가는데 아무튼 일단 좀 조금 더 생각해보고 그러니까요. 조은씨 오늘도 하늘까지 가고 있는데 전 딱 17,100원 정도 이거 하늘이다라고 생각했는데 하늘을 넘네요. 어디까지 올라갈지는 잘 모르겠고 근데 오늘 같은 경우는 좀 떨어지지 않을까 싶어요. 그래야 돼요. 진짜? 조용하게 스매시 타임을 맞춰서 진짜 어이구 어떡해요. 저 사실 좀 전에 집에 막 들어와가지고 오늘은 차트 볼 시간이 없었는데 근데 보니까 참 타이밍이 좀 여러 가지 있었는데 그렇군요. 근데 오늘은 원래 금요일은 좀 약간 빡세지 않아요? 완전 롤러코스터 되지 않을까요? 저 그렇게 생각했는데요.
Some software, etc. When you see significant repricing in any of those really high-end
성애를 봐요. 성애를 엄청 많이 보고 그 이후로 엄청 많이 고생하고 근데 어떻게 빠져나가요? 그래도 200으로 시작했는데 지금 359만 원? 159만 160만 원 벌었어요. 좀 괜찮은 것 같아요. 원래는 그런데 오늘은 조금 더 있어봐야 될 듯이. 일단은 조금 더 기다려보고 다 막 돌아가고 있고요. 완전 난리가 났어요. 요즘 다들 왜 이래 진짜. 돈 벌기가 그렇게 힘들어.
Okay, and we're talking about workforce consolidation. Wayfair, the furniture retailer, has announced a workforce realignment plan. There's some marketing buzzwords. It's going to lay off about 13% of its workforce. The workforce reduction involves about 1,650 employees managed with an annualized cost savings of
이렇게
more than $2
이런 애매한 시간에 왜 이렇게 쏠릴까요? 왜 이렇게 미관할까요? 오늘 그쵸 좀 시험시험 하면 좋을 것 같고요. 왜냐면 아직은 어떤 상황인지 파악하기가 좀 저한테는 힘들어요. 저 사실 되게 이런 거에 있어서 되게 땅성한 여자야. 뭐 계속 올라가겠네. 뭐 많이 올라갔네. 그럼 떨어지겠지? 생각했는데 어떡하게 근데 여기는 뭐지? 오케이. 되게 많이 올라갔네. 한 6시 15분? 6시 13분에 엄청 많이 올라가고 갑자기 급속히 떨어지네. 역시 위험해. 해외 선물 시대는 위험하다 진짜. 슬기 발생하면 잠기 쉴게요. 저도 그러고 싶어요.
Interesting development given the opposition, the hard opposition from U.S. regulators and a court decision.
Yeah, and actually they say that there is a line there that the merger still remains in full effect, even though you've had that judgment against it. Now we've just seen JetBlue open up 1%, so this is going to be a tussle through the morning. Can they refinance? How much will they refinance? And what will the debt? This is something we talked a lot about in October.
그러니까요. 지금은 좀 딱 내려가고 있는데. 노리고 있었는데 놓쳐버렸어요. 사실 제 느낌상 왠지 올라갈 것 같은데? 주식 분위기가 왜 이렇게 좋아요? 네, 저도 기다리고 있는데 봐봐요. 지금 올라가고 있어요. 기다리고 있는데 역시 집중이 막 엄청 많이 필요해요. 뉴스 보느라 다행히 늦었어요. 정말 금방을 사야 되나? 아니면 다른 거 어떻게 해놓고 해야 되는 것 같은데. 어떻게 하실까요?
The most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in New Hampshire, only on Bloomberg.
Ukraine does not steal any money from American taxpayers. It's, to say the least, a very little part of the overall defense spending. Moreover, a vast amount of this money stays in the United States because it's invested in the production of weapons that goes then to Ukraine, and it needs to be explained to American taxpayers that their communities benefit from it. The new jobs are created.
That was the Ukraine foreign minister, of course, Ukraine officials in Davos making their appeal to U.S. leaders, the global elite, and of course U.S. taxpayers to send some aid their way. When we take a look at what's going on in the markets right now, it's been a while since the Ukraine war has affected markets. What is affecting markets, certainly for crude oil, and you'd be surprised that it isn't affecting it more, is the tit-for-tat strikes, missile strikes in the Red Sea.
Look, I think when it comes to the oil market, it's about the oversupply. The exports from Russia are on the rise. The demand level is firm, but the supply level. You heard the conversation with John Kerry and Lisa talking about the US producing 13 million barrels a day of oil, but in terms of total production from this country, it's over 21 million barrels. That's gas and oil and all compilated together.
Yeah.
So this quantum, this scale of supply
지금
from this
뉴스
country
쪽으로 보니까
onto the global market is in many ways.
제가 생각했던 거는 지금 러시아 우크라이나 지금 전쟁하고 있잖아요. 아 이거 되게 큰 그 주식에 대해서 경제에 대해서 좀 큰 영향을 계속 주고 있다고 생각했는데, 근데 보니까 미국 아나운서들이 다 다른 의견인데, 뭐 원유 때문에 지금 다 주식이 좀 불안정하다고 하는데, 아마 그렇지 않을까?
Long end of the curve, 20 basis points on it. The question now is, do we flick to steepeners? If this US economy is firm, robust, firing on many cylinders, the consumer is strong, the consumer is healthy, part of the consumer, by the way, I'm not part of it, but this is the point.
You're not part of it?
I am.
You are.
I went and spent a few dollars at Christmas time. Mohammed makes this point. Multi-faith in the retail. Arian says the markets have overpriced the speed and the depth of Fed cuts, and he wouldn't be surprised if they only start in the summer. That's in his story this morning on Bloomberg.
Yeah, and of course, markets have been pricing in anywhere from 5 to 6 rate cuts for a while now, whereas the Fed itself sees more like 3. All right, let's bring this all together now and bring in Maya McGinnis. She is president of the Committee for a Responsible Federal Budget. And Maya, we did have Congress actually get to work and do something. They've managed to avoid a shutdown. They've passed some bills that President Biden has to sign, but that would allow us to stay funded until March 1st or March 8th. Does Congress get anything done between now and March 1st and March 8th beyond negotiate the same things that they can't agree on?
Yeah, it's a great question. So the starting point is great, good news, we're not shut down, but no one would make the case that Washington is functioning, not by any account. And so between this continuing resolution and the previous one, basically
다음 주 기업 실적 발표한다고. 와, 그럼 다음 주는 엄청 재밌겠네. 테슬라도 저 테슬라 있고. 근데 테슬라 요즘 좀 떨어지지 않아요? 테슬라 주식이 요즘 좀 상태가 안 좋아요, 제가 알기로는. 아무튼 내일이래요. 다음 주에 좀 재밌을 듯? 그쵸. 그러면서 지하로 가는 거죠. 아니면 그때 매도해버리면 되잖아요. 근데 물론 타이밍을 잘 잡아야 될 텐데. 전 사실 좀 자신이 없어요.
Keep in mind, a budget is a statement of a country's values and priorities. It really
맞아요,
is
조한 씨,
a
화이팅!
document. So much is going on in the world. The geopolitical
저도
situation
화이팅!
massively. Our big programs, Social Security, Medicare, are headed towards insolvency. If ever there were a moment to say, what are our priorities and how do we want to fund them, that would be where we are now. But instead, it is that lurching, and if we end up just funding the government kind of at flat levels or possibly a small cut because there's a default cut that will go in place, none of the decisions about what makes sense to fund and what should we get rid of will have been addressed. And all of this is with the backdrop that this budget that we don't have only focuses on 1/3 of the government. 2/3 of it are on automatic pilot programs that are going faster than the economy, and they're getting no attention as well. So while we have these huge issues of the supplementals, Ukraine, Israel,
그쵸, 내가는 과감하게 해야죠.
this stuff isn't going to be just for this year. This is
과감하게 하고
going to handle it.
So Maya, for an Irishman,
떨어지면 아니면 성에 불 때
United Kingdom,
그냥 막
politics,
엄청 울면 되고
like a walk in
엄청 오늘도 후회되네요. 오늘도 잘못한 선택을 해버렸어요. 하면 되지 뭐.
wake up and actually realize
이거야 재미죠.
as the French finance minister Valérie Giscard d'Estaing said, the United States has an exorbitant privilege. So what is it that gets Washington to wake it up? What do you need? A downgrade? Do you need a buyer's strike on your debt? What is it gets politics to wake it up and go, actually, we got to run a country?
Well, so one of the quotes I most live by is from our co-chair Leon Panetta, who has always said, listen, this is going to happen. Fiscal change is going to have to happen. It will either come from leadership or crisis. And I have always believed it would be from leadership. And I am starting to really believe it's going to only be from a crisis, that nothing else will cause us to act. And then the question is, what crisis will that be? The downgrades should have been wake-up calls. I will add a new problem into how we are budgeting these days, which is there are now many policy problems that we know we need to address, whether it's Social Security or the border. Take your pick. And yet you have politicians from both parties actually making the case, don't solve these issues, even if there's a possible compromise to be had, because we want to keep them alive to fight politically. And I say this as diehard political independent, but when you are running a country with two parties more intent on killing each other than actually running the country, you have a lot of problems. And I think we're stuck there with these huge levels of polarization.
So Maya, very quickly here, all this talk about business lobbyists pushing for some kind of bipartisan
지금도
tax deal
잣대가
this
왜
year, that's just a pipe dream at this point?
왜 그럴까?
Actually, I don't think so. I think there's a chance that the tax deal that's on the table
가끔 자꾸 보니까 멈춰 있어. 왜 그럴지 몰라. 지금 괜찮아요? 참 그때 진짜 다행히 괜찮은데? 일단 봅시다. 계속 떨어지고 있는데 또 올라가네? 너무 애매하네. 언제 들어가야 되나? 언제 어디로? 애매하네.
But I mean, I think that's the global thing. The deficit at the moment, by the way, $510 billion, and 21% of that is to do with interest.
Yeah, paying the interest.
아니요, 그 매수로 팔면 지금 가격이 너무 세지 않아요? 왠지 가격이 너무 많이 올랐어요. 아이, 진짜 방금. 그러니까요. 지금 너무 이상해요. 나스닥 뒤지고 있지. 항승 떨어지고 코스피 올라가고. 분위기가 너무 좋은데요? 뉴스 보니까 지금 나스닥도 지금 계속 올라가고 있어요. 올라가고 떨어질 팀도 안 보이네. 계속 기다려야 되는데. 아니면 그냥 예약해버릴까?
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with
오해받으면 안 되니까 이거는 맥주 아니에요. 이거는 사이다예요. 사이다. 큰 사이다. 나중에 막 취하고 이렇게 할 일이 없으니까 걱정하지 마세요. 방송은 맨정신으로. 잠시만. 좀 떨어진 것 같은데. 지금 매도록 하면 좀 괜찮을 수도. 그냥 오늘 하지 말까? 오늘 그냥 내내 하지 말까? 너무 애매해요. 어디 들어가야 되는지. 일단 주원 씨의 추천은 매도? 매도 해볼까?
This is Bloomberg Surveillance alongside Nancy Cranny. I'm Scarlet Food. Team Surveillance, of course, is in Davos, Switzerland, attending the World Economic Forum. In their place, we are taking a look at futures right now, indicating a higher open for U.S. stocks in about 2 hours' time, because the S&P futures up 0.4%. Nasdaq 100 at least made a record high yesterday, and right now you can see is leading the way among the futures indexes, up by 2/3 of 1%, and the laggard here continues to be the small cap index. The Russell 2000 is higher right now, futures that is, by 0.2%. But what happened to the whole market breadth is going to come back in 2024?
Yeah, everybody just sort of got off that bus and just went, you know what? I mean, there's a couple of phrases I've learned since I've been on this show. One is, weaponized FOMO. One is JOMO. And I think the joy of missing out.
저는 꼽칭이에요, 꼽칭. 완전 꼽칭. 흥심장 하는 척. 완전 맞아요.
To a statement. We can debate that with our PIMCO guest in just a moment. But this was a virulent week for bonds and the equity markets in Texas. Now we're not
Morgan, Jamie Dimon getting a pay raise as the bank posts the highest annual profit in the history of American banking. Now, according to regulatory filings, Manis Dimon was paid $36 million in 2023. That is up from $34.5 million a year earlier. For anyone keeping count, that's a 4.2% increase compared to her own salary increase that might have gotten or may not have gotten.
갑자기 올라버리네.
I've not done that yet.
Eval period. You know, the pricing is, 4.3% sounds quite reasonable in the inflationary environment, but of course it's about delivery. It's about shareholder equity delivery. They put in $49.6 billion.
머리가 너무 복잡해요.
There was something for everybody. Daniel Pinto got 30 million.
Yeah.
Mary
이럴까? 너희 그냥 지금이야? 아니야. 나중에 그때 들어갔을 걸. 아니 이게 괜찮았을 텐데. 이제 지금 다 놓쳤어요.
Raises of at least 5%. Of course, in coming days, we're going to hear from market funds of how the other big banks are paying their CEOs when it comes. The one thing, of course, when it comes to Jamie Dimon and any conversation about him is what's going to happen next. He's been atop the JP Morgan management chain for 18 years now. He has the longest tenure of any big bank CEO. Is he going to step down anytime soon? Whenever you ask him that, he says, "Oh, ask me in 5 years."
Well, we desperately tried to get him to answer the question when he ran for president of the United States of America, and he sort of like swerved that so elegantly. You look at the comeback of Sergio Amati back to UBS. There is an enduring sense of, I suppose, support when you see the figurehead on top of these banks endure for a long period of time. Brian Moynihan, Sergio Amati coming back. You have Jamie Dimon there. You know and understand what it is their policies are. One is about a real determination on dividends and a return on equity. And Amati will deliver, we believe, a review on those targets in 10 days' time on his numbers at UBS. Of course, they want to be the Morgan Stanley JPM of the United States of America. Good morning, Sergio.
Good morning, Sergio. All right, let's move from the big banks to the big retailers because Macy's is cutting staff and it's closing stores. The department store chain says about 2,300 employees will be let go, mostly in corporate roles. 5 stores will also be shut down. According to Macy's, the moves will help it become a more streamlined company, corporate speak. We also know that in terms of timing, this comes as the PE firms Arch House Capital and Brigade Capital have made a $5.8 billion offer to take it private. And there's going to be a management change over at Macy's too, right? Because the CEO, Jeff Kennett, is retiring in February and making way for the president, Tony Spring, to succeed him.
Look, this is all about structural change. We've talked about it ad nauseum for the past 5-10 years in the ever-escalating onslaught of Amazon in your life and other delivery mechanisms for shopping at the high end and luxury end. And that's only in its infancy. So this is more about how do we actually transact, how do we buy, and do you want that level of real estate? This goes back also to a whole much broader conversation about commercial real estate as well, not just in retail, but on a US and on a global basis.
Yeah, speaking of commercial real estate, you've gone to the Bloomingdale's right next door to the Bloomberg office, right?
I'm a keen shopper there.
Yeah, that's some prime real estate right there in Midtown East. All right, our final story that we're focusing on right now is Congress averting a partial government shutdown that was set for this weekend. With both chambers, yes, the Senate and the House passing a short-term spending bill yesterday that pushes new deadlines to March 1st and March 8th. So we get a reprieve, but not for very long. President Joe Biden expected to sign the legislation, which, interestingly enough, the House nearly half of the Republicans opposed.
And the question is, Mike Johnson, we had a conversation
안정할 때 조금 해보고
on a sticky wicket because he promised no more temporary extensions. Here he is.
지금 몇 시야? 9시 30분. 1시간 있다가 좀 발표가 있다고
I'm just still stuck on sticky wicket. What is that?
봤는데
A sticky wicket. It's, well, first of all, for an Irishman talking about cricket terminology, it's always dangerous. So a sticky wicket is where the wicket sits on the top of the stumps.
뭐 오늘도 매드 좀 해볼까요? 어제는 잘 안 됐지만 오늘은 좀 되지 않을까 싶어요. 한 해보죠.
All right, we were talking to Tony Crescenzi, who's been sitting by patiently. He is PIMCO portfolio manager and member of the firm's investment committee.
지금 안정할 때
making it in on this freezing morning in New York.
와리가리 할 때
Move by Congress to actually pass a
해보고
short-term spending bill and avert a shutdown. Do any
안고
very little
봅시다.
expectation that anything would change regarding the trajectory for U.S. debt. In fact, it hasn't changed in quite a long number of years. I would say, though, that in 2025 we may begin to see what I would call a read my lips moment. Read my lips for George Bush, 1988 presidential candidate, in a speech written by Peggy Noonan, who was a famous speechwriter for Ronald Reagan. In what she said was the best line of the convention, well, George Bush said, "Read my lips, no new taxes." He wound up breaking that pledge 2 years later because the interest payments on U.S. debt had grown substantially to a record high.
근데 사실 아무리
US GDP. That's a level
금요일이라도 오늘 좀 안전하게 갔으면 좋겠어요.
because of high indebtedness and high interest rates. It's going to breach the George Bush number.
금요일이라서
In a few years'
참
time,
지치네요.
payments, will be
매일
over $1
이렇게
trillion, more than defense spending.
롤러코스터 타는 게 역시 쉽지 않죠.
Investors, we can say, and the public, we can say what's happening here. We can't take much more debt, just like in the UK last a year and a half ago when Prime Minister Truss was pressured out, in part because she had a debt proposal that the bond market rejected.
Can you honestly, I mean, everybody sort of smacks me back when I say this, you know, can you imagine some kind of a serious jolt and strike against US Treasuries, as happened under the Truss government?
Well, the way it would likely play out is as it did under the Truss government, where the bond market would react to proposals to raise indebtedness further in a very negative way, meaning interest rates would rise, but that rise in interest rates would stop the legislative process in its tracks and prevent the indebtedness from worsening. So I wouldn't worry about it too much, but again, would expect some volatility if there are any proposals to raise indebtedness significantly more, because think about it, we are reaching a certain endpoint. You could say, I'll call it a Keynesian endpoint.
The title of one of your last books, The Keynesian Endpoint, you said that would break. Where do we get to with that?
It's a practical limit to the use of debt. We had a lot of spending after the pandemic and inflation that resulted from it, so that's a practical limit. So the bond market
악마이고. 그럼 오늘은 주한 씨 악마 역할을 해버리셨네. 죄송해요. 왜냐면 제가 말을 너무 많이 해가지고 너무 피곤해서 지금 말도 안 나요. 아무튼 오늘은 저한테 주한 씨가 악마 역할을 하셨죠? 그럼 나중에 뭐 문제가 생기면 그때 아하 나 주한 씨 때문이죠. 돈 내놔요. 제 돈 내놔요. 오케이. 보니까 조금 떨어지는 것 같은데?
Alan Greenspan, the former Fed chair, and Paul Volcker used to define it as a level of price changes that ceases to influence
아니야. 지금
businesses and
괜찮아요.
household decision making. So we may not get to 2.0%, we'll get to 2 point something, but that 2 point something, if it sort of wavers around there, can still be price stability. But the Fed isn't there yet, so it has to be cautious about acting too soon. The key lesson of history is to keep at it, as Paul Volcker said, and keeping at it is
했을 때 뽑았던 돈을 쓰면 되죠.
Cutting cycle that we had in GFC, pandemic, taper tantrum, and others, and we have a community that has lived perhaps not back past 2000 in this bond market for a long period of time. You say there's 3 Ds. Don't try and time, the bond market. Don't catch a falling knife, but do catch today's yield. So this is rich enough for you on 10s. This is rich enough. Will the curve shift? Do you want to level into this? Do you want to scale into this?
So then, if the timing move in interest rates
but do catch these deals while you can, because look at the Bloomberg aggregate real quick. 4.75% today. The Bloomberg aggregate, by the way, is sort of like the S&P 500 of bonds, a compilation of high-quality bonds. 4.75% is still significantly
뭐
above
분위기는 아직은 잘 모르겠고
the last 20 years. It was 3.25.
근데
The
왠지
last
좀
30 years was
떨어질
4.5.
것
So you get
같은데
deals above each of those long averages.
그만
So
좀
quite
올라가.
attractive relative to history, relative to expected inflation in the twos. So you're getting a high real interest rate. Finally, expected volatility. The Bloomberg aggregate tends to move 2-3% or so. Yes, it moved a lot in 2022, but the bond market is going to say no to inflation, etc. And Fed will get the job done. So that is the final don't for the years. Don't fight the Fed. Believe in its ability to foster price stability. That should give you confidence in owning bonds today. So we're going to have all that confidence, and this is a very good time to be investing in fixed income.
All right, Tony Crescenzi with the 3 do's and don'ts when it comes to bonds. Thank you so much for joining us. Really appreciate you joining us. All right, we do have some breaking news here out of Ford. It is cutting its F-150 EV Lightning production. The stock is moving lower in pre-market trading, off by 0.8%. It is reducing production of this vehicle. About 1,400 employees will be impacted, and it sees global electric vehicle sales growth in 2024. Surprisingly, or I should say not surprisingly, given the headlines here, less than anticipated.
This is actually a much bigger and broader conversation than the idiosyncrasies of Ford. Ford dynamics at 1%. This is about global demand for EVs. This is about Tesla has had problems. They've been consistently cutting prices in China. This isn't about whether you want an EV. This is about
거봐요. 지금 딱 떨어지고 있잖아요.
transition, and that is being challenged. As well as I don't know enough about the F-150,
떨어질
except
때가
they are
됐어.
big.
Matt Miller knows a lot about
He
it.
knows a lot
Yes,
about
it's a
it.
short-term pain point for all these automakers, but
He's ordered a Cybertruck.
really,
Yeah.
Tony Crescenzi and his Cybertruck.
Within 2 months, I'll have it. Surveillance on the road in the Cybertruck with Tony.
Wow, can't wait. All right, you're gonna have to send us some pictures.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
For the foreseeable future, I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money, we've made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups that we've helped grow their business, and having built a world-class culture, and the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job
맞아요.
is
숑숑.
far from done.
지금이 차트도 보니까 애매하고 시간도 아직 애매하니까 지금 그냥 편하게 마음 편하게 하면 될 것
Hear
같아요.
from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends, we're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday.
피곤해 보여요? 이것도 다 메이크업 때문이에요. 잘못 알고 계시는 거보다.
But what we want to talk about right now is the Apple Vision Pro. And Manis, this is the headset thing that they debuted a few months ago, where it just looks like really expensive ski goggles. And when I say really expensive, we're talking about $3,500.
Yeah, I mean, this is about transporting you into
피곤하기보다는 집중이 돼 있어가지고 이럴 때는 너무 다들 피곤해 보여 아니면 너무 화는 거 아니야? 이런 코멘트들이 날리고 있어요. 아니요, 저 그냥 집중할 뿐이죠.
Yeah, the pre-orders begin today, and of course, the actual device launches on February 2nd. Let's bring in Mandeep Singh, Senior Technology Analyst at Bloomberg Intelligence. And the headline here for the Apple Vision Pro is that YouTube, Spotify, Netflix, they've all declined to launch a new app for the operating system of this device. Why is that? Is this because they want to be convinced that this product is viable?
Yes, as well as, these companies have the engagement right now. If you look at where people consume Netflix, Spotify, and YouTube, it's on PCs and their smartphones. And they have those billions of hours of engagement. Why would they want to cannibalize that with a new device that potentially could work, but what are they going to get out of it? Apple is not paying for content here, so there's no incentive for Netflix, which, by the way, doesn't let you even sign up on the smartphone because Apple takes 30% and we're going through that drama with Epic Systems case. So clearly the incentives for all these content players is very low in terms of making this device successful.
The lack of YouTube, Spotify, the lack of Netflix plugins, can it materially hit the demand outlook? Because what are they penciling in for this product?
Well, so with any new Apple device, there will be die-hard fans that will come and buy the product. So I wouldn't be surprised if it gets sold out, in terms of pre-orders for Speak itself. That's going to happen. But the question is this a niche category or
어디 올라가?
market like an AirPods?
오늘은 어디 올라가?
And on that front, I do think, headset computing in itself has been a niche category.
애플 출시기
They've spent $50 billion since 2013. Last 10 years.
분위기가 좀
And they've
괜찮은데?
generated $5 billion revenue.
저좀 컴퓨터 싶은 거 뭐야 도대체?
Why does it not
불안하게
because that's not. Why is it not taking off? Why is it not taking off? Is it generational? Is it price point? What is it that's causing us not to want to sort of legally get away from it all?
Yeah, I mean,
많이 올라갔네?
they've tried at the low end. Meta's lowest price device is around $400. So it's not about the price point. In fact, Meta is targeting mass adoption. But I just think it's a niche category.
$400 versus $3,500. I mean, there must be a difference in quality.
So Meta is going for quality here with all the bells and whistles. They want to make sure you have a good experience when you put the headset on, all the processing power they need within the headset. I still believe headset computing as a category is a niche category. It's like gaming consoles. Why do you want to use headset computing?
표정이 안 좋은데 아직은 너무 애매해요. 너무 집중해서. 생각하기보다는 그냥 집중 중. 여러 가지 하나씩 해야 되니까. 사실 주식이라니 해외선물 하면서 이거 차트 봐야 되고 한 킬로 뉴스 들어야 되고 제 일자리는 일처럼 갑자기 생겨가지고 또 해야 되고 하는데 왜 이렇게 복잡해요.
When it comes to Apple, does the Vision Pro represent a push again to keep refreshing?
티 같은 얘기일 수도 있는데 병아리는 잘 못 날아가요. 닭도 그렇고요. 병아리처럼 날아가면 금방 떨어져요. 물론 저는 지금 떨어질 이거 주식 지금 떨어질 거라고 생각하고 이런 반응을 지금 가지고 있는데 아니야 날아가면 안 돼요. 저를 매도를 해버렸기 때문에 저는 떨어져야 돼요. 떨어져라
has taken the lead, and for good reasons. It's probably 2 to 3 years ahead of everyone else right now in terms of their OpenAI partnership, what they have done in terms of Copilot launches, and that's where Apple needs to catch up because they don't have a generative AI strategy.
진짜
It's interesting how
올라가면 안 되는데.
generative AI will be the fundamental differentiator, even within Mag 7. I want to talk about Apple Finance. We have these headlines. Apple's to open up to its rivals in Europe. This is on the ability to use your phone, to tap and pay. So it's really trying to get past the European Commission. They've offered a 10-year to other providers for the mobile wallet. How big will Apple Pay be as we go forward? We've got all the issues within Apple, but ultimately it's about transactions and banking and money, isn't it? That's where the alpha can be.
I mean, look, vertical integration always works when the experience is seamless, and what Apple Pay is doing, they've made that payment experience seamless. But they are getting a lot of resistance from the ecosystem as well as from the regulators. The whole, take rate that they have, 27% to 30%, and that's what everyone is sort of revolting right now, and there will be a fee compression.
이렇게 할래요, 진짜?
At some point it will happen. All right, I'm looking at the Magnificent 7 and how it's done so far this year. As a group, up 1.8%. NVIDIA leading the way, up 15%, far away the best performer here. And chipmakers just got another lift this week when TSMC came out with its projection that it sees growth in 2024. How does this change the narrative on a sector that's, kind of trailed everything else within the tech world?
그러니까요, 완전 로켓 발사다.
I think when it comes to hardware refreshes, everyone is waiting for that, AI PC and AI-based refresh cycle that hasn't transpired. Right now, everything has been data center driven, and that demand will persist. But I think the bar is so much higher that the room for positive surprises is going to be much lower this year than what we had last year.
Yeah, TSMC, of course, continuing to gain in trading and, of course, giving a lift to the European tech companies. There aren't that many, but there are some chip makers.
Well, there's STMicroelectronics, there's ASML. So there is the one thing that Europe doesn't have the bulk of the technology that you have here in the US. It doesn't have the Apple, the Microsoft, but it has the chips and the gear makers for the chips. Apple is up pre-market. What have we got? Up 0.6%, but Advanced Micro Devices up another 1.6%. Chips all the way.
Chips all the way, and AMD is seen as the second best option.
아니, 좀 억울하네. 아니, 하라고 하시잖아요. 저기요, 전 기억력이 되게 좋은 여자예요. 여기 기록이 다 남아있으니까 나중에 고소 해버릴게요. 딱 기다리세요.
Optimism we can have around the sector this year.
Yeah, AMD, by the way, man, is up 10% so far this year.
Yeah, okay.
Magnificent 7 levels.
There on the Magnificent 7 levels. Let's see, does that continue to play out? Intel's up 1% before the bell as well. They've had a price rise from Raymond James to $50. But Apple's actually not great.
2023년 연간 제목 보고도 있네요. 진짜 좀 많이 있어요.
3,500 you're gonna spring for me?
뭐가 되게 많아요.
Mandeep, he's buying everyone Vision Pros.
He's one of those die-hard Apple fans, and
I'm just trapped in an ecosystem that I cannot escape.
And he's willing to spend to continue to stay in it. Mandeep Singh, Bloomberg Technology, senior technology analyst.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match.
얘기가 잘 나왔어.
Offer ends January 31st.
완전 잘못되고 있네. 마이너스 70만 원이네. 뭐 역시 나는 매도는 잘 안 맞나 보다. 역시는 제가
significant challenges
빨간색
that we're
좋아해요.
confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow.
그래요. 뭐 일단 보시죠. 전 지금 뭐 물론 지금 올라가고 있긴 하지만 좀 떨어진다고 생각해요. 그러니까 지금 좀 성의를 하더라도 좀 있다가 다시 기회가 올 거라고 생각해요. 뭐 그땐 67만 원? 62만 원? 그때 잃어버렸는데 물론 잘 했다는 거 맞아. 근데 뭐 어떻게든 수익을 다시 파는데 근데 지금처럼 그때처럼 그런 상황이 아니잖아요. 조금 이러고 해도 돼요. 괜찮아요. 오늘은 우리 주한 씨랑 의견이 갈리네요. 일단 보시죠. 일단 보시고 하는 나라로 가면 그때 오케이 인정. 그리고 나는 매도 여신이 아니에요. 저는 매수 여신이에요. 그때 인정할게요.
Search Go to find answers now.
As the consumer demand stayed strong, you would start to see kind of a more normal cadence to things.
We think earnings are growing. The street thinks 11%. We think half.
Overall, tech has slowed, but it's still incredibly strong and one of the fastest driving sectors for growth.
What we see right now is a great deal of concern over what's coming. That's going to introduce volatility. I think that's going to continue in 2024. We're in a great era where there will be some disruptors coming in and life may change.
This is Bloomberg Surveillance with Tom.
뭐 울지는 안 할게요. 그냥 다음 주 반성만 안 할게요. 울지 않고 반성 안 하고.
that they have on the way up in the face of a spike of 20 basis points at the short end of the curve. This is about readjusting your view on where US rates go. We spiked by 20 basis points on the short end of the curve on 2s and on 10s, and yet technology, the Nasdaq takes out a record high. So much for growth being busted on a blast from a spike in
Well, we talked to different people about this, whether the bond market is seeing something totally different from the stock market. The stock market has earnings to distract itself with. Maybe that's the wrong way to frame it, but it has earnings to key off of. And earnings from TSMC, for instance,
하는데
This is whilst at the same time you saw a net outflow of US equity stocks, but technology is still the destination so much for the breadth trade, which was trade out of Max 7 trade
심각하게 많이 올라왔어.
2000, etc. But if you're going to extend and if you're going to have an extension on the rate cuts, in other words, they don't come until let's say the summer, maybe even the third quarter, as it's
Close to the election. Ooh.
What does that do to the broader breadth component of value? Does it make it more challenging? I mean, that's an intellectual debate rather than an actual debate at the moment. Tech is flying high. In terms of a quick snapshot for risk, let's just run through it because we've got dollar resplendent up 1% this week. You've also got yield.
Resplendent. I like that. Yeah.
A magnificent moment for the magnificent dollar. The presence of the magnificent seven. Whoever said that we couldn't do alliteration on this show in the absence of Jonathan, Lisa, and Anne, Marie, and Tom. Spoozer up, double nickel up 0.55%. Euro dollar is flat at the moment. The dollar has strided away as yields repriced up by 20 basis points. As I say to you, you give back a pip this morning. 412 is where they trade. So yields, are they going to level out there? You just had pip down. Just had
마이너스 10만 원?
He likes the idea.
괜찮아요.
Buying in here.
밥 안 먹으면 되잖아.
5% and oil is down a third of 1%.
굶으면 되잖아. 괜찮아.
Because we're all pumping plenty of oil. In Russia's case, exporting plenty of oil. So the world is awash in oil. What did you say about double nickel and S&P futures?
Double nickel. So when you used to make a terrible mistake putting an order in to buy dollar yen, to buy oil, whatever else, double nickel. I want to buy 55 Nikkei futures. That's double nickel.
Okay.
마이너스 10만 원.
Reading into my daily speech.
Feel free. Resplendent, phlegmatic, and double nickel. You see, you learn things on this show when the others are away.
This is great. First time anchoring with Manis, and I'm learning so much.
It's been a good 2 hours. Let's not kill it for the third.
We would never.
Never. Let's get to David Lefkovich. He is the head of U.S. equities at UBS Global Wealth Management. Good to see you this morning, David. So we're waxing lyrical about the robustness of the equity market. Record high for the Nasdaq, and yet yields are spiking 20 basis points. Can you join the dots for me there? Good morning.
Yeah, happy to do that. Thanks for having me. Yeah, I think as you guys were discussing earlier, I do think it's about earnings. If you look
로스콧
at
한번 가시나요? 뭐 한번 해보지 뭐. 저 이제 막 포기했어요. 마음 놓고 그냥 하자. 아 역시는 금요일이 그러니까 위험해요. 그냥 막 해요. 매도 해버리지 뭐. 매수 뭐 해버리지 뭐. 아 역시 월요일 때는 제일 재밌고 제일 신나고 막 떨리고 뭐 긴장되고 금요일은 약간 저 70대 아주머니 할머니를 돼버리고 다 인생이지 뭐. 올라갈 때 있고 내려갈 길이도 있고 괜찮아요. 그냥 살면 되지 뭐.
Without any rate cuts. I mean, that's a heck of a call. So earnings growth and your call in absentia maybe of the 6 rate cuts.
Yeah, so I think the important thing is why is the Fed cutting rates? If the Fed is not cutting rates because the economy remains strong, I think the U.S. equity market will be pretty much fine.
좀 더워지고
If
좀
cutting rates
올라가고.
because the economy is very weak, well, that's a whole other story. So I wouldn't get too bogged down on precise level of interest rate cuts that are being
이렇게 피곤할 때는 단고 최고예요.
expected by equity investors. I think it really just does come down to will the earnings acceleration come through that the market is mostly expecting at this point, and we think it will. Look, obviously, if
좀 맛있는 거 마셔야지. 일단은 좀 깨세요. 자라도 좀 그려보려고요. 좀 깨세요.
past the delay of a rate cut so long as it's for good reasons, that the economy is holding up just fine and we don't really need it. And inflation is still coming down, but not to a point where the Fed actually needs to move. I want to bring in the corporate news that we got at the end of last hour, which is Ford cutting its F-150 EV Lightning production. And of course, Ford is not the only one. We've heard from Hertz selling down some of the Teslas and its fleet. These EV predictions that people had been banking on are not really coming to fruition right now. How does this change the consumer sector? How does this change the auto sector from where you sit?
Yeah, so we're neutral on the consumer discretionary. That's where the auto manufacturers live. And we do think, I think it's pretty clear that there's been some slowdown in EV adoption. There's been some of the low-hanging fruit has already been picked by some of the OEMs, and we're getting into the part of the market where, it may take a little bit more effort to sort of penetrate the market. So. But I don't think this is a broader read on the health of the consumer. I mean, we just heard from a lot of the banks. I would say the main message is that consumer spending is very steady in terms of growth. We're also hearing some from some of the retailers in terms of how holiday season went. So I think what's happening in EVs is very specific to EVs, and obviously that has implications for how you allocate to that specific sector. But I don't think this is a broader read on the health of the consumer.
Right. It also has a read-through for the supply chain, of course, for those EVs, all the suppliers there, not just in the U.S., but elsewhere. I want to bring in another headline that we broke for you earlier this morning, which is Spirit Air. It is surging right now after reaffirming its support for the merger with JetBlue, even though the DOJ blocked it. How are you thinking about consolidation in 2024 when clearly there's a lot of enthusiasm for deal making given the expectations of lower interest rates, even as government regulators push back on any kind of combination? Or not any kind, but combinations that might reduce competition?
Yeah, sure. So I think, all capital markets activity, whether it be fundraising, whether it be M&A, it tends to be pretty pro-cyclical. In other words, when the economy is doing well, when the markets are doing well, that's when you tend to see a pickup in activity. Certainly if you listen to the investment banks, some of which have just reported, they talk about very robust deal pipelines and sort of a pickup in conversations. So look, I think if we really do stick this soft landing, and investors and corporate management teams start to have confidence that they don't have to constantly be worried about the recession that's coming, and I think you will see some additional deployment of capital and raising of capital. So I think it's just a natural progression. We went through a tough period in 22. Last year was a bit of a rebound, and I think now you're going to see that extend a bit.
Yeah, and it's not just in the U.S. either, where regulators are pushing back. The EU, for instance, Manus, the antitrust regulator there, blocking Amazon's proposed $1.4 billion acquisition of iRobot, the maker of Roombas.
Yes. So, regulation is going to come and at everybody in every direction. In terms of, David, we just get your sense on this. It's a theme that we've touched on in many different ways, but I'm looking at the UBS note, the CIO monthly letter. Lower interest rates will reduce returns and increase the reinvestment risks for cash and money market investors. Now, if we're going to push later and less rate cuts, is that phantom number, the $6 trillion that's in money market funds, is that going to be slower to release? Is that going to materially impact, let's say, the momentum in these markets, or can we power ahead even without the flow of money out of money market funds?
Yeah, I think there's a number of different buyers for equities, whether it be what's coming from money market funds, whether it be corporate buybacks, obviously just broader institutional investors. So I think when it comes to the equity market specifically, I think the equity investors have a specific set of expectations. That there's an expectation that we'll see a resilient economy with resilient consumer spending and a pickup in earnings growth. And I think if that comes through, then markets can grind higher. Look, our price target on the S&P is 5,000 for the end of this year. It's not a lot higher than where we currently are. So a lot of this good news, the soft landing narrative, a lot of it is priced into markets at these levels, and there might be better entry points at some point in the coming weeks and months.
Right.
But I think at the end of the day, if the economy delivers, earnings deliver, markets can move a bit higher.
I know you like small caps. Is right now a good entry point for small caps? The Russell 2000 this week, at least, seems to be losing momentum to those big cap stocks.
Yeah, I mean, I think small caps look really interesting here. Like, I mean, it is the cheapest soft landing play that, you know, of any sort of major sub-asset class or sub-segment of the equity market, trading at a steep discount, not only to its own history in terms of valuation multiples, but a very steep discount to large caps. And it should benefit.
아이고, 계속 올라가고 있네.
Growth this year. That should be a clear benefit.
이런 지금 참
Probably outgrow large cap this year.
아니다. 아직 희망이 있다. 라고 하고 싶은데 과연 그럴까?
Positive impact on balance sheet, and it tends to be very correlated with ISM manufacturing index, and we think it's likely that the ISM manufacturing index, which has been below 50 for a long time, starts to improve this year. So I think there's a number of reasons to think that the risk reward looks pretty interesting here for small caps.
Okay, maybe that battle between growth to values needs just a little bit more nuance in it. Perhaps I'm not putting these on the case. David, thank you very much for giving us that additional news. David Lipovich there, UBS Wealth Management. I guess this morning, quick snapshot, we've got Spirit assessing the debt, refinancing. They're taking several steps to shore up liquidity.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
야, 참. 승부? 잠깐만요. 뉴스. 아이, 근데 분위기가 왜 이래요? 왜 이렇게 좋아요? 마음에 안 드는데? 나스닥도 계속 올라가고 있네. 참. 여기 알코올 들어갔으면 좋겠어요. 오늘 10시 30분 연준 굴수비 존재 발표 때 어떻게 될지, 그쵸? 발표가 있는데 돌아줘야 되는데.
There's no question its industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto.
Was going to keep reading World Cup. This is a the economic picture. Covering the intersection. It's a whole way to consider.
The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off to New Hampshire.
Bloomberg is live in the ground, bringing you the fastest news.
잠시만요. 제가 어떤 발표가 놓칠 듯? 이 시간대 기대 인플레이션 발표가 안 써놨네?
I will say 2024, starting off from a banking perspective, quite well. We feel quite strong in 2024 as all of those investments are going to deliver for us later. The direction of travel is the same. Clients are still there. We're cautious because the economy is slowing down. The regulatory environment
rules around liquidity, there were rules around capital, the Basel III endgame.
20% increase in our capital doesn't seem to make sense. Regulators are looking in the wrong place, looking to over-regulate the banks.
It's going to be a bumpy year, but more than anything else, we've got to be resilient. We've got to be prepared to react to news.
The core investment banking activity that we have known with real cost of capital, traditional corporate finance.
와, 새벽에 다들 바쁘시겠네.
Concerned about the small and mid-sized banks. They've got several risks happening at this point in time.
There's always concerns, but today
진짜 롤러코스터 될 때?
banks are stronger.
The banking leaders of the world sounding optimistic in Davos this week. As are markets, as yields rise, equities have risen in tandem. Can that endure is a question I have in my mind. You look at the S&P 500 up 0.6%. The leaders in the pack this morning are all in the tech. AMD, Nvidia, both flying higher this morning. So it is about the chips. It's about day two of that solid growth story from TSMC. Apple's flying higher as well. Euro dollar is flat at the moment, and yields give back just a pip or two. We have ramped higher at the 10-year paper by
마이너스 10만 원이라니. 마이너스 12만 원이죠.
Bank earnings season is pretty much over at this point. The big banks finished reporting, and the regional banks, the bulk of them, have finished reporting as well. They started and they finished.
저를 이렇게 과소평가하면 안 돼요.
And we take stock of regional banks in a way that we hadn't before because of what happened in March of 2023. What are we learning from the regional banks about how they've fortified their balance sheets following that?
Sure. So after the March and April episode and the banking turmoil after the failures of a few regional banks, the remaining players have really fortified their capital base.
가시죠? 싫어요.
To be a bit more cautious given the operating environment and really try to stabilize their deposits. And they've done that by increasing the rate paid on those deposits. So
좋아요,
at
신나
this
가세요.
point, things have
저는 안
stabilized
갈래요.
and
안
we're past
갈래요.
that turmoil back in March and April.
But it's
좋아요.
causing them to
지금
pay for those
떨어지네요.
deposits, and a lot of those deposits have fled, gone to bigger banks, or gone to higher yielding
저는
instruments.
믿고 있습니다.
What portion of those deposits have come back, or are they still waiting for that?
Yeah, so I would say that some are still coming back, but we have largely stabilized. So we're at a steady state now. Bank balance sheets aren't really growing because there's not a lot of loan demand either. So we're looking at 2024 as a bit of a slog year where there's not a lot of balance sheet growth, and we're expecting potential rate cuts, which could help deliver some loan growth in the back half of the year.
Listening to Ms. Walsh at Guggenheim, she was very clear. She is worried about regional banks. Last year, nobody saw the truck coming down the highway at all. It's a thing called mark-to-market. It's been around for quite a long time.
But you can ignore it for a while until you have to deal with it.
You don't want to worry about that. She is worried, and she's worried on two fronts. They've got several risks happening. Commercial real estate exposure, depends who you talk to on that front, and a refinancing wall in that space. So are they real risks or perceived risks? Because when a lady like this...
네, 축하드려요, 조은 씨.
They are risk, and the banks are preparing for those risks now. They're adding more to their reserves for the eventuality of loan losses in areas like office, commercial real estate, multifamily apartment lending. So those are risks that are known. They still have to play out over a number of years. So it's more of a slow-moving train wreck at this point where the loans mature this year, next year,
뭐 저는 나름대로 시험시험 하고 있어요.
At this point, it seems like it will be fairly manageable.
So Jamie Dimon and JP Morgan, we shouldn't just deal with the individual, the institution in itself.
아직까지는 결과가 안 좋을 뿐.
Again last year by taking hold of those who were flailing. Will there be a greater consolidation in regional? This is a perennial question.
Yes.
Everybody asks it, and they go, oh, here we go.
Right.
Is there going to be any more consolidation?
Janet Yellen was wondering about that too.
Well, if she's a lot more smart than I am, Ms. Yellen, is there a real case then for significant progressive consolidation? I don't mean crisis consolidation, but real consolidation.
Well, that's the question
네.
regional bank CEOs are asking.
알겠습니다.
What's the aftermath of what happened in the banking turmoil last year? Do they need to be bigger? Because if you look at where the deposits fled in March and April, they went to the biggest banks, and the regionals see this as a potential existential issue if another
주로 회사원들이
so bigger is better. number of
이렇게 잘
CEOs have talked
쓰거든요.
about the need for scale to compete in these
제 친구 중에서도
potential crises. And
이런 때도 보여주는 사람이 많아요.
opportunities. It might not happen in the near term, but over the long run, we're going to see consolidation.
Well, that mark-to-market comes back again because everyone wants lower rates because if in a takeout you've got a market within the market. So let's wait for rates to come down and then we can get things going on the
That's
consolidation
absolutely
front,
correct.
right? Okay, I've got to ask you about, given we're talking about crisis, the OCC chief, Michael Hsu, told Bloomberg that regulators may force banks to start tapping the Fed's discount window at least once a year. He sees it as kind of a fire drill so that banks are better prepared to respond to any kind of sudden flight of deposits. What would the government need to do to make borrowing from the discount window more attractive, aside from ordering everyone to just do it?
Right. I think that's really the case. He mentioned it being more of a fire drill every year, so it makes perfectly sense to be able to be prepared for a potential crisis. And I think the measures that he's taking make sense to me. At this point, the banks are a bit wary just because of optics issues and signaling issues. But if we get everybody on board, and it seems like regulators are a bit resistant for banks to tap the FHLB, the Federal Home and Borrowings program as well. So maybe it's a way to ease out of that into the discount window over time.
Is there a contrast to be made between the discount window and the Fed's Bank Term Funding Program, where banks do continue to borrow record amounts because it's proven to be a reliable and profitable arbitrage trade where you borrow cash and then you park the proceeds at your account with the Fed where they earn a higher level of interest?
Right. So the BTFP seems to be getting some uptake over the past few weeks because of that arbitrage opportunity that is unfortunately going away in March. So it'll be a bit short-lived.
It's like a last hurrah.
Exactly.
We all like a last hurrah. Thinking of which, the mortgage rates are coming down incrementally from those zeniths. For the regional banks, when these rate cuts come, everybody's telling us it's either going to be 3 or 6, a bid and an offer. Okay, one is the Fed, one is the market, but that is going to have a material impact on mortgage lending. How exposed and how much of a floor will that put that real estate lending in the commercial banks? What will it mean for them if rates come down on the residential mortgage market?
Yeah, so residential mortgage lending has been pretty tepid over the past few quarters. When we get rate cuts eventually, you'll see more activity, and that'll help both on the fee income side and the loan growth side. So it would be very much welcome on the
떨어질 때 안 했어. 이제
Just hoping that
떨어질 때가
the
됐다고.
goes up and that somebody out there wants to give me a
무조건.
mortgage.
They're waiting for mortgage rates to come down.
And I'll get a first buyer's mortgage as well. But
Do you spend your weekends looking at property?
not anymore. My brother has told me I've got to calm down, slow down, and reevaluate my life. Shall we? We'll know more about the property market and rates market by the end of this year. Herman Chan, Bloomberg Intelligence setting the table. You don't really want to know about my FICO score and my availability to mortgage.
You've got time to build it up.
Yeah, I'm hoping. With one of the big banks.
Open lots of credit cards.
No.
But that helps your credit score initially, as long as you pay
That's
for
where
it.
I floundered in the late 90s. We're not doing that again. Okay.
Yeah,
we're not,
learning the hard way.
We're not going through that again. Let's have a look at the last hurrah. How's my pension fund doing? The S&P 500 rallies a little bit this morning, up 0.5%. There we go. Am I fully invested? That's the question I asked the broker who I know is watching this show.
Is that double nickels?
That is not double nickels. Double nickels 55.
Oh, so you can't round it up to 50, so you have to round it up to
이제 4분 전.
At 4:14, we give back a pip on two. Not even.
저는 아직 여유가 있어요.
Nothing weak, but for today.
그 여유보다는 희망이 있는데 잘 되겠지? 오케이. 봐봐요. 떨어지고 있잖아요, 지금. 물론 꼴지기만 해. 참. 그럼 더 이상 조언 심화를 안 드릴게요. 아, 이렇게 나오시네요. 오케이, 알겠어요. 물론 제 책임이지만
I used to have a data point I used to share that 75% of the people had never heard the phone ringing. Just think about it. I didn't say had used, but never used the phone. They never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay, and we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
조언 씨, 뭐 잘못되면 저 찾아갈게요. 주소 불러주세요. 바로 갈게요. 어?
Insight and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world starting Monday, every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Good morning, this is Bloomberg Surveillance. Alongside me this morning it is Scarlett Fu. I'm Manus Cranny, your regular surveillance team. We have it on good authority, standing by to get on their chosen mode of transport back to the United States. Private jet. Leo. There we go. Well, nothing else will do. S&P 500 up a half of 1%. The stock market is continuing to take its lead from the TSMC. The chips narrative from yesterday, solid growth. Nasdaq made a record yesterday. And again, the possibility of a rate cut in March goes down to just more than a towing cost, 50-50. We've had $165 billion of a chip rally so far this year, and it is about earnings growth rather than rate cuts that propels this market. Roll it over and have a look at the rest of the market. You see bond markets ticking.
They're not concerned with earnings, by the way, the bond market.
They are completely divorced from what's going on in it. I mean, Warren Buffett restoked that fire and regrasped the narrative to cause the bond market to recalibrate its view.
그렇게 보니까 31분이네. 변신이 어디 갔어요? 그럼 보시죠. 조금씩 떨어지고 있는데.
This is not where we are in 2024.
아니요. 빨간색.
Yeah, well, it'll take a while to get that message through.
Highmark.
Everyone's still looking for somewhere in the neighborhood of 5 to 6 rate cuts, according to market pricing.
Indeed. Now, we've had some breaking news as you and I were on in Ford. Ford has announced that they're cutting the production of their F50 Lightning
가라고.
EV.
올라가지 마. 올라가지 마.
Achieve the optimal balance of production, sales, growth, and profit. The company instead increased the production of the ongoing range of models, both run on, guess what, internal combustion engines. And as a result, the bottom line is, what does this say about demand for EVs? Or is it that we don't, and we're not
짜증나네.
or is it because we're a bit more drawn to other propositions?
아직은 인정하기 싫은데.
It's a combination of all three, I think.
분위기가 좀 안 좋아요.
Perhaps the people who wanted to get EVs have gotten their EVs, and for the rest of the population,
돈이 좀 계속 달아지고 제 선택이 잘못했는지 아닌지는 하네.
To the normal levels. Daniel Pinto getting $30 million. You've got other pay rises for Mary Edo's $27 million. So, you know, there is munificence aplenty. But then of course that's the pay. We know the pay and wages are something that the Fed are focused on. But with Congress, they have avoided a partial shutdown. They're passing a short-term spending bill, pushing new deadlines to early March.
분위기가 좋은데? 분위기가 좋아.
Today, despite nearly half the House Republicans opposing it.
Yeah, I'm fascinated by this because the only way this got through the House with Mike Johnson as the Speaker of the House was with overwhelming support from the Democrats. House Freedom Caucus was not happy about this. They wanted certain things. They wanted changes to the border policy, which they did not get here. And the big question is, how long does Mike Johnson have in his Speaker role? How long will he be able to hold on to his gavel before there's some kind of rebellion from his own conference? And it's not clear. Will it be, past March 1st and March 8th, or when the new deadline is, where they have to now come up with a new agreement? I don't know.
No, but that speaker seat is tenuous at best. Greg Daniels, the chief economist at EY. Good morning. Good morning. Tell us this now. We've had this quite bullish narrative from Davos. We're just chatting about this in the break. How do you know? I mean, the American economy is strong. The consumer, by all accounts, is robust, even though they're dipping into the last of their savings and spending like Billy on their credit cards. I don't call that strong. What do you make?
I think it's a nuance that when you look at the U.S. economy,
we still have positive momentum, and I think one of the key pillars to economic activity remains the labor market. We have a labor market that's still delivering a decent number of jobs. We still are seeing job growth around 150,000 on a 3-month average.
야, 인자씨 이거 어느 게임보다 좀 재미있는 것 같은데요?
Income, and in turn, that income is supporting spending. I think we have to be a little bit careful with the cracks in the foundation of consumer finances. Yes, people are using more credit, but if you look at credit relative to spending, it's not historically that high. It's actually below where it was before the pandemic. So yes, there is a little bit more use of credit, and we have to monitor that carefully because debt servicing costs are on the rise, but it's not excessively worrisome. There are some pockets, credit cards, auto loans, but broadly speaking, consumer loans and mortgage rates, which are locked in at low rates, are not excessively worrisome.
Okay, so nothing like what, the groundwork for the great financial crisis back in 2007, 2008. In terms of data that Manus was talking about that came in better than expected, jobless claims, retail sales, how does that set us up for the fourth quarter GDP print that we're going to get next week? Because that is going to show a measurable slowdown.
Yeah, I think we are going to see a slowdown from the 5% pace that we saw in the third quarter, but we know that the 5% pace was supported by a lot of strong summer spending activity. Taylor Swift, Beyonce, I did not. Couldn't get a ticket. But we are seeing
가요? 주원 씨 같이 가요. 헬게이트 따라라라라랑 오세요. 내려가세요. 저 기다리고 있어요. 저 오늘 악마 편이에요. 이렇게 친구처럼 있어요. 여기 안 보이시지만.
Yeah, I think in general, if you look at technological innovations over the past 100, 200 years, the speed of adoption has increased. You're looking at 50 years back in the 1800s to 10 years during the technology age of the internet and computer age to now maybe 3 years. That might be the next environment in which we see those positive benefits. I think the other important thing to note is that you may remember that back in the 1990s, Bob Solo famously quoted that essentially productivity gains from the computer were everywhere except in the stats. And that's perhaps what we might see in today's environment with a lot of positive gains in terms of company activity, but not necessarily visible in terms of the
저는
actual
항상 얘기하듯이 저는 아직 완전 새는 초보자라서 저 일단 그냥 느낌으로 가는 거야. 느낌으로 가는데 원래는 80% 정도 제 느낌이 맞아요. 물론 그만큼 20%도 잘못될 때가 있고요. 근데 오늘은 왠지 분위기가 좋아요.
simplify and speed up some of the early phases of the processes, and things that perhaps took a lot of time before can be done much faster with GenAI.
Manis, do you use ChatGPT or any of the AI stuff?
I really genuinely resist it because
you're old school.
Not so much that I'm old school, but as in I do believe that when you're trying to prepare and create for a conversation with somebody, I just believe you just try and do the research and formulate some kind of thought processes yourself. But maybe I'm wrong. Maybe I'm foolish. Maybe I should just sort of type in questions for EY economy USA. Wouldn't that be
여기까지 가고 싶지 않은데 정신 메론 유치한데? 유치하지만 오늘 계속 벌어질 거예요.
It's really all about knowing how to use it, and that is one element that we tend to underestimate. Oftentimes when new technologies come on board, you think about the basic uses first, ChatGPT as a chatbot, but then you have to think about the possibilities that go beyond that and how GenAI can help functions across the board, not just in specific, what am I going to eat today, how can I create a recipe for tonight.
4 questions for you the next time you come in. Do you use it?
No, I haven't done it yet, although I know others who've used it, and maybe they'll use it to just kind of create a template for how they're going to fill out everything else later on.
Okay, I mean, look,
give me a starting point.
Look, I'm a complete believer in, I mean, I've moved away from paper. I used to have paper for every single guest just because I've been caught so short with technology so many times, stuck on a side street or in the middle of the desert. But can we just flip it around? I mean, these are all the progressive, constructive, productive, value-add, economic ads. There is going to be a flip side to AI, which is going to be the less need for humans. And if so, what is the quantum on that? Have we begun to think about how it will impact employment, quid pro quo, unemployment?
Yeah, well, I think it's not just replacement; it's augmentation that we have to think of. When we look at the economic impact of GenAI, we're looking at the capital investment necessary, the infrastructure, cybersecurity, adoption by companies, development of software. Then you look at productivity gains. All of those can have a significantly positive effect on GDP growth. We're talking in our baseline 3.5% additional GDP over the course of the next decade in a baseline case. In an optimistic case, about 7%. That's $2 trillion of additional economic output. Globally, you're talking about $2 to $3.5 trillion of additional output. That is going to also create new job opportunities, different job opportunities, and when it comes to the great job reshuffle, it's not the case that all jobs will augment them.
Certainly different ones than we
여기 말도 안 된다 이거. 제 감을 무시하면 안 돼요.
Stocks are rising. Good morning.
There's a lot of it's a business that seems to be collapsing. REITs have sort of toyed around and do something ourselves. Some teams are doing like
아, 여태까지 들어갔으면 지금 수익을 좀 봤었을 텐데. 근데 여태쯤 들어갔다 보니까 아직은 좀 많이 됐어요.
And it was kind of a smart, bold, ahead of its time move.
그러니까 아직은 기다려.
And they sold their content to, what was it, Peacock? Yeah. And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity for the NBA and the local teams to get all that themselves.
어디가?
Made about diversity of opinion about rates and stuff. Where we stand on this is that we think earnings are growing. The street thinks 11%, we think half. The street thinks that rates are going to be cut 6 times starting March. I'm not there. Okay, I can tell you why. On that. We think 2 to 3 times.
또 다시 올라가네.
Heresy. Not believing that the Fed will cut 6 times. Elizabeth consensus. Hamid Al-Arian's call this morning. And the voice that you just heard there, Alec, a cacophony of voices from Davos. Readjust your markets. Quick snapshot of the equity markets. They still believe that earnings are going to blow high and hard. S&P 500 up 0.5%. Euro-dollar flat. 10-year yields blew up by 20 basis points this week on the back of Warren's comments about methodic and cautious rate cuts and positively affirming that it could actually be as late as the third quarter. And that's really what it is about. Recalibrating your view on this rate cycle, isn't it?
It is, but you know, we do get more Fed speak today, so maybe that
제 성격? 제 원래 성격 안 좋은 거 유명해요.
It's the closing act by Mary Daly White, by the way, because
저 우발적이고 욱하고 막 솔직하고 이런 말을 진짜 많이 들었어요. 아니요. 지역으로 갑시다. 거봐요. 더 다시 떨어지네요. 마음에 들어요.
They will remain robust, but they'll be double digits, and that's what will carry us to the higher ground. Gina Martin Adams, good morning. How strong will the earnings be?
Yeah, I think it just depends on which sector you're looking at. Financials clearly started off the earnings season in the U.S. relatively weak, mostly due to charges related to the FDIC sort of special situation reflecting what happened with Signature Bank and SVB last year. But when we move into tech earnings, which really starts next week, the anticipation is for much stronger, robust earnings growth to emerge. That then rolls into more industrials and materials earnings, which should be relatively weak, followed by consumer earnings. So I think you're going to have this rolling earnings season where we started off weak, we might get strong, we weaken again. It really is a sector by sector story. When you look at the S&P 500, this is kind of a blah earnings season
could broaden beyond the Magnificent Seven. My dexterity with typing names into the Bloomberg blows my mind. Here we are. Now you set the stage, which is you take me back to the beginning of last year. I was in Dubai. It was the halcyon days. It was balmy. It was warm. It wasn't like it is now, freezing and in boots. But here's the thing. Mag 7 growth on the earnings was 31%. The rest of the world was febrile. Talk me through how that will play out in your mind. Mag 7 versus the rest of the market right now. And is that what's infusing a bid for Mag 7?
Well, this is, I think, very clearly the earnings landscape was one of the biggest reasons for the Mag 7 to outperform the S&P 500 in 2023. As you correctly
절대로
note,
쉽게
the
안
rest
죽어요.
of the index, when you exclude the Magnificent 7, had an earnings decline of 6% last year. So clearly it was in a recession, whereas the Magnificent 7
승부욕이
has
엄청
greater
강해요.
than 30%
이거
growth.
좀
As we move through the course of 2024,
이게 뭐 제
this should be very,
단점일
very
수도
interesting because
있는데
the consensus is
가끔
anticipating that by the time we get
아주
to the second half of this year,
엄청 자주
we'll have 13 to 14%
그
growth
단점으로
for the
나와요.
Magnificent 7. We will also have somewhere between 13 and 14% earnings growth for the rest of the S&P 500. So I think this is one of the
치는
big
게 싫어요.
keys to 2024. Will we see that modest rotation with the Magnificent 7 earnings growth rate slowing
그러니까
down?
저랑 오락실에 가면 제가 이길 때까지 안 나와요.
To catch up. You had notable sectors producing very strong earnings declines last year, like healthcare as well as energy, that should start to contribute to earnings growth this year. And this is a big story for the index at large.
Right. Well, I mean, you have easier comps in the second half too, given the declines that you were talking about. We know that the Magnificent Seven, notably Meta, for instance, made a lot of cost cuts, the year of efficiency, all of that. How much is the Mag 7 and tech overall getting a boost from cost cuts in their bottom line versus revenue growth?
I think it's a good bit of it. When you look at the revenue lines, though, the Magnificent 7 is growing at triple the pace of the rest of the S&P 500, so it's not just about cost cutting.
저 완전 피곤한 스타일이에요.
Early in 2023, this is what sparked the recovery. Was cost
그러니까
cutting
최근에 제 직원들한테 오락실 가보자 하면 안돼 너 혼자 가 안돼 아시죠? 혼자 가면 그 재미가 없어서 오케이 이제 빨간색이 보이네요 라고 할 때쯤 다시 올라가네. 아 그래도 여태까지 잘 내려가고 있었네. 좋네요. 조원 씨 혹시 지금 거기 서 계시는 거 아니죠?
Obviously, TSMC makes chips for the likes of Nvidia, Apple, so it's really B2B. The customers are enterprise customers, and that gives us an important read into corporate spending. Technology exposed is, of course, exposed to both corporate spending and consumer spending, and here I'm thinking about companies like Apple or Netflix. Do we presume that corporate spending is going to hold up better than consumer spending?
I think we're at that stage of the cycle, Scarlett. What we saw last year and the year before were pretty significant spending cuts by corporates to catch up with what was happening in the earnings stream. Remember, all the way
영이야 뭐야 영.
started an earnings recession for corporates. So corporates have adjusted.
그치 조금이라도 수익을 봐야 돼.
Recession, you're now starting to see cash flow growth again, and that is going to be reflected in capital spending as well as investment trends, where you see those pick up. On the contrary, the consumer may not weaken materially, but there's very little to suggest the consumer may accelerate spending in the near term. Everyone, of course, has been on guard for this consumer recession to emerge. Will we start to see the unemployment rate hook higher? As a result, that may deplete income prospects for the consumer space, which may result in relatively flat to slower spending in the consumer.
오늘 차트가 참 밀당하네.
The narrative around healthcare. Lots of people since the start of the year have been saying, get involved in healthcare, but you need to disaggregate healthcare, don't you? You've got healthcare, which has got high-end AI technology imbued in it, because you talk about the margins in general healthcare, and in general healthcare margins, you would say, are the lowest in nearly a decade. A margin of just around 7%, but they're not all created equal, are they? So how do I begin to take healthcare apart?
the charges that they've had to make, start to see more activity emerge over the course of the year ahead. I mean, you've got hospitals and providers in there as well. I don't think that's a tech play either. So you really do need to pick your spots relatively carefully. And what we're seeing in healthcare, really, especially in the large cap index, is very difficult earnings conditions. This was one of the worst earners throughout 2023. The anticipation is those easy comps may produce some earnings growth in the year ahead, but it is just about easy comps. There doesn't appear to be a lot of optimism in a longer-term revenue recovery emerging just yet.
Okay, we'll keep an eye on those sectors. Gina Martin Adams, Bloomberg Intelligence, setting the stage on the earnings season so far. Next week's going to be, was next week the busiest week of it all? It's going to be
So far, it's going to be the busiest, but I think it's going to be the second busiest overall. Netflix begins reporting, so it kicks things off for big tech, as Gina was mentioning.
Okay, make sure you don't show your classroom. We'll talk about Wayfair. Wayfair is spiking higher. They're at 19. I mean, this is a very strange phrase. This is called workforce realignment, but we're looking at what, 13% of the workforce?
They're cutting jobs. 13% of their staff globally, 1,650 workers, and 19% of its corporate team as well. So the first quarter cost will be anywhere from $70 to $80 million.
Look, I'm only beginning to understand some of the brand names here in this country, where you go, where you're going to shop. So unfortunately, Wayfair isn't on my side.
If you were here during the pandemic, you would know Wayfair because everyone ordered furniture off of Wayfair.
But here's the canary. I'm not saying this one stock is the canary in the U.S. corporate coal mine, but when you begin to see fundamental changes in companies like that, beds, living rooms, etc., that's where the tough parts are. And this is about the truth for the consumer.
Right. And consumer spending might start slowing in 2024.
Indeed. Coming up next, The Open with Lisa Shallitz of Morgan Stanley, Zachary Griffiths, Credit Sites, along with a whole host of guests on Bloomberg.
Access the financial world on demand.
오케이. 더 내려가자. 안정하게 내려갑시다.
Industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you look at the number of women that want to learn the game, young girls that are joining on the team, really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, in dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all really to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We've made our shareholders a lot of money. More importantly, we've grown the business, and we've had a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups that we've helped
500, continuing its record climb, pushing the S&P near a record in small caps. No slouch either, up by 0.3%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
좋아. 이렇게 안정하게 가면 너무 좋아요. 게다가 지금 시장 열기 전 30분 전인데 좋아요. 주한 씨는 분위기 지금 어떠세요? 괜찮으세요?
Themes around big tech have gone away. They haven't.
So far, tech stocks have been able to deliver.
And joining us now to discuss is Zachary Griffiths of Credit Site, also Morgan Stanley's Lisa Shalom, who will be joining us shortly. Okay, I definitely don't get
눈빛 살아있다는 거 이제 좀 맞아 진짜 피곤해 라는 뜻이죠. 저는 사실 좀 이런 케이스도 좀 이상한 사람이거든요. 야 진짜 내가 분위기 안 좋을 때 그때 완전 죽고 분위기 좋을 때 완전 현타된 상태.
Right, and we've been hearing a lot on the equity side about how positioning is really stretched as well. Now you could look at it one way that okay, TSMC yesterday, maybe the Trump is in for the semis, and that's going to wind up helping.
쭉 들어지네. 오케이 이거죠.
No one knows what the Fed is going to do.
역시 제 감이 맞았네.
What do you think?
Yeah, I think the Fed argument.
좋아요.
There's been a lot of uncertainty, or at least repricing, over the past couple of weeks in terms of the dovish pivot we got from the Fed in December, and now a little bit of a rethinking of can the Fed actually ease as aggressively as the market is priced. And while we think the Fed is closer to easing than it has been at any point in recent times, we also expect that there's only 100 basis points of rate cuts in 2024, so the market seems a little bit overdone from that perspective. I think you could see a little bit more caution, so that safety argument certainly makes sense to us, Alex.
Yes, and everyone seems to agree with that. Mohammed Al-Arian of Bloomberg Opinion weighing in on that point, saying, I wouldn't be surprised if we start later, probably the beginning of the summer, and I wouldn't be surprised if we end up the year with cuts that are closer to what the Fed has signaled, which is 75 basis points, as opposed to what the market has priced in. Bloomberg's Michael McKee joins us now. Mike, what are people talking about as we head into the blackout period?
Well, it's interesting because we've had a lot of Fed officials pushing back against the idea of earlier and more cuts, and the market is only just beginning to think about believing them. Here's where we are right now. I mean, over the course of this year so far, we've seen unemployment stay about unchanged, under 4%, while the PCE inflation numbers have come down regularly. And look at consumer spending going back up again. Now, Michael Gabin at Bank of America has a note out this morning saying, ignore that. It is just seasonal adjustment. The economy is cooling, and next week we'll get an idea of how much the economy is cooled. But as I said, the markets are taking this as an indication that either the economy is cooling, the economy is just fine, inflation's cooling, and you can cut rates. And you look at what the Fed is forecasting, which is 3 rate cuts this year, and the market's still at 6. It's come in from 7, but still at 6. That's the white line there. And something's got to give between those two things. What we're looking at is a very, very slow change as Fed officials come out and talk about it. It'll be interesting to see in 10 days now whether Jay Powell pushes back as hard as others have, because at the moment what we're seeing is that there is no move move expected for the January meeting in January 31st, but the December meeting still, as I said, the yellow line there pricing in a 68% chance of 6 rate cuts.
파워가 별로
While the
없네요.
March meeting, the white line, now down to just 51% chance of a move. So a slow move by the markets towards the Fed, but not yet where the Fed is.
Still 51%. It's nuts. Hey, Mike, thanks a lot. Really appreciate it. All right, so Dr. Fitz still with us. Lisa Shallot joins us now. So, Lisa, the tension then in the market, which is going to explain all the other asset class moves, is does the market meet the Fed or does the Fed have to meet the market? How does that resolve itself?
올라가네.
Well, look, I don't think that we're in a period
잘 모르겠네. 안 몰란다. 안 몰란다.
You know, that usually happens during periods of distress. Right now, we have an economic backdrop where, you know, some of the growth figures, including retail sales, are surprising on the upside. The Fed has ample room right now to take its time to digest the data. Overall, capital markets are reasonably stable. I mean, equity investors may not be, you know, super excited that the rally that we saw in November and December has stalled out. But there is no crisis
이제
here.
잘
There is no
모르겠어요.
yelling fire in theater, and I don't think the Fed has any need to do anything other than what they're doing, which is, you know, the Fed governors are out speaking, very data-driven, very rational,
그쵸.
very softly on markets that just got
누가 봐도 숏이 많은데 물론 제가 좀 잘못한 타이밍에 들어왔어요. 진짜 여기 들어갔었으면 참 좋았을 텐데 여기 들어갔다 보니까 좀 지금 제 돈장 담보금이 머리가리 하네. 그래도 별 차이가 없어서 다행이다. 변신 다른 변신 말고 난또 죄송해요. 오해할 뿐.
Right, which then maybe that's why you want to go buy growth in tech, because now we're pricing that.
밑으로 내려갑시다.
Lisa, so is it going to be a real cutting cycle or normalization, and how does that change how you allocate?
Well, you know, here's where I think definitions matter a lot. You know, the market seems to think, you know, on the positive side, I get a soft landing and all the improvement in profits that go with that scenario, a more accommodative central bank, but I don't, you know, get any of the potential negatives, which is a softening potential increase in unemployment. I think, you know, on the flip side of things, we have to, you know, ask ourselves, could things actually be a lot worse? To your point, if the Fed's cutting aggressively, it's
자태야
because there's
힘들지
a
마라.
recession, and that's not
그냥 포기해.
pricing. So it's
놔버려 그냥. 내려가.
And this, you know, scenario that where, you know, investors are asking us to thread the needle of what the narrative is that's priced. It's not intellectually coherent and it hasn't been for a while.
좀 한참
That's great.
피곤해요.
It's not intellectually coherent. That's probably the best way I've heard to describe what's happening in the market, Lisa. So is that scenario
안 하셔도
records in
돼요.
tech? Is it worth a close to a record in the S&P?
So look,
제가 원래
as you
한숨입니다.
know, we've been skeptical that you know, the Mag 7, the focus on these high secular growth, very expensive
시간이
stocks
좀 애매해서
in an environment where
원래 같았으면 그냥 누워 있다가 제 원래 하는 일 하고 밥 먹다가 자거든요. 근데 이런 재미가 생겨가지고 이거 약간 취미 겸 지금 하고 있어요.
Certainly not if you're betting on this economic soft landing where growth is okay, which means the Fed doesn't have to cut much and isn't going to give you much relief in terms of lower rates.
So, Zach, if growth is okay-ish, what do we do with the 2-year? 4.38%. What's it worth?
We still think it could go lower by year-end in terms of yield, and really
Okay,
it comes
okay,
down
내려가.
to we do think that the Fed is going to be normalizing policy. Even if you have okay-ish growth, our forecast is something in the 1 to 1.5% range, which is below potential. And if you think about the progress that we've gotten on inflation already, that's with GDP growth well above what anyone expects potential to be. And so we think the Fed is in a position to start easing gradually, even if economic activity remains somewhat resilient.
그러니까 좀 취미로 삼기엔 좀 무섭긴 하고 위험할 수도 있는데 근데 본격적으로 이런 하기엔 좀 자신이 없어요.
And we're like 3 weeks in, so that's a head scratcher for you. All right, Lisa, Zach, thanks for sticking with us. Joining us now, look at the stocks.
하는 게
The opening bell. Here's Abigail.
괜찮은 것
Well,
같고요.
Alex, we do of course have U.S. futures pointing to an up open for a second potential up day in a row after 2 down days, and helping out to some degree. Well, Ford is now flipping to the downside. Earlier, it had been slightly higher, but initially on the news that they are cutting their F-150 Lightning production, not for the first time. The stock had plunged nearly 2%, then it flipped slightly higher, now a little bit lower. Investors not that move one way or the other. Amazon up about 0.5%. Their proposed $1.4 billion buy of iRobot is expected to be
오케이,
blocked by
많이
the
떨어지네.
antitrust body. The deal could
보기
be
좋아요.
bad, according to this agency or people close to it, for other vacuum companies. And then
어머
take a
어머
look at
어머 어머
Spirit
웬일이야
Airlines. The
웬일이야.
saga goes on.
얘
Alex,
봐라.
26.5%. They are saying that they're fully
아이고 참
behind the possible buy by JetBlue.
신납니다.
It was blocked by a judge, and after the DOJ also said that it could be bad for consumers potentially. They're also talking about liquidity measures. They've not specified whether or not they will go through an appeal process, but I guess one would assume that is what they mean if they are still behind that deal.
Yeah, they're all for it. We don't know if it's actually going to mean anything. Wonder if we're going to see like meme stock trading with that spirit. All right, Abigail, thanks a lot. Coming up, Congress avoiding another shutdown for now.
Johnson wants things to go smoothly, and as you get closer and closer to November, you can imagine most of the GOP wants things to go smoothly as well, because they like being in the majority more than they like being in the
아이고 조언치 어떡해요.
border security remain major
뭐
sticking
그럴
points.
때가 있어요. 가끔 올라갈 때, 내려갈 때, 내려갈 때도 있고 뭐 인생 그렇지 뭐. 항상 얘기해왔던 거는 뭐 인생 한 번이잖아. 사람이 그렇지 뭐. 망할 때 남을 따시고 성공할 때 본인 덕이고.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of the company.
People just come with a playbook and say, okay, we're going to roll that, don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's
바른 선절. 안녕히 계세요.
From the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
Great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
this fiscal year that
네,
this budget
감사해요.
is supposed to be addressing. So that's how broken this process is. And just speaking to the difficulty of getting these spending measures through this Congress, 108 members of the House voted against this yesterday, including many members of
근데
senior
사실
Republican
5만
leadership. They
원
voted
벌어도
against Speaker Johnson
저는
on this, not just
만족합니다.
hardline conservatives who wanted to see border security measures included in this stopgap measure. This speaks to the difficulty of getting a border security
물론 아직
through the House. Yes, Senate
또
negotiators are working with the White
떨어질
House
것
on that package. The
같아서
Senate aiming to
일단은
potentially get that to a floor
기다에
a vote on the floor next
차분히
week. But it could very well be them rival in the other chamber. As representatives like Marjorie Taylor Greene are actually threatening a motion to vacate against Speaker Johnson if he brings a Senate-passed Ukraine bill to the House floor. So his job could be in jeopardy, but the pressure on him isn't even just coming only from within the Capitol building. It's coming externally as well from former President Trump, who has said on social media in the last few days that the House should only accept a perfect deal on the border. And Trump and Johnson have a very close relationship. They talk frequently about this. And Trump may want the border issue to be a live one throughout the remainder of 2024 as he competes with Biden theoretically for the presidency come November. All right, Kaylee, thanks a lot. Working, although snow is falling in D.C., which is a really big deal in D.C. Just want to point that out.
Yes.
All right, Lisa and Zach are still with us as well. Okay, so overall, what this does point out is there's still a lot of political risk, geopolitical risk, particularly as we head into the 2024 election cycle in November. Zach, do you need to hedge this right now?
Right now, it seems like a decent opportunity to consider the risk, just given, at least from a corporate credit perspective, things look pretty good. And when we think about the story of 2024, we think that there is a strong technical tailwind coming from perhaps money market fund cash coming out, the duration of credit curves, but that's kind of overlaid with this rolling geopolitical and political uncertainty that we think is going to contribute to volatility. So you kind of have two clashing forces there. We think on that things will proceed well, at least from a financial markets perspective, but we do think that the political overhang is only going to get worse from here.
Lisa, what do you think? I mean, typically in the equity market, if you try and hedge this kind of stuff, it like never works out. And Brexit was the best bet. What do you do?
분위기 좋아요.
Right? It never
제
works
쪽에서
out.
분위기 좋아요.
And what we've observed, quite frankly, over the last 2 years, is that markets have become even more insensitive to geopolitical events.
그러니까요. 전 시장은 10분 전 좀 저도 기대하기도 하고 좀 무섭기도 해요. 값이 올라가면 저는 완전 나가야 되겠죠?
This is a presidential year, presidential election year. It's also a year where there continues to be intensifying geopolitical stresses around the world. We need to be aware of them, but you cannot build a portfolio that way, trying to guess at the unguessable, because the market hasn't tended to price these things at all. Everything is looked through.
So to that point, Lisa, I'm wondering, when your clients ask about politics or geopolitics, what is their question?
Well, they always say, what's gonna, the implication of this, red shirts, blue shirts on the market. We always dismiss that question immediately with the actual data that says it's irrelevant. We have good markets, bull, bear markets, regardless of who's
네,
in
갔다
Washington.
오세요.
But what we do talk a lot about is policy.
저도 잠깐 있다가 다시 올게요.
Focus on what are the policy implications. And there, it's not entirely clear. We have some headlines, right, that say, if one party, the incumbent party, wins, we may see a continuation of the fiscal spending and some of the programs that President Biden has put in place and a sustenance of those. Alternatively, if the House changes control or the White House changes control, we will likely have a making permanent of the 2017 2018 tax cuts. Both programs are likely going to be deficit sustaining as opposed to debt reducing.
Yeah.
And so we try to talk to folks about, look, right now, those are the only policies really that people can identify in terms of the differences, but the outcome's the same, which is both put upward pressure on interest rates.
Right. Yeah, exactly. So Zach, is that kind of how you talk to clients too? Like the big takeaway, no no matter who wins, no matter what happens, no matter what geopolitics works out to be, is that we're going to spend more money.
Well, that's kind of where I was going to go, Alex. In terms of the most underappreciated risk by the market, we think right now it's the possibility of higher rates again. I feel like it was a pretty brief trip to 5% on the 10-year, maybe more narrative-driven around the supply concerns that we have for this year. But those supply concerns, at least from a logistical perspective, that supply hasn't hit the market yet. And so that's something that we're concerned about. And I think all of these political issues, political headlines that we can expect just kind of highlight that dysfunction and brings back kind of the Fitch ratings downgrade that brought into question the U.S. government's credit rating. And so I think that's one thing that we are talking to clients about now, and a way to position that is potentially duration hedges, especially if the Fed market pricing is way overdone kind of the way we think it is at this stage.
Did you anticipate, Zach, that you were going to see pressure, upward pressure on long-term rates, and also the Fed's going to have to be more active, maybe with hikes or at least not cuts, to manage any kind of deficit spending and inflationary impact?
I'd say we're concerned about the supply side of the story from a Treasury issuance perspective, and that's something that we're focused on. But when we think about what's going to overwhelm that, at least in terms of the shape of the curve and where rates go in 2024, it's going to be the monetary policy shift. And if you go back and look at Treasury supply concerns in the past, it's been more so the driver of yields in the shape of the curve has been these shifts in economic and monetary policy, not as much so the supply side. And so that empirically makes sense to us, but there are a lot of competing factors that we think will drive volatility in the meantime.
Guys, thanks a lot. Really appreciate it. Lisa Shallett, Zach Griffiths, appreciate your insight today. Coming up, you got the morning calls, and later Dan Suzuki of Richard Bernstein makes the case for repositioning he may not like tech. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
All right, time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, you get Oppenheimer upgrading AT&T to outperform, citing several tailwinds, like including improvements to network capacity and coverage. Then you got Stifel upgrading DraftKings to buy, the analyst seeing near-term headwinds abating. Plus, Evercore ISI upgrading IBM to outperform, expecting the company to benefit from a host of AI-centric tailwinds this year. So coming up, we're going to follow that tech theme. Dan Suzuki of Richard Bernstein on why he sees a once-in-a-lifetime reason to reposition portfolios as we head into a market that's looking at big tech at a record and the S&P nearing a record as well, as we're about 4 minutes away from the opening bell. Happy Friday, guys. This is Bloomberg.
오케이, 일단은 주식시장 열기 3분 전 3분 전이고 지금 분위기가 계속 떨어지고 있고 지켜봐야죠. 제발 잘 됐으면 좋겠는데. 떨어져라 그때 타이밍에 잘 잡아야 되는데 바닥까지 떨어지면 바로 손 놓치고 그때 올라가면 되고 어떻게 하면 되고 저는 상관없어요.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This community will not stop until we uncover the full truth behind the collapse of FTX.
2분 전, 1분 전.
This is the nature of capitalism. Get over it.
오케이, 1분 전. 긴장 되네요. 떨어져라. 오, 잠깐만요. 오케이, 좋아요. 잠깐만요, 갑자기. 왜 그래? 차트. 돼요. 내려가. 아니야. 또 올라가네. 내려가. 올라가지 마. 좋아요. 돼요. 내려가. 지역으로 환영합니다. 내려갑시다. 주원씨, 앞으로 제 감물 좀 믿으세요. 목표가 뭐야 이거? 목표는 일단 25만 원. 일단 25만 원. 네, 제가 맛있게 먹을게요. 일단 25만 원 쉽게 내려가면 그때 30만 원. 욕심을 좀 부려야죠. 너무 좋아요.
reducing production of its F-150 Lightning.
보기가 좋네요. 소 많이 들어지네.
Has more on that. Ed, I guess twofold question. Are you surprised?
돼요.
Yeah, I mean, how I view this is Ford carrying out or acting on the outlook it gave last month, where it said it would cut production for the F-150 in half. In
조한 씨 울지 마세요.
what they're doing is cutting the
괜찮아요.
workforce that is working on the F-150 battery electric.
아, 또 올라가네. 아, 참.
About 1,400 jobs at the
이건 맞아요.
electric vehicle center starting April 1st, when Ford plans to go
네,
down
지금
to
올라가는 거 아니에요.
that facility. And as you said,
조금 더 떨어져야 되는데.
is that demand for electric vehicles continues to weaken. What Ford is saying is that it still expects growth overall in global EV sales in 2024, but that growth will be less than anticipated, and that outlook for growth was already depressed.
아, 사실 좀 지금 불안해서 좋겠어요. 지금 끝나고 싶은데 그러니까요. 아, 이따가 조금 기다리고.
Yeah, that truly is a perfect description of sort of where the industry
안정하게 가야 되는데.
Thanks a lot. All right, let's turn to chip makers now. You got TSMC's rosy 2024 outlook squaring
아니야. 파란색 가자. 파란색.
Now, 2 days in the making. Alex Webb has more on that. Alex, what did TSMC do that really ignited this?
TSMC essentially said they're returning to growth trajectories partly on
아, 애매하네.
last year they had a 5%, 4.5%
아이씨.
revenue
일단은 너무 불안해요. 불안해가지고 일단은 뭐 95,000원 전 만족합니다. 아, 참. 밤이 나네요. 이제는 상관없어요. 이제는 빨간색 써도 되고 파란색 저 상관없어요. 저 끝. 많이 떨어졌네. 네, 저는 위험할 때쯤 빠져나가요.
Let's go to Macy's first. We have Macy's announcing a 3.5% cutting of workforce. That's around 2,300 in their company.
저는 안전적인 거래하는 거 좋아요.
CEO. The company is also closing around 5 stores. So it's been no secret that retailers, including Macy's, have been struggling as Americans shift their behavior from physical shopping to online shopping.
지금 너무 와리가리 하니까 좀 차라리 9만 원 먹고 편하게 쉬어도 되고. 근데 제 느낌상 떨어질 만큼 떨어졌고, 그냥 보세요. 여기서 시작해서 여기쯤 시작해서 요만큼 내려갔잖아요. 엄청 많이 내려왔어. 네, 전 그 정도 예상했어요. 더 이상 안 떨어질 것 같아서 만족스러워요. 사실 지금 매수해버리면 괜찮을 수도. 근데 저는 다 읽기 싫어서 아직 좀 대기 중.
Yeah, Alex, it's great to see you. You to fill in for John Malaka. I think that this is one of those once-in-a-generation opportunities. And we put out a report last week, and I basically looked at the best performing trades in the last 50 or 60 years. And the one thing that they have in common is they start out with huge skepticism and scarcity of capital, but by the end, the dominant fundamentals get so exciting that they become the
역시 제 예상대로 오늘 느낌 좋았어.
leadership elsewhere in other markets. So, you know, you go back to as early as the 50s and 60s, you had the US 50-50. You know, these huge blue chip, large cap stocks, which dominated their industries, had the best cash flows. That was the only thing you need to own. And then, you know, the multiples got crazy and it set up for 2 decades of underperformance for the US. Then you obviously had the tech and telecom stocks in the 90s. That's all you had to own with the internet wave. That didn't work out for
일단은 하하.
and then here the last 15 years.
예, 감사합니다. 조은 씨. 열심히 하고 있어요. 결과적으로 오늘도 수익. 일단은 돈을 좀 뽑았으니까 이게 좀 쉴게요. 힘드네요, 역시. 일단 좀 지금 계속 거래가 하니까 애매할 때는 저는 안 할 거니까 좀 밥도 먹어야 돼서 일단 좀 쉴게요. 주원씨 파이팅 하세요. 많이는 울지 마세요. 윤혜 좋네요. 윤혜 잘 계세요. 좀 이따가 다시 올게요.
You know, trades at a record, you know, premium to the rest of the world, 60% more expensive than everywhere else in the world. So there's that long-term story. But I think the question you're really asking, Alex, is, you know, what's changed recently? And I think here it's really about the cyclical story. And I think that earnings, you know, a lot of people would disagree, is going to continue to accelerate, you know, as this recovery matures, but it's not going to be driven, you know, by these, you know, big growth sectors. Their earnings have been strong, but if you look at the earnings estimates, they're actually set to decelerate in the coming quarters. So what do you want to own? You know, the sectors that are going to drive that acceleration. I think that's going to be small caps. I think that's going to be industrials, energy, emerging markets even. I just don't think it's going to be these names, and that's going to lead to some potential disappointments.
So you make an interesting point about earnings growth for those cyclicals. On the flip side, though, that kind of earnings growth doesn't square with 7 rate cuts priced in from the Fed. So does that mean that you expect the Fed to not cut as much? And then does that then have a knock-on effect into how those cyclicals perform?
Yeah, I don't know that the Fed is going to be a huge swing factor. I mean, obviously, it's what everybody wants to talk about. I don't think that the Fed's going to cut 5, 6, or 7 times this year. I don't think they're going to be anywhere close to that. I just don't know that that's going to have a big, you know, be a huge swing factor for markets. Ultimately, I think what's going to drive markets is going to be growth. And I think in the near term, growth is going to be better than expected. But as you get out to the second half of the year, I think the visibility is quite low. So you need to be on your toes and look out for those signals that perhaps at some point growth is going to be rolling over. But to be clear, we're just not seeing any of those signs right now.
So then if you take a look at the rotation that you're expecting then from big tech to the cyclicals, what does that rotation wind up actually looking like?
Well, I think this is actually a pretty classic rotation, Alex. I mean, there's nothing necessarily that unique about this particular earnings recovery. You know, if you look throughout every earnings recovery, what happens is, you know, people, when earnings are terrible, are piling into the small and shrinking group of companies. They're able to continue to put up really strong growth. That continues to be the case, and why part of the reason why market leadership has been very narrow. But as growth broadens out and more companies can put up really strong earnings, you know, there's a natural, you know, the market becomes comparison shoppers. So why pay 30 times for the same growth that you can get for companies that trade at single-digit multiples? That's the sort of thinking that happens almost in every single earnings recovery.
So for the NASDAQ, though, for example, like, do we see like a bear market in this sort of scenario that you're looking at? Or it's not that dramatic, it's just more about the cyclicals?
Yeah, I mean, I think eventually you are going to see a bear market. I mean, I've gone on so far as to say I think that this is a bubble, and I don't use that term lightly. So eventually that suggests that there's going to be a reckoning. I don't necessarily think that that has to happen in the near term. I think initially, you know, really the story could be underperformance as investors realize that there's other really attractive growth stories out there. I think maybe the next shoe to drop that really causes that potential downside for the sector is when things get really bad. Now, that could be 6 months from now, and that could be 2 years from now. But when growth really starts to roll over, I think people will be surprised, as they always seem to be, at how cyclical these companies' earnings are. Remember that if you go back a year ago, these companies that everybody have the best growth now, they were the ones leading us into the profits recession that we saw. So they are clearly cyclical. People just forget about that.
Totally fair. All right, Dan, you're going to stick with me. Dan Suzuki staying. Coming up, all eyes on earnings next week.
If you look at consensus estimates for this year, tech earnings are supposed to be up in double digits. Now, maybe it's not going to be quite as high as that for the year, but I think double-digit earnings growth out of, say, a broad NASDAQ 100 index is I think, what investors essentially are counting on.
That conversation coming up next. As you look at a Friday, we're seeing a little bit of upside in stocks. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, it doesn't mean they think it's likely. It means they think it's possible and would be terrible.
If you look at consensus estimates for this year, tech earnings are supposed to be up in double digits. Now, maybe it's not going to be quite as high as that for the year, but I think double-digit earnings growth out of, say, a broad NASDAQ 100 index is I think, what investors essentially are counting on. And so far, tech stocks have been able to deliver. So as long as we're in that range, it's better than about any other index can provide, and that's certainly why the enthusiasm is there, the flows are there, and also the valuations.
Earnings season kicking into high gear next week. Major airlines, a handful of consumer staples on deck. Abigail Doolittle is back with us for more. Abby?
Well, Alex, it's really pretty amazing because over the next 3 weeks, we will have nearly $30 trillion worth of market cap of companies reporting. Now, the bulk of that, of course, is big tech, and that's where a lot of the focus is, given their huge rally supporting these markets over the last year. But as you mentioned, lots of other companies reporting, including United Airlines. A big question there will be, will they follow in Delta's path and give a more conservative profit view than what will be expected? There's a chance that could happen. Higher wages could weigh on United's fourth quarter earnings as fares apparently are weakening and pushing their operating profit and margins lower. So stay tuned. D.R. Horton, the home builder, now their results will be a balance of looking forward and backward. Net new home orders may climb 37% in the first quarter versus the last year, but also it's going to include the look back in terms of the 8% mortgage. What influence will that have? Order results typically a leading, but because of that factor, we'll be looking backwards a little bit. Gross margins could be crimped by buyer incentives, but some analysts are saying December that the color there could be good. And then finally, we'll also have some of the consumer companies reporting, such as Clorox and P&G. P&G will see broad-based organic growth sales, apparently, according to analysts, across categories and regions. Will that happen again? An unchanged guide there would be very good. And then 3M, the conglomerate, they're looking to see their sales declines basically level out, plus potentially a positive update around litigation and more information on the earplug settlement. Stay tuned, Alex.
All right, Abby, thanks a lot. Hey, just to update everybody, we are seeing the S&P rolling over a bit, right around the lows of the session. Still in positive territory. The NASDAQ still at a record, but we are kind of rolling over here, and the VIX popping a little higher. Again, still negative, quote unquote, but we are seeing a little bit of pop. So just watch this as we head throughout the trading day. Let's turn to tech now. You got Netflix, Tesla, Intel, and more set to report next week. Ed Ludlow is back with us. Ed?
Yeah, good morning, Alex. I guess that Abby gave us a good setup, but look at the gains of the NASDAQ 100 and S&P 500 in 2023 and the outsized contribution to those gains, both from a stock index performance, but also a profit contribution from the Magnificent Seven. Luckily, we kind of start earnings in earnest next week, slowly. And if you're to draw some commonality, look particularly to the chip makers, Texas Instruments earlier in the week, Intel on Thursday. After we had that kind of outlook from TSMC 24 hours ago, what we will look is to the chip makers and ask, is there recovery in end markets, broad end markets, right from sort of more analog semiconductors that go into cars and consumer electronics right through to PC and data center. Tesla will be the big one, and the narrative around Tesla is that they have this target of 50% annual growth, but we're in a 2% environment. You saw the Ford news that we discussed earlier today, that growth in EV demand in 2024 will be less than expected. Does Tesla maintain that 50% annual growth in that environment? And then beyond that, Netflix, I think there's a lot of confidence about Netflix that they finished 2023 strong. We have the writers and actors strike behind us. What does the content slate look like? But again, this kind of existential question of how do you be profitable in streaming will continue to be something that the street discusses in 2024. Then it's AI everything. And go back to December, our colleagues at the equities team in their Tech Watch column set it very clearly. The now expectation from the street is show us that AI is making a contribution to the bottom line. That will be the theme this earnings season.
Yep, straight up. All right, Ed, thanks a lot. Really appreciate it. So Dan Suzuki of Richard Bernstein is still with us. So Dan, that kind of puts all stories together. Is it margin management? Like, is that the thing that's going to be the earnings season all about?
Yeah, I think it's really a tug of war right now, Alex. I mean, on one hand, you got margin management because you got pressures from labor costs, input costs, and interest costs. But then on the other hand, I think what you have is a lot of people are forgetting about is operating leverage. I mean, I think if you look at the last couple of quarters, what not a lot of people are talking about is you're finally starting to see top line sales growth accelerate. And that's what you really need to see. In every earnings recovery, it starts with margin expansion through cost cutting, and then you have to pass the baton to operating leverage. I think that's what you're going to start to see. That's what's going to drive this next leg of earnings growth here, and that's why you want to own those companies that are going to see that operating leverage kick in.
Where do we see, though, what about consumer demand in terms of those kind of stocks? Like, we're all waiting for that to sort of fall out of bed. We saw Wayfair and Macy's doing some layoffs. What do you think we see there?
Yeah, I think that the market tends to swing in these huge has these huge pendulum swings in terms of the narrative, and it's usually not that extreme. So it's either, the consumer is accelerating and booming and going to the moon, or it's falling off a cliff. And I think it's much less exciting of a story. My personal opinion is if you look at the drivers of consumption like labor and wages and overall economic growth, it's going to be gradually slowing here. And so I think it's normal to expect that to gradually slow, but clearly not fall off a cliff. I mean, you're seeing retail sales, as everybody cited, really strong. Their balance sheets are really strong. Interest rates are coming down. So there's no reason to think that they're going to collapse immediately. So I think that area of the market should be resilient. But we are, in my view, late in the economic cycle. I prefer late cycle plays, less, focus on the consumer.
Yeah, I'm not spending, Dan. I don't know if you know this, but I'm on a budget. It's a big deal. I'm definitely not spending, I promise. All right, Dan, thanks a lot. Dan Suzuki joining us. Really good to see you. Let's get some sector price action this morning and get to Bloomberg's Abigail Doolittle. Abby?
Well, after the last month, Alex, I'm not spending either. As for the sectors on the day, we have a small decline right now, gain for the S&P 500, but it is not a well-supported gain from a composition standpoint. Just 4 sectors are higher: communication services, tech, financials, and real estate to the downside, all the other sectors. So broad-based selling from a composition standpoint, but you have 2 of those sectors with big heavyweight weightings to the S&P 500, and the index is higher. Over the last 5 days, it's a similar story. We have just 2 sectors higher, tech and communication services, but big gains there. And for that reason, the S&P 500, I believe, is heading, yes, to just a small gain. And it's interesting also to the downside, real estate and utilities, those are the worst 2 sectors. Those are defensive sectors. So in some ways you could say that's risk on, but the fact that you have 9 sectors down, 2 up, I don't know, Alex, not great.
Yeah, it's looking a little messy there. All right, Abigail, thank you very much. Coming up, the market moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
But the superlatives are still count. The Nasdaq 100 at a record intraday and record close. The S&P at a record close right now, but intraday we're still about 10 points off. So now it's time for your trading diary. What you need to know about the day ahead and what we're watching throughout the rest of the week. UMich, consumer sentiment, existing home sales coming at the top of the hour. Then check out Tuesday. We're going to get the BOJ rate decision plus Netflix reporting earnings, and tech earnings continue Wednesday. Tesla, IBM Thursday. ECB rate decision. We'll also get U.S. GDP, and American Express reports earnings on Friday. We're just getting warmed up. This was the countdown to the open. Happy Snowy Friday, everybody. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Well, are you confident? Some breaking economic news to discuss. After a record close for the tech-heavy NASDAQ 100, the inevitable question pops up. Is this a tech bubble? Have markets overpriced the speed and depth of Fed cuts? We're going to put that question to a bunch of market gurus today. This is Bloomberg Markets. Matt and Paul are all filling in. I'm John Tucker. Don't call him Barry. He's barely Lipschitz. No, that's Lip Schultz. I knew that.
I know.
I'm just kidding you. Let's get a breakdown some of these numbers. We just got bails from the University of Michigan. I'm going to call these Fed-friendly. Sentiment index much higher than expected, 78.8. The expectation was for 70.1. Maybe more importantly, the inflation expectations, the one-year inflation expectations, 2.9%. That is lower than expected, which makes it Fed-friendly. Very oftentimes, these are kind of self-fulfilling expectations. So anyway, let's get a deeper look at the markets right now. And to do that for us, here's Nathan Hager in Washington, a snowy Washington, D.C., I might point out.
Gotten that snow yet in New York, John?
Yes, it is coming down right now.
Yeah.
The flakes are out there.
All day long. But at least it's Friday, and at least we're seeing a rally in this market. The Bloomberg Business Flash I got for you here. It's brought to you by Interactive Brokers. Interactive Brokers charges USD margin loan rates from 5.83 to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. We are on record watch for stocks. The number to beat for the S&P 500, 4796, set back in January of 2022. Right now, we're at 4795, a gain of 14 points for the S&P, up 0.3%. Dow Jones Industrial Average up 79 points, or 0.2% at 37,554. The NASDAQ 100 in record territory, adding to those gains, up 0.6%, up 103 points 17,086. 10-year Treasury seeing a sell-off in bonds now, down 9/32 for a yield of 4.17%. Margie Patel, senior portfolio manager at Allspring Global Investments, says there's a disconnect between what stock and bond investors are focused on.
The equity market is looking at the strength of earnings. I think that's number one. And really, rates are so low across the board in treasuries, I would say it's almost irrelevant for corporate planning. And so many corporations raise so much money when we had zero interest rates that what the Fed does is really irrelevant to their operating.
And we're seeing some continued repricing of Fed rate cuts with the 10-year yield up 3 basis points. The policy-sensitive 2-year up 4 basis points at 4.39%. NYMEX crude's up 0.9%, up 70 cents at $74.78 per barrel. Checking Brent close to an 80 handle at 79.68. COMEX gold is up 0.5%, up $10 at $2,031.60 per ounce. The euro a little bit stronger against the dollar at 1.0884. British pound showing some weakness at 1.2679. And the yen is slightly weaker against the dollar at 148.26. Modest dollar weakness following that sentiment data from UMich. That's a Bloomberg Business Flash. Bloomberg Markets is on with John Tucker and Bailey Lipschultz.
All right, Nathan, thanks very much. Time now to take a peek under the hood, some of the stocks to move, companies to watch, and joining us now, Bloomberg Stocks reporter Nora Melinda. I was asking the question yesterday, are they toast, referring to Spirit Airlines?
I mean, it's been quite the journey, hasn't it? I mean, so Spirit Airlines shares were down 62% over the past 3 days, but we have a different story this morning on this lovely Friday. Those shares are on a roll, up as much as 28% for their biggest gain since November of 2020. And this is all after reaffirming its support for the JetBlue deal. They said that the deal remains in full force and effect, which has given investors a sense
a judge says that isn't, right?
Yeah.
I mean, who cares what they say?
I mean, who cares what they say when we're hearing differing information? But this, nonetheless, has given investors a sense of relief after the court decision blocked the multi-million-dollar buyout earlier in the week. They have not specified whether or not they will appeal the ruling. They're still assessing their options to refinance 2025 debt maturities.
Well, I mean, when you look at that, we got positive data in terms of their 4Q revenue, but to JT's point, trades at $7, was at 15 3 days ago. So sure, a bounce from what was the low. 404 is nice, but still the fundamentals.
When does that debt come due? That big.
They were talking
2025.
They were
2025 is when it's expected to mature. But as you mentioned, they are pointing toward that fourth quarter revenue reaching the high end of forecasts after strong bookings around Christmas and New Year's. But we'll see whether or not this could really pull the stock up far enough. As you said, it's trading pretty low, so very mixed views right now.
Looking at the debt briefly, that debt 2025 debt, JT, trading around 52 cents on the dollar. Was it obviously 100? Well, not obviously, but 100 cents on the dollar when the deal was announced, because when you get bought out, that kind of makes
Okay, let's move on to the next one. And my question for you is, why is this so difficult? I would definitely buy, and Bailey would too, because he's from California, an electric vehicle.
I actually wouldn't, though. The charging stations.
Well, I mean, that's
if we
the problem.
figure that
Where do you
infrastructure
charge
out,
it? I've got range anxiety or whatever, and they're so darn expensive. And you would think the car companies who've been around for over 100 years would have figured it out.
We'll try to adjust, and it sounds, people are saying that there are going to be some hiccups along the way as we kind of gravitate toward EVs. But I'm looking at Ford this morning. It's down as much as 1.5% after saying it's planning to cut its production of its signature EV vehicle. It's a pickup truck. If you remember back in mid-December, Ford said that it was scaling back some of its 2024 production goals, cutting it in half to place more of its focus on its signature F-150 Lightning pickup truck. But now it's changing its tune, saying that it's cutting all production of its signature EV pickup truck as waning demand impacts the EV space.
Well, we've talked about Cybertruck. This actually has a real truck bed, so it is a true truck.
Yeah, but it's like butt ugly.
But
it's
that's my
not
opinion.
a fan.
It's not.
Have you seen it? It looks like what's like McFly.
You gotta get a picture on the screen.
Right?
Well, no, I agree. And also, when I talk to people who drive trucks, the last thing they really want to do is shift to an EV, just because they need the maximum hauling capability, I would think. Also, though, keep an eye on the fact that Ford, over the last 12 months, down 10%. So down 0.6% today, Nora, as you mentioned. Another one, though, deal news. iRobot, Amazon.
Yes,
What's going on with that?
Interesting here. So iRobot shares are down as much as 31% this morning for their lowest level since 2012 and biggest drop since 2018. This is all after expectations that the EU's antitrust regulator will block Amazon's proposed $1.4 billion acquisition of iRobot, which they're known for making the popular Roomba vacuum. I'm not sure if you guys have one, but I know a lot of people who do.
I don't even have a regular vacuum.
I don't have a snow shovel, so.
This guy, he buys a house in New Jersey, comes from what, Southern California?
From California.
And the first thing he does is goes out and buys a meat smoker at Home Depot.
He needs the shovel.
In a snowstorm. You know you need a shovel.
I know.
Need to educate you.
But would you rather have a smoked brisket or pulled pork?
I'd rather not kill myself in the driveway. And then you can enjoy your smoked brisket.
In a vacuum.
He's got his priorities all mixed up. Nora Melinda, thank you very much. Appreciate it. Thanks for stopping by. All right, so at the top of the hour, Bales, we brought you the latest economic data. Another thing for investors to chew on, Bloomberg's Michael McKee taught me to follow the trends rather than the individual data points. So does consumer confidence, that's higher, at least according to the survey by the University of Michigan, and also the inflation expectations 1 year out, and then I didn't see the 5 year. What is that? The 5 to 10 year, that's also lower, at least lower than the expectations. Put it in the blender, and what is it? What do you pour out? What does it mean for everybody?
Since I walked in here, you've talked about barbecue. You've talked about
we do it all
blended
here.
Drinks. I'm hungry all of a sudden. This is all good news. It's maybe, if I were to hazard a guess, it's probably better news for Joe Biden than for the Fed and Jay Powell, because the Fed looks at these numbers and they like to see the consumer feeling better about things, and they hope that means they're going to spend more money. But there isn't a direct correlation between the two things. If the number gets down too low, you get into a kind of where recessions happen. But at this point, it doesn't look like there's anything like that's going to take place, because not only is consumer sentiment higher, but the index of household finances, whether people think they're better off than they were a year ago, went up significantly, better 40%. It was only 33% in December. So people are feeling better about their lives and about their money. And the reason it will maybe be good news for Joe Biden is they do ask by political party. And Democrats, 90.6 was the index for consumer sentiment in December, 101.3, an 11-point jump in January. And independents, who Biden would need to be reelected, 73.2 in January from 64.5. So some big jumps there. I'm not mentioning the Republicans, because the Republicans are still unhappy about the economy. 57.7 from 57.0. But it is always the case that the out party...
You don't have the answer to this. Why are they unhappy?
Because Joe Biden is president.
Oh, all right. So it doesn't matter.
It matters a little bit. Obviously, everybody's unhappy when inflation is high. Inflation's coming down. Everybody's unhappy in a recession. But it's always the case that the party in power, their people... tell these survey takers that they are happier than the others. It was a dramatic shift if you go back and chart it and look at what the by political party sentiment was when we went from Donald Trump to Joe Biden over that month period. Yeah. Republicans were very happy and then unhappy, and Democrats were very unhappy and then they're happy. So it just maybe is a sign that some of the political polls might turn around. All those polls that say people are very unhappy with Joe Biden and the work he's done on the economy.
Well, you mentioned it being positive or Biden friendly. When we look at data and some of the trends that we're seeing, Fed friendly, does that correlate to market friendly? I'm just looking at the S&P 500 on the doorstep of a record high. It seems like earnings are in the forefront, but economics and what the Fed's doing is to rule us all.
It's an undercurrent in the sense that if you're investing in on the hope that earnings are going to go up, and people are telling you they're happier and their incomes are higher, then you can sort of draw an inference that maybe they'll spend more money and that will help profits. You can't completely depend on it, and it's more of a contemporaneous thing than a forecast, but it does suggest that there's some good news out there in the whole thing.
Okay, I think it was Mike who taught us that the inflation expectations in this survey, they matter because the sort of self-fulfilling prophecies. If you think inflation's coming down, you sort of change your behavior in some way. I don't know. Does that make any sense?
In terms of deflation, if you think that prices are going to be cheaper tomorrow, then you stop buying because you're going to wait for prices to go down. And it's the same with inflation. It maybe pulls forward.
Well, I was thinking in terms of like asking for wage increases.
Well, if you think that you're going to have to pay more, if inflation is going up, then you're more likely to ask your boss for wage increases. And we did see that over the last 2 years where average hourly earnings and wages and salaries kept going up because people were demanding more to keep up with what was happening with inflation. Now, inflation's leveled out, and that trend is starting to level out. So maybe we're through this without the kind of wage pull inflation that we saw in the 1970s and 80s.
Just looking at the data, 9.1 point increase on the biggest monthly advance since 2005. Is there something really to read into those types of size and scopes, or does it not matter as much?
It probably doesn't matter as much in the sense that, again, this is an index of sentiment as opposed to an actual index of money spent or something like that. It does suggest that something got through to people over the last month. I mean, maybe they had a great Christmas or something, but something happened that informed their view, made them feel better. It maybe they finally realized gas prices are going way down, or something like that, or food prices have leveled off, things like that.
Do you care a lot about, I'm going to call it existing home sales? Let's call it used home sales.
Used homes.
Coming in lighter than expectations.
It was only down 1%, and we're talking about 5,000 homes difference here. So at this point, it's not a big deal that it went down. We have seen in the last couple of months a little more activity in the housing world. We haven't seen it yet reflected in the overall statistics, but as mortgage rates come down, you're seeing more mortgage applications. They've been up significantly the past 2 weeks, about 10% each week. So if that continues, then we should see home sales start to rise again. This is not a period where you're going to get a lot of home sales because it's the wintertime, but once we get to February and March, keep an eye out now that mortgage rates have come down some.
And when we look to the week ahead, obviously a big earnings week, but in terms of the economic data, what do you have top of mind? What do you think that Fed and market watchers are going to be paying the most attention to?
Well, there are two numbers that are going to get a lot of attention. One on Thursday is the GDP report. First look at fourth quarter GDP. Of course, the third quarter was very strong, around 5%. The estimate now by economists is for about 1.8, 1.9%. The Atlanta Fed GDP now is 2.4%. If we get anything around 2 or a little over, that would be considered very good news. We were expecting a big slowdown, but the consumer spending numbers we got this week suggest that we could get a pretty good report. If we see a disappointment, it's probably because inventories were worked down, which is bad for that quarter, but it suggests that strength ahead because we'll have to build inventories back up. Then on Friday, we get the PCE numbers, which will tell us more about spending because it includes services, which the retail sales doesn't except for restaurants. And we get the PCE inflation numbers, and those are important because that's what the Fed targets. PCE, they want a 2% headline rate. We're running at 2.6% now. It could go lower than that. And the core rate is at 3.4%. There's a feeling that could go below 3. And that would be a real market signal, make people in the markets feel much happier and think that the Fed is much more likely to cut rates.
All right, 30 seconds left. Are we headed in the right direction? Are all the trajectories that you look at headed down or lower or whatever you want?
Yes, for the most part. Everything is still positive. We're seeing a slowdown in economic activity to a certain extent. and we may see a slowdown in hiring and that sort of thing, but we're not seeing anything that you wouldn't expect, given that the Fed has raised interest rates. And as long as inflation keeps going down, that's going to keep people happy. A lot of things out there in the news that could go wrong. I'm sure you know as you watch the news. But right now, you can't really say that things are going to turn pear-shaped.
Mike McKee, thank you. Appreciate it. I wanted to ask you why yields are higher, but we don't have time. 2-year yield, 5 basis points higher, 441. The 10-year is up 4 basis points, 418. As for stocks, the Dow right now 62 points higher. This is Bloomberg. And that brings us to 10:18 on Wall Street. Let's get a look at company news now with Bloomberg's Steve Rappaport.
John, shares of Spirit Airlines are up more than 23% after the carrier announced it's not giving up on the merger with JetBlue. More from Bloomberg's Jeff Bellinger.
Steve, Spirit is trying to persuade JetBlue to appeal the government's decision to block the merger of the two carriers. Spirit indicates in a regulatory filing that it still believes in its plan to merge with JetBlue, saying it continues to believe a combination is the best opportunity to increase much-needed competition and choice. In the meantime, Spirit says it is taking steps to ensure the strength of its finances and ongoing operations in case it has to continue on its own. Steve?
Bloomberg's Jeff Bellinger. A tech giant makes an offer to appease antitrust regulators in Europe. More on that from Bloomberg's Sam Stolten.
Apple, the European Commission, announced today is seeking to potentially sidestep a hefty EU antitrust fine by filing commitments in an ongoing abuse of dominance case here in Brussels. Now, this case involves Apple's near-field communications chip. And what the European Commission says is that Apple actually restricts access to this chip to other rival mobile wallets.
That's Bloomberg's Sam Stolten. In other Apple news, pre-orders have finally begun for the Vision Pro mixed reality headset. John, I know you got $3,500 burning a hole in your pockets, so go shopping.
It looks so good on me, too.
Deliveries will, although pushed back to March 8th at the earliest. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's coming up to 10:22 on Wall Street. I'm Nathan Hager, watching a Friday morning rally. We got sentiment data from the University of Michigan. Consumer sentiment soaring to its highest since 2021, with short-term inflation expectations down to a 3-year low. We check the markets all day long on Bloomberg. Right now, the S&P 500 is up 14 points, or 0.3%, just shy of a record. The Dow Jones Industrial Average is up 93 points, or 0.25%. The NASDAQ 100 already in record territory, up another 96 points, or 0.6%. Lower Treasury volatility is helping tech shares this morning. And looking at the 10-year right now, it's now down 9/30 seconds for a yield of 4.17%, a gain of about 3 basis points. NYMEX crude is up 1.1%, up 79 cents at $74.87 per barrel. COMEX gold is up 0.3%, or $5.70 at $2,027.30 per ounce. The euro, little changed against the dollar at 1.0875. British pound, 1.2664. The yen is at 148.42. Bitcoin down about 0.25%, trading around $41,000. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Bailey Lipschultz.
All right, Nathan Hager from a snowy Washington, D.C. So what's the state of the mysterious world of crypto now that you can jump in with an ETF? Sandy Call is head of digital asset and investor advisory services at Franklin Templeton. Our next guest, Gary Gensler kind of made it clear the regulatory approval of Bitcoin ETFs. That's no sort of implicit endorsement by the regulators. I imagine, though, that hasn't dampened any of the enthusiasm, has it?
No, it definitely has not. Record launch for an ETF, over $3 billion in net new inflows into the products over the last just week.
And how do you view some of those inflows, though? I'm looking at Bloomberg data, BlackRock and Fidelity dominating in terms of flows, both north of $1 billion. I'm looking at least according to the terminal, Franklin Templeton closer to $50 million. So how does that play out?
Yeah, I think that it depends who your audience is out of the gate. Right now, you're seeing a lot of the direct, self-directed investors coming in and accessing this for their own personal portfolios. Moving these new products onto the wealth advisory platforms is going to take a few months as they do their due diligence, see how the new product works. And so there will be a slower buildup of assets in the discretionarily managed and in the professionally managed accounts. And I think you will see this continue to grow throughout the coming year. So kind of an out of the gate with the self-directed, and then over time, you will start to see more of the advised assets having an allocation to Bitcoin in many of these portfolios.
What are your fees? Is there a fee war?
Well, our fees right now are zero, so I don't think you can beat that.
Well, you actually could, but I won't go into that.
Well, we believe that, we want these early investors who come alongside us in our new ETF offering to really get the 100% full benefit of movements in Bitcoin. We think we're coming up to an important period fundamentally in the Bitcoin market with the upcoming halving event, where the supply is going to tighten systematically. This happens through an algorithm, and it's coming right at a point where these new ETFs are creating demand in the marketplace. And we think it's going to be an exciting period for Bitcoin. So we want our investors to get the full benefit of any price movements that might result. And we're not taking any fee. We believe in the long-term nature of this opportunity, and we're willing to be in it for the long haul. So we're going to wait and take our fees later down the road as the product becomes more established.
I have a host of wacky questions. You guys have ESG offerings, I would imagine, right? Okay, so how does this conflict with that? Because in order to generate this stuff, you have to run computers which take gazillions of tons of electricity or gigawatts or whatever. That's sort of in direct conflict, I would imagine, with the environmental goals of the company.
Intuitively, it would seem to be. But what's been kind of very exciting about this is that a lot of clean energy launches have been held up because there has not been a clear use case for them. And what we're seeing is a lot of these Bitcoin miners that have relocated from Russia or from China are relocating into areas, and they are using clean energy incentives that are being offered by the government to build their mining facilities. So actually, it turns out that Bitcoin mining is starting to be a use case for introducing clean energy technology And of course, not all Bitcoin miners are at that point, but we're seeing a very positive trend in this movement towards cleaner uses of energy for Bitcoin mining, which we think is a great thing to see.
And Sandy, you mentioned kind of taking the long-term view. Eric Balchunas, our Bloomberg intelligence analyst, coined it the Cointucky Derby, which I'm a big fan of. I enjoy betting on horses. JT, I don't know about you. No? Little pun for you?
Well, I'll go back to my wacky questions, but it's just like I go to the barber shop. That's topic du jour of people who can't afford to lose money and who don't know what they're talking about. I don't even know this, what a Bitcoin is. I can't explain it.
No, well, Sandy, I'm just wondering, the Cointucky Derby, use your pun, whatever pun you want. There are 9 new spot Bitcoin ETFs. How does the race for money impact kind of success and whether or not people are going to be pulling out of it?
Yeah, so I look at it this way. There's 2 sets of offerings that are coming to market through these 9, I think it's even 11. One set is coming from firms that have been digital natives and have kind of grown up in the crypto space. One set is coming from traditional asset management firms. I think Franklin Templeton is a little unique in that we're actually both, right? We have been active and operating in the digital crypto native space since 2017. We operating across 5 different public blockchains. We do our own node verification. We really understand and are a part of the ecosystem, create our own research on individual coins, including Bitcoin, and put together portfolios of multi-coin portfolios through separately managed accounts that we can work with investors to access. So we've been in this space for a long time and really understand it, yet we are also a 75-year-old asset manager who is trusted and who has been there for clients through many market regimes. So I think it's the coming together of the crypto natives and the traditional financial services, really epitomized by Franklin Templeton, that I think is creating the excitement about what's going to happen. And I don't know if it's going to be a derby and some aren't going to finish the race. I just think it's going to be a long race, right? It's a new asset class. Some of your questions are showing people have yet to kind of start to understand it. But once they do, I think it's hard not to get excited. I saw that in my own career. When I had my aha moment, it's like my eyes opened and I really saw this new opportunity and potential.
Sandy, this may be a dumb question. Bitcoin trades 24/7. If the token crashes on Saturday and Sunday, do I wake up Monday morning with a huge loss on my ETF?
Well, the good news for you is if the token crashes on a Saturday or Sunday, we've got portfolio managers and traders trading it on a Saturday and Sunday and working to keep the spread between the Bitcoin index and what's happening in the ETF in line. So we operate 24/7 in these markets, just like the markets operate. So it would be like any market. You know, if there's a move over the weekend, you'll see that move reflected. But the fact that the ETF is closed and the market is open isn't going to be a problem in this case because we're running a 24/7 trading desk around this.
You mentioned the next big step that includes derivatives with respect to Bitcoin.
That's a lot of people are looking already at derivatives. I think that, you know, building the education and understanding of the opportunity is more important as a next step than really thinking about the next product evolution. I think a lot of people have yet to really internalize. We've been in a period where we're used to platforms being the way of the economy. Network effects are built around platforms like Amazon or Uber or Airbnb. And now what we're seeing in the crypto domain is that we're seeing protocol-based networks, right? Where anyone peer-to-peer can access it. Just like when you type HTTP into your browser, that's a protocol. Everyone in the world can use that to access the internet. And these networks that are being built like Bitcoin are protocols that anyone in the world can use and everyone can participate in. So it's different than a company owning the platform. This is all of us collectively owning these new networks. And this is a new way to access that ownership. So it's an education process. And I think that that's where the focus should be to really help investors understand why this can be an important opportunity for their portfolio.
Sandy, I got to ask about the Franklin Templeton X profile. You've got laser eyes on Ben Franklin. I would say
she's not in the marketing department. Just to make it clear,
I just wanted some of the
it's
more
weird.
absurd tweets that I've seen. Even a tweet saying the lawyers won't let us or respond to comments, but we hear you posting about the 60-40 plus Bitcoin. What is the marketing plan? Like, what's going on?
Well, this is really, as I said.
Oh, and you got to do this in 30 seconds.
Okay, 30 seconds. We really are part of the crypto native ecosystem, as well as being a traditional asset manager. And our analysts, interns, employees that are in the digital asset unit really understand what matters to people in that community. And the laser eyes was an important signal to them that we stand with them in believing in the future of Bitcoin.
All right, Sandy, thanks for stopping by. I appreciate it. Sandy Call, head of Digital Asset and Investor Advisory Services at Franklin Templeton. Did I sound too skeptical? Was I too harsh?
Talking to the youth.
Okay. Franklin Bitcoin ETF, ticker symbol EZBC, is up 0.1% today, $23.75. You're listening to Bloomberg Markets. I'm John Tucker, along with Bailey Lipschultz. Right now, let's get an update on news from around the world and from the snowy capital of the U.S., Washington, D.C. Amy Morris in the Bloomberg 99.1 newsroom. Hi, Amy.
All right. Hi, John. Thank you so much. President Biden forgiving nearly $5 billion in additional student debt as the administration seeks to deliver on one of his signature initiatives. Almost 74,000 student loan borrowers will see their debt canceled as a result of administrative changes by the Education Department. Each program requires at least a decade of payment or service to be eligible for relief. Houthi militants in Yemen fired missiles at an American-owned commercial vessel yesterday, the same day President Biden acknowledged that U.S. airstrikes have not halted those attacks. We get more with Bloomberg's news director for Europe, the Middle East, and Africa, Rosalind Matheson.
Basically, what you have from the U.S. is an acknowledgement of reality, and that is that despite a series of airstrikes from the U.S. and in some cases the U.K. on Houthi targets inside Yemen, they haven't really degraded the Houthis to the point that they're going to stop attacking or trying to attack ships in the Red Sea. And of course, the Houthis have been at this game for many, many years.
Bloomberg's Rosalind Matheson reporting. And Congress has extended the deadline for a government spending bill, preventing a partial government shutdown this weekend. We learn more from Bloomberg's Nancy Lyons.
The Senate easily passed the measure that would fund some government agencies through March 1st and others through March 8th. Then the House took it up, and Republican Congressman Bob Good wanted more influence.
When you have the majority in one branch or one house of one branch, shouldn't you get half of what your policy priorities are?
Democratic Congresswoman Rosa DeLauro argued it was time to do their jobs.
Some of my colleagues would see that this government would shut down and don't care how hurtful that would be.
Nearly half of House Republicans.
Stop by your neighborhood grocery outlet today for these amazing deals. Get the grill going with Amata Valley grass-fed New York strip steaks. 10-ounce cuts are just $4.99 each. That's a savings of up to 52% versus traditional grocery stores. Also, bargain hunters take note. You'll find a crazy deal on Nourishing Welly Body Cream. 7-ounce bottles are just $3.99. That's a savings of up to 80%. Yes, 80%. You'll find deals like these and so much more, only at your local grocery outlet.
Grocery outlet, bargain market.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Nathan Hager, watching stocks rally on this Friday morning. We check markets all day long on Bloomberg. Right now, the S&P 500's up 14 points, or 0.3%. The Dow Jones Industrial Average up 0.2%, or 71 points. The Nasdaq 100 leading the gains, up 110 points, up 0.7%. Got a note from Bank of America this morning from Michael Hartnett saying the stocks that led the rally last year are traders' top picks once again. You can count tech among those. BNP Paribas Chief Market Strategist Daniel Morris says he sees reasons as well to be positive on this tech rally.
Certainly an earnings growth forecast for this quarter and for this year. They're high, but they don't seem outrageous. So even if you end up having some negative earnings revisions, you're still likely to have quite positive earnings growth. Valuations somewhat on the high side, but that's a function of the growth that we've just talked about. So it seems to be a pretty supportive environment, especially when you think at least between now and the end of the year, rates are going to be lower.
And once again, information technology is among the leaders in the industry groups in the S&P 500. 4 of the 11 main industry groups are in the green. Biggest decliner, consumer staples, among the 7 in the red. 10-year Treasuries down 7/32, yield 4.16%. NYMEX crude's up 0.7% at $74.56 per barrel. COMEX gold's up 0.25% at $2,026.70 an ounce. The euro little changed against the dollar, 1.0877, and the yen is at 148.32. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Bailey Lipschultz.
All right, thanks, Nate. Record close for the NASDAQ 100, and Bailey and I are just looking at the S&P 500 because the record close, what was it, 2 years ago, was 47.96?
Yeah, 96.56. So right now we're one.
You're doing
change.
Like going
Decimals,
out to hundreds.
Man. Well, that matters, when you're sending the hot headlines on the terminal. Okay. We got to keep the
Wait,
people
I
in the
think
know.
we're there. We're just going to do this all day long. Oh, it's up a point. So 47.96.27 on the S&P 500. Bubble or no bubble? That's kind of the question it raises for me. Brian Vendig is the president at MJP Advisors. He joins us now from, where are you, Connecticut?
Westbury, Connecticut, John.
Westbury. Oh, lovely. To discuss the outlook for the market. So what say you when I say, oh my gosh, maybe a bubble?
Well, I don't think that's necessarily true, John, when considering all parts of the market. I mean, when we look back at last year, we know that majority of the gains came from mega cap tech. And we did see a broadening out in the market in the fourth quarter. But really, when you look at areas like small cap stocks, some value-oriented sectors like healthcare and industrials, I really think there's some other parts of the market that, again, to the points that you and Bailey mentioned about, earnings growth, in 24, I think the market's going to come back to fundamentals, and we're looking at some earnings numbers over the balance of the year that can help those areas play a little bit of catch up, while at the same point in time, I still think there's that longer term trend with AI innovation that is going to play out in aspects of the technology sector.
Yeah, I wanted to ask, talking about the catch-up trade has been something I feel like has been top of mind since really the October bottom. Second best performer in the S&P 500 is NVIDIA, up 17%, obviously that coming after the TSM number. So when you look at that broadening, what areas are we going to see strength broadening out to, and what does that mean for the likes of an NVIDIA, which still seems to be red hot?
No, that's a great point, Bailey. I think on the NVIDIA side of the house, I'll just address that first. I mean, it's that expectation of growth moving forward. So when you look at the forward PE for NVIDIA, as much as the share price has had a nice run, the forward price to earnings ratio is actually quite reasonable, with a 20 handle or so. But when we talk about the other areas of the market, let's just be fair when we take a look at that disparity of return, going back to the S&P versus, let's say, the even weight S&P, for example. We know that a market cap S&P, 40%, is in those magnificent 7 names or so. And when we look at an even weight and we really strip that out, we see that the forward price to earnings ratio of the market is actually quite reasonable in some sectors under their historical average. So healthcare, small caps, mid cap stocks, looking at some areas in the industrial complex. I mean, these are things that we know that there's some some breadth and some trends there, and the outlooks for growth are actually looking quite promising.
Okay, since you guys brought up AI, I got to ask, when does it start to gel in terms of the sales? Well, we've already seen that. You mentioned NVIDIA, but along with the productivity gains that are promised by this new technology. When does it all come together?
Yeah, no, I think it's all, that's a great question. It's almost like, when does it come together where we start to see, market expectations on rate cuts line up with reality from the Fed, right? So I think the AI trend is a 5 to 7 year trend. I mean, there's a high multiple of sales that's being put on a lot of these companies right now, which we are a little wary of, and you have to be selective. I think it's looking at it from that productivity point, which is why we like areas in technology that are focusing on workflow management, data management, thinking about how AI might create more productive outcomes when you think about cybersecurity, things of that nature, than just saying, hey, we're going to invest in, a certain aspect of hardware that's probably going to be used because, AI is going to be coming. I think it's longer term trends. So will there be volatility in the space? Will there be the natural winners and losers kind of play out over the next 5 to 7 years? Yeah, we think so. But don't forget that, again, this is the point I'm trying to make, going back to Bailey's question, is don't forget about some of those other areas that have stable balance sheets, predictable cash flow, margins that look strong, and there's still innovation. And that's why I want to remind people about healthcare, because healthcare did not perform well last year, but it's one of those areas of the market where you're concerned about economic expansion this year, can be defensive, but we know there's a lot of innovation coming from healthcare companies as well that could be supportive for growth moving forward.
But where in healthcare do you particularly like? Are we talking biotech, med tech? That seems to be where innovation would be versus something like managed care?
Great point. I think to be selective in healthcare, we are looking at areas of some of the biotech, some of the big pharma space areas, because the big pharma companies, they're going out and acquiring other companies right now and building out their pipeline for new therapies and drugs. And I think as rates change, we might see a little bit more in that M&A space from healthcare. And I also think at the same point in time, we have a demographic shift that we know that is going to continue to play out in the United States. The baby boomers, they're not getting any younger. There's still demand for services and care that's out there. So even looking at some of the larger healthcare networks, healthcare providers, insurance providers, I know they've had a rough week this week when considering concerns around Medicare costs, but those that can execute and move through that, I think also are areas of healthcare that makes a lot of sense, Bailey.
Yeah, and I'm not a brown nose, but I got to point out the big boss's editorial today. The healthcare system, he writes, is more short-staffed than ever, even as it faces its next big shock, an aging population. So tackle that one from an investment perspective, since you brought up the healthcare industry.
Yeah, definitely. I mean, I think there's a concern around, let's say, investing in, let's say, hospitals that are trying to run their staffs at certain margins, but we have a labor shortage, and we also have issues in quality of care, which might suffer, which then causes demand shifts around that space. I'm focusing more on the ways to deliver the care and helping to support productivity, whether that might be software and technology in the healthcare space. Again, the insurance providers, helping to provide a wider network or better products or policies that people can take advantage of. So I'm not focused so much on the labor side. I'm looking more at the solution side to try to get through some of these problems, John.
All right, Brian, thanks a lot. We'll leave it there. President at MJP Advisors from lovely Westport. I think isn't that where Martha Stewart lives? Westport.
I'm not that demographic. I'm not going to.
You're from California.
Yeah, I'm a California kid.
All right. As we look at the markets right now, the update, S&P 500, 15 points higher, up 0.3%, 47.95, Bailey. Don't jinx it. Dow's up 97 points. That's up a 0.25% right now, 37,566. NASDAQ 100 also continues to add to its record close from yesterday, up 109 points, 17,091. You're listening and watching Bloomberg Markets. And time now for company news. And with that, here's Bloomberg's Steve Rappaport.
John, Spirit Airlines says its deal with JetBlue Airways remains in full force and effect as the carrier explores ways to shore up its liquidity after a federal judge blocked the multi-billion-dollar buyout. The company also detailed efforts to refinance debt in a wide-ranging update. We get more with Bloomberg's Kriti Gupta.
So it looks like a lot to really reassure investors around just the idea that even in the absence of this JetBlue deal, which is kind of thrown cold water on, Spirit Airlines can still survive and do it with quite a bit of liquidity, and that's really being rewarded this morning in the stock market.
That's Kriti Gupta from Bloomberg reporting. Ford is cutting production of its F-150 Lightning electric pickup. The move will affect about 1,400 employees as the auto giant boosts production of Ford Bronco SUVs and Ranger pickups. David Lefkowitz is head of U.S. equity strategy at UBS Global Wealth Management.
I think it's pretty clear that there's been some slowdown in EV adoption. There's been some of the low-hanging fruit has already been picked by some of the OEMs, and we're getting into the part of the market where it may take a little bit more effort to sort of penetrate the market. So, but I don't think this is a broader read on the health of the consumer.
That's David Lefkowitz of UBS Global Wealth Management on Bloomberg Surveillance. Home goods retailer Wayfair is cutting about 13% of its workforce. The Wall Street Journal reports the move comes after Wayfair's CEO sent a memo to employees urging them to work harder. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And that brings us to 10:55 on Wall Street. It is time now for an update on news from around the world. Let's head back to the Bloomberg 99.1 newsroom in Washington and to Amy Morris. Hi, Amy.
Hi, John. Nearly 60 deaths are being blamed now on severe winter weather. It is all across the country. Tennessee officials say 14 people died of weather-related causes during this latest blast of winter weather. More extreme cold is expected in the central U.S. through today into tomorrow. Forecasters warning of dangerous wind chills. And Congress has left snowy Washington. It's a snow globe out there, but not before passing another short-term spending bill to avert a partial government shutdown that would have started today. The measure will finance some federal agencies through March 1st and others through March 8th. House Speaker Mike Johnson was able to stop a last-minute effort by members of the House Freedom Caucus to sort of slow down that legislation. They wanted to tack on immigration policy demands. Some GOP hardliners are kind of angry that the speaker went back on his promise to not allow any more of these stopgap funding measures. President Biden says U.S. airstrikes against Iran-backed Houthi militants in Yemen will continue, even though they haven't halted the group's attacks on Red Sea shipping. Bloomberg government Zach Cohen has details from D.C.
The goal here is that the White House is hoping to deter future attacks either by sort of stopping an imminent missile strike or at least getting the Houthis to step back from their strikes. But it seems at this point that they're going to keep up as long as Israel is attacking Gaza.
Bloomberg government Zach Cohen in the nation's capital. Now, here's something to think about before your head hits the pillow. Apologies in advance, but this story creeped me out. Sleeping with wet hair can lead to fungal infection and unhealthy hair.
Oh, great.
Researchers in the UK say there can be up to 16 different types of fungi species in your pillow. They say it's better wash your hair in the morning, but if you have to wash it before you go to bed, just make sure it's really well dried. And you may consider using a silk pillowcase to avoid any infections. I know. Global news 24
Or you
hours
could do
a day.
like Matt Miller and just shave it all off. Then you don't have that problem at all.
Well,
So
I could say something about that.
you better not.
No.
Do you have your snow shovel ready?
I was bald.
Did you
4
know
years
Bailey
ago.
doesn't have a snow shovel?
What?
Amy? Yeah, it's crazy.
What?
He's from California, moves to
I'm
New
from
Jersey.
South Carolina, and I have a snow shovel.
I've been, in my defense, I've been a homeowner for all of 3 months.
That's not a defense.
No, that's no
You still have to
defense
you still have to get to your car.
Oh, my God. Amy,
God, love
in the
ya.
new Bloomberg 99.1 newsroom in a snowing Washington. Thanks a lot. Appreciate it. Did you see this story on the terminal? It's one of the most read. It has to do with Todd Graves. I've never heard of him, and he's the founder of chicken finger chain. I've never heard of this either, but I live in a cave. Raising Cane's Restaurants.
Yeah. First and foremost, according to the internet, over 600 locations. I have friends who are big fans of Raising Cane's. There is one in New Jersey. There's going to be 7 in New Jersey, so maybe you'll be
okay.
Is Cherry Hill near where you live or no? That's the closest one.
You are so not from around here. No, that's way south.
I only know California geography loosely. But anyway, so Todd Graves, founder of Raising Cane's, buying a penthouse, a luxury condo in Dallas, the latest sign of the city's increasing shift to the ultra wealthy.
The other thing that catches my attention, he's now a billionaire from selling chicken fingers. Like, what are we doing wrong?
Yeah, net worth $7.2 billion.
Good Lord.
Which, if you got 25, so basically penthouse, 1-floor building where he will not need a snow shovel because I don't believe it has snowed in Dallas in who knows how long, was marketed for $25 million a few months ago. No official price was disclosed, but buying it in the 8-digit millions would be expensive, according to Bloomberg News, even by New York City standards. I don't know if you
if you go to Billionaires Row on 57th Street, it's just like the top floor of one of the new buildings. It's like mind-boggling.
The videos are cool.
$100 million or somewhere around there.
I always, anytime I see that in Manhattan, I'm kind of like, imagine if you took $12.5 million and bought a bunch of land somewhere way cooler with warmer weather.
Will you do that once you start selling chicken fingers?
When I have the ability to spend $12.5 million on a Manhattan luxury condo, I will be ready to rock.
All right, market reset, S&P 500, 47.98. Let's see if we can hold on to those gains. Up 17 points right now. That's a rise of 0.4%. You're listening and watching Bloomberg Markets. John Tucker, Bailey Lipschultz with you. More markets straight ahead.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And more gains on Wall Street as we close out the week after a tech-led rally that pushed the NASDAQ 100 to a record. More gains for the NASDAQ 100 now. But should we worry about a bubble? Investors going to pay close attention to Federal Reserve speakers today for even more clues on the timing and extent of rate cuts. This is Bloomberg Markets. I'm John Tucker, and he has to be on his best behavior because he has a mortgage now. He's Bailey Lipschultz. We are in for Paul and Matt. Well, let's start things off with a market update and Bloomberg's Nathan Hager.
Well, John, you said it. We're in record territory for the S&P 500, have been for the NASDAQ 100, and the tech shares are leading the gains right now. Let's get right to those numbers. The S&P's up 15 points, or a third of 1%, 47.96. That's the record level. That's where we are right now. Dow Jones Industrial Average up 116 points, or 0.3% at 37,585. The NASDAQ 100 up 2/3 of 1%, up 109 points at 17,091. So tech's leading the way to close out this week. But LPL Chief Global Strategist Quincy Crosby is arguing for the tried and true barbell.
We have tech, we have semiconductors, we have consumer discretionary. But if you're scared stiff, you move over into the sort of the comfort zone. Now we have healthcare coming out. Healthcare looks like it's bottoming. You can have some consumer staples names in there as well.
Quincy Crosby of LBL joined us earlier on Bloomberg Surveillance. 10-year Treasuries down 5/30 seconds, yield 4.16%. The 2-year at 4.38. NYMEX crude's up 0.4% or 30 cents at $74.42 per barrel. COMEX gold's up about 0.5% or $9 at $2,030.60 per ounce. The euro, a little changed against the dollar, a little bit of strength at 1.0881. British pound weaker at 1.2677. And the yen, little changed at 148.12. Bitcoin's down a tick, trading just shy of 41,000. That's a Bloomberg Business Flash. Bloomberg Markets continues. Here's John Tucker and Bailey Lipschultz.
All right, Nathan Hager from the Bloomberg 99.1 newsroom in Washington. Thanks. A look under the hood now. Some of the stocks on the move, companies to watch, and Bloomberg equity reporter Norma Linda with us. Let's start off with, this is exciting, insurance.
It's the company that I have for insurance for my home.
Is it? Wow.
It all comes back.
So when people slip on your sidewalk because
Please
you don't have
speak
you have something to cover it.
Everyone knock on the
you
table.
go, hey, Travelers.
So you know all about this one. Travelers is up as much as 8% this morning. For its highest on record and its biggest gain since 2020. It's an insurance company that reported a core earnings per share for the fourth quarter that beat the highest analyst estimate by more than $1. Their personal insurance business is showing significantly improved profitability, and the outlook is for continued improvement. This company is based in New York City. Apparently, Bailey is very familiar with them, but it provides personal insurance for auto and homeowner policies, as well as company insurance for some more commercial needs like auto and property and workers' compensation coverage.
I give JT so many things to just bring back into this conversations. I love
Right.
it. I love everything about
Ammunition.
You're connected to it all.
Exactly. It all somehow ends up with a small dick. One other name, though, that we've been talking about, Spirit Air. I have never flown Spirit Air, though, so I just want to go ahead and say that. JT, I don't know if you're a budget airlines guy.
I just don't I don't go
You don't
anywhere.
fly. But what's going on with Spirit?
I must admit, I've flown Spirit back in the college days when you're looking for a budget
Those are the
option.
yellow
one,
airplanes.
yes. It's like a
you
school
gotta pay
bus.
for everything. I flew Budget Air in London, and they were selling lottery tickets. Do they do that on Spirit
I
Air
mean,
too?
it seems like it's a cheap opportunity, but then you end up having to pay for luggage, and it adds right back up. Anyway,
You have to pay to use the ladies' room?
I mean, at this point, they might as well charge for that as well. Spirit. Spirit is up for its biggest gain since November 2020, up as much as 28%. We've been talking about this all morning. The stock is surging after reaffirming its support for the JetBlue deal, which we know is a bit of an interesting scenario. We've got Wall Street analysts saying that Spirit could be forced into bankruptcy, reorganization, or even liquidation. And the firm is really trying to defend itself. It's saying that, it hasn't really specified whether or not it will appeal the ruling that has happened by the judge, but it is defending itself, pushing back, saying that it is not pursuing nor involved in a statutory restructuring.
What's the next one? Because I don't know what this is.
Tricon Residential. That is in the real estate space, up as much as 29%, soaring for its best day on record and highest level in over a year. Blackstone announced that it's taking the real estate company private.
Oh, okay. This is part of Blackstone.
That makes sense. Yes, that's the headline news. The deal is worth $3.5 billion. The company's based in Toronto and owns single-family rental homes and apartments. So we've got residential REITs like Mid-America, Invitation Homes, and American Homes for Rent surging on the news.
Yeah, 38,000 rental homes in the U.S.
Where are they based?
Toronto.
Okay.
Yes, but they've got, as you mentioned, a good bit here in the U.S., 38,000.
Okay. Well, thanks. We appreciate that. Bloomberg's Nora Melinda with stocks to watch. And that brings us to 11:06.
Now on Bloomberg Markets, Munis in Focus with Joe Mysak.
And the focus on munis being brought to you by Build America Mutual, ensuring U.S. municipal bonds that finance essential American infrastructure and providing guaranteed income to improve any portfolio. Be part of Building America. Invest in, all right, everybody, BAM insured bonds. That was pretty long,
I don't have
actually.
that timber.
Yeah. Oh, well, you'll gain it back at some point. Let's talk about munis. Somewhere, some municipality, I guess, is issuing debt for a mall in a swamp or an elevated monorail to nowhere. Let's enter the sometimes murky world of munis with Joe Mysak, editor of Bloomberg's Muni Markets Brief. What's new in Muni land? What are you looking at?
Tucker.
Remember the first time I met Joe, I had to debrief him on the radio, and you brought up, what was it, broiler mortalities. Do you remember that one?
Alabama. Yes, broiler mortality.
That was like dead chickens that were dying in, chicken facilities. Somebody
the chicken
raised...
chill system, they called it. Anyway, what's happening?
Top that one.
Yeah, well, we haven't had a lot of high-yield deals so far this year. But we've seen a lot of deals, which is amazing because January is usually a very light issuance month. So we have issuance up. It's about, the last I checked, about $19 billion for the couple of weeks we've had so far this year. That's up almost 40% over last January, same period. So we've seen this kind of, I want to call it a surge in issuance. Very unusual.
What led to the surge? I mean, rate expectations? I mean, what?
It's funny. Issuers very rarely are rate sensitive, except during those times when they're refinancing deals, refunding deals. When they're just selling bonds for, whatever they're selling them for, streets, highways, broiler mortality mills. When they're just
malls
doing
and
that,
swamps.
They are relatively rate insensitive, so they just come to market. But you brought up an interesting point. What's leading to this surge? I'll let you know. We had a very light December, unusual again. It was about, it was a little over 20 billion, like 22 billion, I think it was, which is a very light December. Usually places are rushing deals. So you have a very light December, you have a pickup in January.
Joe, this is admittedly probably the dumbest question you've ever been asked.
Knowing
nothing about munis, do we typically see more activity in an election year? And like, how does the election impact?
No,
activity?
That was pretty dumb.
That's what I'm
kidding.
Nice. Do we, no. What we will see is more bonds on the ballot this year because it's a presidential election year. So you see more of everything. You have so many treasurers and governors, and presidential election years are big. In public finance, I guess you'd say. But are we going to see more sales this year? I think we will, but that's because last year we had a relatively light year. 2023, you're coming off a year that was down 20%. And, led a lot of banks to either cut back or get out of munis altogether. We had that story, Citigroup shut down their municipal bond department a couple of weeks ago. Last year, 2023, was relatively flat. It was up, a portion of 1%. But the previous year was down 20%. This year, we'll probably see, a nice increase. So I would say 400 billion, just because you had a relatively flat year. And it's kind of like a metronome, goes back and forth.
You were cracking the whip on a story that Bloomberg did on is it munis? College finance.
Huh.
Since they're all under pressure in terms of political correctness or whatever the latest controversy happens to be, being anti-Semitic was one of the charges. Schools like Harvard and the other Ivy League schools, they raise debt, raise money through issuing debt, right?
Lots.
How is this impacting them in the markets?
Okay, well, so far, as Eric Kazatsky pointed out, of Bloomberg Intelligence pointed out today, the elite schools, and I think there's something like $74 billion in this.
Why are they raising? They have so much money.
They're still
I don't get that.
Trading, like they usually do. They are very highly regarded because, like you say, they have tons of money. They have big endowments. They have tremendous demand. But yesterday we carried a story. We actually carried two stories. One based on, the Bloomberg Intelligence also. Joel Levington and Michael Dodo came out with an opinion piece saying, hey, you know what? The elite colleges better watch out because this kind of thing damages your reputation. And the rating agencies, it's time for them to wake up and maybe point out that these schools are facing some very contentious times. And, so far we haven't seen any reaction, but it is an issue. I have to admit, you take a look next time, probably not Harvard, but next time, a relatively elite college comes to market, you have to watch how the yields are.
Is there another event that you would say can be compared to this, whether it's individual universities having their own internal issues where there's been really a push against universities, how that could impact their debt?
I would say no, because this seems to me to be such a sui generis story, where you've had the political correctness, etc., roiling campuses.
Well, it's not just political correctness. I mean, it's just like, to be fair, it goes beyond
diversity,
that.
equity, and inclusion, and the anti-Semitism charges after the college presidents went to Capitol Hill. And of course, going to Capitol Hill is always a fraught experience for people. And, it's funny, you have college presidents going, and, you always have people on Wall Street. They love to go. It's such an honor to go. And yet it is a fraught experience. It can backfire.
You can get skewered.
Yeah,
so
exactly.
What, as an investor, what am I making in Muniland now? Am I like,
Well, interesting. We've seen
as
yields
stocks surge.
We've seen yields creep up, and on the 10-year, you got about 2.5% tax exempt. But
is that callable?
The important thing, yes.
Okay.
Well,
they're all
it's
callable.
Usually the call is 10 years, so
okay.
They're not going to come in with a 5-year call. What we've seen so far this year, though, and just for the few weeks we've had, returns are down. So the usual January effect we are not seeing. But the 3-month returns, and one of the reasons is we've seen more supply, but we also had very big returns. The 3-month return on munis is like 7.5%. So we're down a little bit. So the usual January effect hasn't gripped the market yet, and probably won't, because we're probably going to see a month with a lot of supply.
What's the weirdest issuance we've seen lately? Anything good? I mean, it's hard to top broiler mortality.
Yeah, broiler mortality or a nice, crumb rubber deal. Nah, nothing really stood out. Jefferson County sold a big refunding deal, and they, of course, went bankrupt a couple of
That's
years
Alabama?
ago. Yeah, Jefferson County, Alabama. So that was sort of an interesting deal, but, they paid up, but it was more than $1 billion deal. But nothing... none of those nutty deals that I so love to write about, as you know, Tucker.
And Puerto Rico made it back from the brink. Illinois made it back from the brink, or what's? Give me an update there.
Well, I'll tell you something.
Or did they?
Well, you bring up Puerto Rico, but Puerto Rico, they're kind of muddling along. But the rest of the 50 states, wow, they are awash in cash. They really, you look at it and say, well, surely they're worried about recession. No, not really. The states and most localities are doing really well. They have record rainy day funds, big reserves, and we have a story coming out a little later in the hour, I think. State and local payrolls are back to their pre-pandemic highs.
I'm looking at that Georgia Tech story, turning the municipal bond for $90 million athletic facility.
Isn't that the best?
I love that you just sell debt to make... I do not know what their libraries look like, but I've seen so many photos of comparing LSU's football facilities to where 99.9% of the student body spends their time, and it's night and day.
Yeah,
oh, of course.
Stadium
the football stadium's gleaming. The
this
library's
is cool.
falling
The rendering
down.
in the story is cool.
Yeah,
anyway.
they love stadium finance. I'll tell you that. Although in Texas this year, believe it or not, or should I say last year, November, several big high school football stadium borrowings deals were turned down by voters, rejected.
Wow.
Which is unusual.
That's very unusual.
But I'm sure we'll see some more of those. Yeah, stadium deals.
All right, guess what?
What? No.
We're out of it. We are out. That seemed like a half an hour we were talking
Man,
here. Not that I don't like talking about munis, but Joe Lysak, editor of Bloomberg's Muni Brief. And as we update the markets right now, S&P 500 up 25 points. That's up 0.5%. So
JT, do they make 4,800 hats, or do we have to wait for
48.06. When do we send out like a red headline on that?
We're not on the intraday high yet.
Oh,
so
the intraday
still
high.
Gotta get there.
Okay, but if we stay here, that will be a record close for the S&P 500. The Dow is up 178 points. The NASDAQ 100 adding to its record. It is up 155 points. This is Bloomberg Markets. And that brings us to 11:18 on Wall Street. Time for company news. And with that, here is Bloomberg's Steve Rappaport.
John, Macy's is laying off about 3.5% of its workforce ahead of the departure of CEO Jeff Gannett as the department store operator retrenches amid lower demand. More on that from Bloomberg's Gina Cervetti.
It's also closing 5 stores. Most of the cuts will be in corporate positions. Macy's has struggled to compete as shoppers shift away from department stores. But over at Walmart, that retailer is raising the average store manager's salary to $128,000 a year, up from $117,000, as it looks to attract and hold on to workers. The retailer said it's also redesigning its bonus program for managers so that store profits will play a larger role in figuring out annual bonuses.
That's Bloomberg's Gina Cervetti reporting. Spirit Airlines says its deal with JetBlue will go on as the carrier explores ways to shore up its liquidity. There are reports that the airline is urging JetBlue to appeal a judge's decision that denied their request to merge because of antitrust concerns. And it's finally here, the long-awaited headset from Apple. The mixed reality Virtual Pro headset is finally available for pre-order. $3,500 it's going to cost you, and it will also cost you a little bit of patience. That's because all 3 models, the orders will not be delivered until March 8th at the earliest. So, Bailey, you're going to have to wait a little longer for that hot tech stuff.
Who's buying these things?
Somebody with a lot of money and a lot of patience, as I said. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets coming right up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up to 11:22 on Wall Street, I'm Nathan Hager, watching a Friday morning rally with the S&P 500 into record territory. We check the markets all day long on Bloomberg, and right now the S&P is up 23 points, or 0.5%, at 4804. That's above the record close of 47.96 set 2 years ago. The Dow Jones Industrial Average is up 179 points. That's a gain of 0.5%. The NASDAQ 100 is surging by 0.8%. That's up 145 points. Information technology is one of the biggest gainers in the S&P 500. 6 of the 11 main industry groups are in the green, led by communication services. And the 10-year Treasury is down 5/30 seconds at a yield of 4.16%. NYMEX crude's little change now at $74.01 per barrel. COMEX gold's up 0.3% at $2,027.50 per ounce. The euro little changed at 1.0884 against the dollar. The yen is at 148.21. Some of the biggest movers right now individually: Spirit Airlines up at nearly 24%, saying its merger deal with JetBlue remains in full force despite a judge's ruling. And we're also watching iRobot. Those shares are tumbling. They're down more than 28%. That's after European Union said that it could block the $1.4 billion takeover by Amazon. That's according to reports, including from Bloomberg News. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Bailey Lipschultz.
All right, Nathan Hager, thanks a lot. Appreciate it. Well, let's make a deal. What's the outlook for M&A in 2024, Bailey? Our next guest, Mitch Berlin. He's Vice Chair of America's Strategy and Transactions with Ernst & Young. And I got to say, I think he wins the prize for the coolest looking office on Zoom today. Are you like an equestrian? What are all the ribbons in the background?
They're actually dog show ribbons.
Oh, dog show! Whoa, cool.
I'm even
now
more
you
interested.
All right,
Yeah,
we've just
I'm in.
changed. We've just changed the topic. So you're going to get in
My
trouble
dogs are
from
more
the company.
accomplished than I am, so
What
I
kind
have
of
to brag
dogs?
on their behalf.
What are the dogs?
Portuguese water dogs.
Oh, beautiful.
I gotta
Those are
Google
the
that.
ones that are like hypoallergenic. They don't shed.
Right.
Now I need
Oh,
Right.
that is awful.
Portuguese.
Anyway, okay, so we'll get back on topic. Is this an environment right now in 2024 that's conducive to deal making, and kind of what's driving it?
Set to the pre-pandemic deal volume. So if you look at major deals, those are those deals that are above 100 million. There were approximately 1,250 in 2019 and 1,250 in 2023. So we were trying to understand what does M&A look like going from there now that we've reset to pre-pandemic levels? And so we looked at the last 35 years of M&A, and we correlated that to information such as GDP growth, inflation, corporate profits, the bond spreads and such. And we did see a correlation. And so if the predictions for those same metrics hold true going forward for 2024, we should see about a 12 to 13 increase in M&A over the 2023 numbers.
Does the feeling, I spend most of my day job, Mitch, covering the IPO market, and the main sense is that something's got to give. Is that kind of your sense? We have a need for deals. We have cash on the sidelines. We have companies who are kind of nearing the end of their maturity in one sense or another.
That's exactly right. I think that we're at a point now where people have been sitting on the sidelines for 2 years. There are a lot of private companies or portfolios or private equity that are coming to maturity on their debt. To refinance would put them in a very different position from an ROI than they are today. So they have to do the math and figure out, should we monetize now, or do we take the risk of refinancing, hoping that we can get a lower rate soon enough that it doesn't impact our ROI calculations?
Okay, so who's coming together in 2024? You don't have to name names, but well, that would be nice, but industries.
I can name the industry sectors. The sectors that we're going to see the most activity are the ones where the deal multiples have gone down, because in a time where you have a very high cost of capital and high multiples, it's unlikely that you're going to see a significant amount of M&A activity. But if you look at the sectors where the deal multiples have gone down, that includes life sciences and technology. Those deal multiples have gone down about 8 points each. And if you look at energy, those deal multiples have gone down about 4 points year over year. Those are the areas where
I thought energy was pretty much exhausted, in 2023 with all those deals.
Well, there's still, and it may not be the major players, but there's still players out there, and their cost of, the cost of capital is high, but the multiples are going down, so they can be attractive targets.
When you're talking life sciences, we saw a number of deals coming out of JP Morgan a few weeks ago. Is that biotech? Are we seeing smaller bolt-on deals? Are we going to see potentially the return of major M&A?
You're going to see both. I think when you look at major M&A, there's still patent cliffs looming, and they'll need to buy an R&D pipeline to continue to turn the profits that they want to turn. So I think you'll see it on both sides, and some of the smaller biotech deals as well.
What's up with the FTC and some of this antitrust, though? Is that something that's it feels like every deal has some kind of a tie-up? Just leave it at that.
Yeah, no, it's a good question. So the new guidelines came out. It's been 13 years or so since they've come up since they've revised the guidelines. The clients that we're speaking to understand that it's going to make things a little bit more difficult and take longer, but they're not shying away from deal making, because in many cases they really don't have a choice. And so more will come under the radar, because the threshold of what they consider to be a movement in the consolidation index has tightened. So more will come under the radar. They're going to require more information, so the timeline to get a deal done is going to take longer. So more is going to come under their scrutiny. But we are working with clients every day to come up with multiple scenarios that they can look at around reshifting the portfolio of the combined entity into something that would be more appealing to the FTC and DOJ.
Okay, you want to weigh in on Spirit? I mean, what happened there? It's maybe not specifically, maybe a broader view.
Well, my guess is that the way that they shifted the portfolio and the routes may have not been exactly what the FTC is looking for, but it sounds like they're going back to the drawing board. From what we're reading in the paper, it sounds like they're going to go back for another try at it. So I imagine they're going to have to reshift their portfolio into something that's more appealing.
Well, looking at iRobot, that's coming from Europe. Are they more stringent typically? What's to read from one of the biggest technology companies not being able to buy the maker of a robotic vacuum?
Yeah, so I can't speak on behalf of the FTC, but or the European regulators on that one. I think the concern was around having a market dominance and being able to shut other players out, because the buyer of that has such a significant marketplace that they can control who's competing with their own products. And I think that there is some sensitivity around that.
Okay, so 2024 overall, you think is going to be a pretty hot year for M&A? Can we say that?
We do. We think, again, 12 to 13% increase, which would be nice, because over the last 2 years, M&A has gone down 30 to 40%, depending on what sector you're looking at.
And M&A is not just for the big guys. You can have much smaller, even businesses you've never heard of, right?
Right. And we would, and
I mean, how does that work? How is that different in terms of funding or whatever than the big deals?
Well, the smaller deals are easy to get funded, and sometimes you can fund them off balance sheet. But you probably will see a pickup in some of those smaller deals because, quite frankly, they're also coming up with maturities on their debt that they're trying to figure out how to refinance. And often, again, it's the cost of capital is too expensive for them now. They struck these deals 5 years ago when the cost of capital was almost free, and now they're paying 5-6%. That's a very different economic scenario for them.
Is that one of the bigger drivers behind some of these deals that we got a big debt coming up or whatever, and this is the way we can fund that?
It will be for sure. They need to exit. They need to refinance that debt, and to increase that interest rate by 4 or 5% is significant.
What's up with private equity?
Small business. Yeah.
What's going on with private equity?
Private equity.
Do we call it private equity anymore, though?
PE?
Do we still call it that? Because it's kind of morphed into something else.
If we change the name, we'd have to change a lot of thought leadership. So we'll continue to call it private equity. But they're in a difficult position right now because, again, their deals are leveraged. They were, those that were struck 5 years ago, they were probably hoping to monetize by now, but they're coming up with the same maturity cliffs. And so they have to do the math to say, should we lower our valuations and try to sell these portcos now? Should we refinance, hope that we can get refinance for a lower cost of capital in a year or two and keep the valuations high? You have to go, portco by portco and really do the math to see what makes sense, whether you move now or hold on it.
Okay, the question everybody's been waiting for: how many dogs and what are their names?
So I have 5 dogs.
Oh my gosh.
They are. So we got Loot, Tiki, Greta, Berta, and Irma. Yes.
All right.
So if you want a dog, I can ship one over to you right away because I have too many.
I will take any and all dogs. I Googled. I didn't know what a
You don't even have a snow shovel yet.
The
You're
dog
already
can
getting
stay
a dog?
inside.
Good Lord. All right. We'll leave it there. Mitch Berland, Vice Chair of America's Strategy and Transactions with Ernst & Young. I don't think he's ever going to come back with us for that.
The real question is, would you rather have a dog or a shovel? I'd rather have a dog.
How about you get a dog that you train to shovel you out or something like that? Yeah, Bailey. S&P 500, 23 points higher. That's up 0.5%. 4804 on the index. The Dow Jones Industrial Average, 155 points higher. That's up 0.4%. The NASDAQ 100 continuing to add to its record close yesterday, 144 points higher. That is up about 0.9%, 17,127 on the index. Let's do yields real quick. 2-year, which is more policy reactive, 4 basis points higher. That's at 4.39%. The 10-year, 1 basis point higher. That is at 4.15. And you are listening and watching to Bloomberg Markets. And let's get an update right now on news from around the world. And with that, the Bloomberg 99.1 newsroom is where we find Amy Morris.
All right, thank you, John. Houthi militants in Yemen fired missiles at an American-owned commercial vessel yesterday. The same day, President Biden acknowledged that U.S. airstrikes just haven't stopped those Red Sea attacks. More on this with Bloomberg's news director for Europe, the Middle East, and Africa, Rosalind Matheson.
They won't be able to agree then on who's going to rule or manage Gaza in the aftermath of this conflict. Benjamin Netanyahu is now saying it can be a civil authority, but it has to be the one that he's comfortable with. And so there's a lot of obstacles in the way here to getting some kind of resolution to that conflict.
Israeli Prime Minister Benjamin Netanyahu is rejecting calls from the U.S. to scale back his military offensive in Gaza. Congress hoping the third time's the charm to resolve its differences on spending. Bloomberg government Zach Cohen tells us lawmakers have passed that third stopgap spending bill to avert a shutdown this weekend.
Now they have until early March to come up with new agreements. My understanding is Speaker Mike Johnson is now back involved in those talks in order to negotiate new top lines for all 12 subcommittees that are in charge of writing these spending bills, but certainly another indication that funding the government continues to be a really difficult proposition for this Congress.
Bloomberg Government Congress reporter Zach Cohen in Washington. President Biden forgiving nearly $5 billion in additional student debt. The administration seeking to deliver on one of his signature initiatives. Almost 74,000 student loan borrowers will see their debt canceled. Japan's space agency says its spacecraft is on the moon, but they're still checking its status. The smart lander for Investigating Moon, or SLIM, came down onto the lunar surface earlier today, and if it is successful, Japan would be the 5th country to pull this off. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$11:40 on Wall Street. I'm Nathan Hager on a risk on Friday with the S&P 500 flirting with record territory, low Treasury volatility, and some Fed-friendly data from the University of Michigan, adding to this idea that the Fed might be able to pull off a soft landing. Lots of debate in this market over whether they can do that. Ben Emmons, senior portfolio manager at New Edge Wealth, says he sees a strange landing. So how does he think investors should position?
You want to look at quality in terms of the consistency of earnings growth, because as much as you have multiples now have expanded and the valuation becomes maybe again of a concern, if you get consistent EPS growth, then you have a quality company, meaning free cash flow, meaning the balance sheet doesn't deteriorate by any kind of credit changes, things like that. That's the core of our valuation framework.
And we check the markets all day long on Bloomberg. Right now, the S&P 500 is up 18 points or 0.4%, trading at 47.99. 47.96 is the record close set 2 years ago. Dow Jones Industrial Average up 130 points or about 0.4%. The NASDAQ 100 is higher by about 0.75%, a gain of 125 points. That index is already at a record. 10-year Treasury down 5/32, yield 4.16%. The 2 years at 4.40. NYMEX crude's down about 0.1% at $73.99 per barrel. COMEX gold up about 0.25% at $2,026.90 per ounce. The euro showing a little bit of strength against the dollar at 1.0887. The British pound weaker at 1.2672. The yen, little changed against the dollar, 148.17. Bitcoin's down 1.75%, trading around 40,300. That's a Bloomberg Business Flash, and Bloomberg Markets continues. Here's John Tucker and Bailey Lipschultz.
All right, Nate, thanks a lot. Have a good weekend. The stock market ending the week, as you just heard there from Nathan Hager, on a positive note. Stocks that led the rally in 2023, they seem to be the traders' top picks again this year. Let's take a deeper dive into these risk assets. Skylar Wynand is CIO at Regan Capital. Let's start you off with the bubble question. Does this feel like a bubble to you?
It sure does. With stocks back to all-time highs, short-end rates up 500 basis points in the last 2 years, long-end rates up 250 basis points. You do the math on where stocks should be, given that rise in rates, stocks theoretically should be down upwards of 40% over the last 2 years.
Wow. So we're at it. You just took Bailey's breath away.
Yeah, no. So what breaks then, Skylar? I'm just looking, we've got the swaps pricing in just under 6 rate cuts this year. We've got a lot of analysts and strategists talking up 2024 earnings and looking into 2025. What happens?
You have to look at leverage first, and the most levered players out there are going to break first. We've already seen that in banks. Then it goes to private equity and very leveraged companies. The last folks to lose will be the least levered companies that are using a half a turn or maybe over only a turn of leverage. So I think the market's going to be really bifurcated. You hear a lot of folks talk about, let's stick to high quality. I like that. But look to leverage to break before anything else.
All right, 2 questions then off that, Skylar. Going back to your initial point, are you shorting the market, and then are you shorting some of these levered stocks? How are you playing that?
I think, we're not stock guys, but in my stock investments, I think, it's one of 2 things. A, sometimes the only way to win is not to play and to wait it out and maybe stick in mid to high single digit income plays. But B, own the entire market as well, where I don't know when the next NVIDIA or Tesla or Monster Beverage is going to come along. So I want to own them all.
Who's most over leveraged? Is that the right phraseology?
Definitely banks. Banks are government-sponsored hedge funds, so to speak, allowed up to 12x leverage. Now, what's happened over the last
you're
years,
talking the majors or regionals or what? Or just the entire
all banks
industry?
are allowed the same leverage but regionals and community banks got a ton of cash in post-COVID, post-PPP, right? So folks got all this cash. They parked it at the banks. Banks sat there for 8 months. What are we going to do? Okay, let's go out and start buying treasuries and mortgage bonds. What's happened is
Which was a
lot of those
disaster.
bonds are down upwards of 20 points, right? And so if you were levering that up 10 times, 12 times, your effective equity now went from 10% down to about 4%. So you're upwards of 25x leveraged. So what you have to look at is you have to look at tangible book value, tangible equity, right? And if that percentage is at only 4 or 5%, divide 4 into 100, that's 25x. So you're 25x levered. So moves like we've seen since the start of the year, the bond market's down a point, point and a quarter. Multiply that times 20 for a regional bank or a community bank that owns treasuries and mortgage bonds.
So who's least leverage then on the opposite end of the spectrum?
JP Morgan, the big guys who had a lot of money, they took it in, they focused on fee-paying product like credit cards. They weren't immediately incentivized to go out and buy really, really long duration paper. And so on the flip side of the large guys, B of A, you'll see, has huge amounts of unrealized losses sitting on their balance sheet. JP Morgan looks like a genius because they didn't really go and invest in all of that money into, Fannie 2, Fannie 2.5 coupon paying mortgages, which 2 years ago, the market thought everybody was going to refinance. And something like 70% of all mortgages have been issued in the last 2 years. So now the market thinks nobody's ever going to refinance again. Nobody's ever going to move. Everybody's stuck in these 2.5% coupon mortgages. So it's who owns that stuff and who doesn't. And JP Morgan stuck really short duration. And now they're coming out ahead of everybody. The time to own money markets and T-bills, honestly, was when rates were 0, not when rates are at 5.25, 5.5.
Well, Skylar, we've talked a lot about what you don't like. What do you like?
So now there's two sides of the coin in terms of equities and in terms of real estate and most things. It's, do you want to be the equity holder or the lender? Now is a great time to be a lender, okay? And you can be a lender on real estate. You can be a lender to equities, i.e. bonds. You can be a lender to municipalities. So now is as good of a time as ever to lend. The market's been hoping, savers have been waiting for 5+% yields on high quality fixed income for what, 16 years now? And it's here. We should be jumping into this like Scrooge McDuck.
Okay, I've always been told you don't fight the Fed, but certainly the bond market has been fighting the Fed, or so it would seem. Your impression, got about a minute left.
Yeah, the market, the Fed has been saying for the last 2 years now
but we haven't been listening.
There's going to be a lot of pain, right? And we've seen pain. Bond market was down 13% last year, came back the last 2 months of, or I'm sorry, 2022, came back the last 2 months of 2023 to make it a positive year. And the Fed is still saying rates are only going to drop 2 to 3 times this year. Yet the market has priced in 6 drops this year and 8 drops over the next 18 months. So it's a really good time to sit in floating rate paper that'll hugely benefit from the Fed, what's the Fed saying happening versus what the market is saying. If you're in fixed rate paper right now, what you're long is rates dropping 7, 8, 9 times over the next 18 months.
All right, we'll leave it there. Skylar Winans, the CIO at Regan Capital. Words of warning.
Yeah.
You were like taking a
I was caught off guard by it, to say the least.
You were also caught off guard by the snowstorm. S&P 500, so I'm not going to let that down. Up 17 points, a rise of 0.4%, 47.98 on the index. The Dow is up 110 points. The NASDAQ 100, 126 points higher. You're listening and watching Bloomberg Markets. That brings us to 11:50 on Wall Street, and time to get to company news now with Bloomberg's Steve Rappaport.
John, shares of Spirit Airlines have soared after the carrier announced it's not giving up on the proposed merger with JetBlue. More from Bloomberg's Jeff Bellinger.
Steve, Spirit is trying to persuade JetBlue to appeal the government's decision to block the merger of the two carriers. Spirit indicates in a regulatory filing that it still believes in its plan to merge with JetBlue, saying it continues to believe a combination is the best opportunity to increase much-needed competition and choice. In the meantime, Spirit says it is taking steps to ensure the strength of its finances and ongoing operations in case it has to continue on its own. Steve?
Bloomberg's Jeff Bellinger. Let's talk about Apple, something, though, that has nothing to do with that headset. The tech giant is making an offer to appease antitrust regulators in Europe. More on that from Bloomberg's Sam Stolten.
Apple, the European Commission, announced today is seeking to potentially sidestep a hefty EU antitrust fine by filing commitments in an ongoing abuse of dominance case here in Brussels. Now, this case involves Apple's near-field communications chip. And what the European Commission says is that Apple actually restricts access to this chip to other rival mobile wallets.
Bloomberg's Sam Stolten reporting. Imagine being sued for being late. Two fans of Madonna are suing her, New York City's Barclays Center, and concert promoter Live Nation. They say she took the set 2 hours late at a recent show. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And that brings us to 11:55 Wall Street. Let's get an update. News from around the world. We head to Washington, the Bloomberg 99.1 newsroom, and to Amy Morris. Hi, Amy.
Hi, John. We are watching the weather. Forecasters say that second storm is going to sock New York with snow after causing chaos farther south. Bloomberg meteorologist Rob Carroll.
A weak storm system off the Delmarva will bring a light snowfall to much of the northern mid-Atlantic states and on into extreme portions of southern New England today. A 1 to 3 inch snowfall is possible, generally from Baltimore on towards Trenton, New Jersey. There'll be some areas in southern Pennsylvania and also across central New Jersey that may see as much as 2 to 4 inches. For the major cities, it's a couple of inches around New York and also in the Baltimore and Washington areas. Boston will see less than an inch. Looks like some of the towns south of Boston, though, could see as much as 1 to 3 inches.
Bloomberg meteorologist Rob Carroll. And meanwhile, Congress has left snowy Washington. Yep, we're getting the snow, but not before passing another short-term spending bill, averting a partial government shutdown that would have started tonight. Bloomberg government Zach Cohen has more from the nation's capital.
This has actually been the third continuing resolution or stopgap spending bill that they've had to pass so far this current fiscal year. And so it's clearly an indication that lawmakers are having trouble coming up with any sort of agreement to fund the government for this current fiscal year.
Bloomberg government Zach Cohen reports this resets the clock now to March 1st for lawmakers to resolve their differences on full-year spending. Thousands of anti-abortion activists are in D.C. today. They don't care about the snow. They're here for the 2024 March for Life. It is the group's second march since the Supreme Court overturned Roe v. Wade. The demonstrators are gathering on the National Mall now for a rally that's set to begin at noon local time. That's just 3 minutes from now. Then they'll march to the Supreme Court building. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg John and Bailey.
All right, thanks, Aim. And this is Bloomberg Markets. I'm John Tucker, along with Bailey Lipschultz. We're in for Matt and Paul. And one of the stories getting a lot of attention on the Bloomberg today happens to deal with a short. What is it? The best short call of 2023.
Not made by a hedge
Shorts,
fund.
for those that don't know, it's just when you bet against something, basically.
You
right?
make money when the stock goes down.
Yeah, okay.
Really. So wasn't one of those activist firms, wasn't Hindenburg, which we've spent so much time talking about.
This is somebody you probably never heard of.
This is a first-year medical resident named James Block, no relation to activist short seller Carson Block, running a blog named after the SpongeBob SquarePants character Dirty Bubble. He targeted...
Which one's Dirty Bubble? Because
I hope that we're supposed to have a graphic if you're watching
it's just
or streaming on
You're
YouTube.
not Dirty Bubble.
As far as I know.
No, we'll probably get sued if we bring up Dirty Bubble.
Dirty Bubble was a villain in SpongeBob, one of the many villains. Big fan of SpongeBob. But so 20,000 subscribers.
You should be concentrating on taking care of your house instead of watching cartoons, but that's just me. Please continue.
And smoking meat. What else are we going to do? So Dirty Bubble, one of the antagonists in SpongeBob. This short seller underneath the name Dirty Bubble, targeting Signature Bank, basically saying he furthered his investigations into the crypto world, basically developed a hobby between shifts, according to this terrific Bloomberg story, debunking the crypto ties to Signature Bank, which we know collapsed 2 months later. So in terms of upside,
so it wasn't basically why Signature collapsed, their association with crypto. He just saw their investments or their associations with some of the crypto players as being kind of sloppy, so it reflected the overall sloppy nature of the bank's investments, I guess.
Yeah, reading from the story, this is a quote from him. He said he saw just how careless they were being with who they were doing business with the amount of money they were holding, and the amount of uninsured deposits they had from his home office near Ann Arbor, Michigan. Shout out to University of Michigan.
Do we know how much he finally made from all this? I don't see
it in the story.
But anyway, when you brought it up, you said a doctor shorting, and my first thought was Michael Burry, because remember from The Big Short, he's a medical doctor, I think from Vanderbilt University Medical School.
Went to
Vandy.
Vandy.
Kind of interesting. These are smart people. S&P 500, I bet they also have snow shovels, up 23 points, up 0.5%, 4804 on the index. Let's see if we can hold on to that. The Dow up 133 points, the NASDAQ up 155 points. This is Bloomberg Markets.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Well, stocks head higher. The NASDAQ 100 crosses into a new record again. The S&P 500 on track to close at a record. And still the question remains, have markets overpriced the speed and depth of Fed rate cuts? This is Bloomberg Markets. I'm John Tucker, along with Bailey Lipschultz. And we're for Paul and Matt. Let's start with a check of the markets. And doing that for us now, Bloomberg's Denise Pellegrini. Hi, Denise.
Hey there, John. Well, it is 12:01 on Wall Street, and we do check the markets for you all day long here at Bloomberg. A lot of green, as you mentioned, on the screen this Friday trading session. Strong consumer sentiment. A big theme today. U.S. sentiment this month hitting the highest since 2021, exceeding expectations. And we also had those comments from Federal Reserve Bank of Chicago President Austin Goolsbee. He said a continuing decline in inflation would mean talking about cutting interest rates is warranted. But Tony Crescenzi, market strategist, portfolio manager, and member of the firm's investment committee at PIMCO, says the Fed hasn't achieved price stability yet, guys. And he says the Fed might not cut rates as soon as you think.
Part of this soft landing, or strange landing, how you want to call it, is that the economy is not going to recession. The spending levels remain so high, and it's invested in the economy.
Yeah, and that actually was Ben Emmons of New Edge, but he's saying something similar. Crescenzi also said that the Fed might not raise rates at all this year. The Dow right now, it is higher by 133 points. That's up about 0.4%. The S&P 500 up 0.5%. Better by 23 points. The NASDAQ up 0.7%. That record up about 99 points right now. Spot gold right now, it is higher just fractionally, and NYMEX crude, it is lower by about 0.9%. Macy's laying off about 3.5% of its workforce. More than 2,300 people. That's amid lower demand. Macy's shares down by about 3%. Online home furnishings company Wayfair, though, it's cutting about 13% of its workforce, but investors like that. Even though it's more than 1,600 employees, that stock is up about 12%, guys. And that's your Bloomberg Business Flash.
All right, Bloomberg's Denise Pellegrini. Thanks, Denise, for that. Appreciate it. And right now it's time to look under the hood. Some of the stocks, the individual stocks and companies on the move. And for that, Bloomberg equity reporter Nora Melinda. Let's start off with, I see their trucks on the turnpike when I'm going home. J.B. Hunt. They were actually in the news yesterday as well.
Yes. Looking at J.B. Hunt, it's paring some of its gains, but was up as much as 3.8% earlier in trading for its biggest gain since November. The trucking company reported a fourth quarter operating revenue that beat consensus expectations, propelled higher by strength in its intermodal business. For those that don't know, intermodal is essentially moving freight by two or more modes of transportation.
That's like you put the container on the back of your truck.
Yes.
It can either go on a ship, it can go on the rails.
Exactly, very versatile. So seeing strength there. City analysts.
Do they ship snowblowers and shovels? I don't know.
That's what we need to know.
They do. They do. They have plenty
City
of supplies.
Analysts have raised 2024 estimates modestly, given better yields and margins.
Another stock, we talked about Ford.
Yes.
Now we have Stellantis' CEO saying that EV price cuts are going to result in a bloodbath. Now I need more details.
He said bloodbath. I had to pick this one out.
Bloodbath for who?
He says that he doesn't plan to slash electric vehicle prices just to win market share. It's so interesting, especially as we're talking about Ford today and how it's been cutting its production of its F-150 EV pickup truck. But the CEO of Stellantis is saying, if you just go and cut pricing, disregarding the reality of your cost situation, it's a race to the bottom.
Okay. Our last guest was talking about bloodbath in the markets. Don't worry, you could always clean it up with your iRobot. What's going on with iRobot and Amazon, right?
Yes. So iRobot.
Those pesky European regulators jumping in?
They are jumping in. So essentially, iRobot shares are tumbling as much as 33%, plunging for their worst day since 2012 and lowest level since 2010. This is all on expectations that the EU antitrust regulators will block Amazon's proposed $1.4 billion deal to acquire the company. And as we all know, they're the maker of the Roomba, if you guys have one of your own. But my question is, what other robot vacuum makers are there that are competitors? Because I only know of the Roomba.
I think that's probably the thing. I mean, we were talking about Google Nest. We were
Oh,
talking
wait.
about Ring.
Why don't they come up with an iRobot that will shovel your driveway?
Now that would be nice.
man, it
We
always
could send
comes
one
back
straight to Bailey.
Automated snowblowers. I'm just saying, I would probably not buy one.
Well,
I
they
haven't
also
bought a shovel yet,
don't they
so.
make the automated electric lawnmowers too?
I don't have one. I have a small yard. I do have a lawnmower though. Won't do me much
That's
well
good.
in the ice.
You could try that on the snow.
But where's the competition? I'm curious. But, I mean, the shares are plunging nonetheless.
The thing that stood out to me, it's trading at its lowest level since 2012. The deal was announced in 2022. So I know we spoke about this at the desk. Is this come back to a debt question, the path forward for the company? Like, is that something that kind of is top of mind, similar to what we saw with Spirit?
Yeah, I mean, I think all of these things are in focus. They did say that the final decision still needs to be formalized. That approval may not even come until
Wait,
February
what was their
14th.
main objection? That it's going to be banned for consumer? What is?
I mean, the main objection is that it's just too much competition. So if Amazon was to take on this deal with iRobot, that it would essentially harm other robot vacuum makers.
So if we were starting up an iRobot,
None of whom we can name.
My point exactly.
Okay.
I was the question I posed to one of my colleagues on this was: is this drawing a line in the sand? Because if Amazon can buy iRobot for $1.4 billion, what else could they buy? But I don't know. I'm not a lawyer. I'm not a specialist.
So we're going to close at a record today for the S&P 500. Why don't you jinx us, Nora?
Let me not jinx you all, but hopefully we will reach that record and close there. I mean, we already reached it earlier. Let's see if everything shakes out that way this afternoon.
What else are you looking at? Just the broader market perspective from you.
I'm always looking at real estate, as you all know. So this morning we did have some data come out. Existing home sales slipped last month. We
call them used homes.
Yes, I
used
like that.
homes
Used. But it is really interesting, especially as we look at how a lot of these new homes have been taking market share from existing homes. And so we are in this weird locked dynamic where nobody wants to move out of their current home to provide homes for people who are looking for homes.
Are you ready to refinance at this point?
No, I'm not quite there. I look at Warp pretty much every day to see when I will be able to.
And it's constantly changing.
That, actually.
It is not trending in my favor. Before I was like, we'll lock it in January. Now it's kind of like, we'll lock it in.
You got to push it out a little bit longer.
Well, 3.25 here, and no, I'm not going to ever sell. Like, I don't care. But anyway, that's my perspective. Bloomberg equity reporter Nora Melinda, thanks very much for stopping by. I appreciate it. Well, let's get a market reset. S&P 500, 22 points higher. That is up about 0.5% right now, 48.03 on the index. And, of course, if we maintain this, it will be a record close from, what was it, 2 years ago?
Record close from 2 years ago. We'll bust out the 4,800 hats. JT, we were talking about this earlier. You mentioned that the winners from last year are rallying. NVIDIA, Apple, Google, Meta, 4 of the 5 biggest drivers today. So even if you've been bashing big tech valuations, it seems like investors can't stay away from it.
And the Russell 2000, which was more appropriately priced, I would say, in terms of earnings, that is down right now, down 0.4%, 1915 for the smaller cap stocks. The Dow up 130 points. That's a rise of 0.4%. The NASDAQ 100, the tech-heavy NASDAQ 100, continues to add to its gains. 146 points higher. That is up 0.9%. It's 17,128 on the index. Let's move on to our next guest and our next topic. One of the stories today that caught our attention, Ford reducing production of the F-150 Lightning. Let's find out more. Bloomberg Intelligence automobiles and industrials analyst Steve Mann is joining us to discuss what is so hard about, first of all, making an electric vehicle, making it priced to sell, selling it and, me buying it. It's just, they should know how to do this because Ford's been in business for over 100 years making cars. Can you pick up on that?
That's absolutely true, but making EV is a whole different ball game, and the highest cost on an EV is actually the battery. So the battery is actually driving the cost up for a lot of automakers. Tesla has done a better job at managing that by sourcing it from China, but the legacy automakers like Ford and GM, it's going to take a little bit of a while. They're building new plants to cut back on the cost, but battery is the main issue.
And when you look at the margins, profit margins for Tesla, 20%, double that for Ford. So is that just because Tesla has figured everything out and they are still, to not avoid a pun, in the driver's seat?
Yeah, well, 20% for Tesla. Ford, if you listen to the third quarter, they were actually losing a lot of money. They were like, EBIT margins was like negative 75%. It was a little bit better at the beginning of 2023, but Tesla started a price war, and that's kind of squeezing a lot of the legacy automakers. Like I said earlier, Tesla, they started off as an EV company, but for Ford and GM, Ford with the F-150 Lightning, what we call those vehicles are the Generation 1 EVs. So basically what they've done was convert their existing fuel ICE vehicles, petrol vehicles, into EVs. So it's not the best way to do it because you're really adding cost to it instead of starting from scratch where you design in the batteries and other motors and other components, and you can actually cut costs when you start doing it from scratch.
Steve, how much of this is really the fact that truck buyers don't want an EV? I'm just looking at the story that they're going to increase production of the Bronco and the Bronco Raptor in the Ranger and Ranger pickup trucks. What's the driver
if you're a pickup guy, like, is EV like not cool or not macho enough or what?
Well, I think right now EVs are not very much of a utilitarian vehicle. The other thing is affordability. We're seeing across the board in the auto industry affordability becoming an issue with interest rate going up, but EVs more so, because on average EV prices are probably 20-30% higher than an ICE vehicle, even with the price cuts in the last 12 months. So for EV to be competitive with ICE vehicle, it needs to come down a lot. It needs to come down below the average price of a gasoline vehicle. I mean, and again, that's going to take a few years to get there.
Are they? I trying to get a sense of whether or not they're throwing in the towel on EVs, at least when it comes to pickup trucks at this point. And what's going to be the key for the future?
Well, I think the ship has sailed for EVs. I think it's here to stay. What I really think, and this is more of a U.S. issue, is we're going to have to take a pause here because, like I said earlier, battery is the highest cost, and that supply chain in the U.S. is pretty much non-existent. It's dominated by China. That's why they can do it really cheaply, and that's why Tesla can sell their cars cheaply because they're buying it from China. So GM has already came out and said, we're pretty much sourcing everything that's non-Chinese because the IRA stipulates, the Inflation Reduction Act stipulates that for it to get federal tax credit, you have to source non-Chinese components. So it's going to take 2-3 years for that supply chain in the U.S. to build up, and battery production to be locally located here in the U.S. Costs will come down, and I think between now and then, between now and 2026, 2027, I think affordability will still become an issue, and that's going to have some headwinds on EV sales.
I don't want to get too far afield, but I thought I had seen a story that they had hit a big mine somewhere in northern Nevada, the ultimate kind of lithium mud or whatever it's called.
Yeah.
Are we less reliant on China?
We are not less reliant on China, but I think the Inflation Reduction Act is actually generating a lot of investments throughout the value chain. You know, lithium mining, like you said, in Nevada, they're working closely with countries like China, Australia, parts of South America to actually source a lot of the lithium, source a lot of the graphite that's also dominated by China. And you know, those mines will have to take time to come online. And in the meantime, you know, there's a lot of investment, billions of investments in the U.S. And a lot of these new battery plants that this lithium is going to feed into will actually will start production, you know, as early as 2025, but mostly in 2026 and 7.
Steve, we've got the Stellantis CEO saying that a race to the bottom in terms of EV price cuts will cause a bloodbath, basically digging his heels in, saying they're not gonna do that for their Jeep and Dodge products. Do you think we'll see other automakers do that, or is he just kind of talking a big game?
I think it needs to stop at some point. I mean, we've seen these price wars before, not in the EV segment, but in another segment. Nobody's going to win at the end of the day. This needs to stop. You know, and you know, I think Tesla is guilty of that. So is BYD out in China, if you look at the global market. So I think he's right. I think at some point, you know, like I said earlier, the ship has sails on EV. Everybody's going to have to sell them at some point, you know, due to regulations here and abroad. And at some point, they're going to have to stop cutting prices. And I think we're closer to that than we were probably 6 months ago. We already saw 20 to 25% price cuts across the board in the industry here in the U.S. There's not much room to go, really.
Steve, we've got about 45 seconds left. Next week, Tesla earnings on Wednesday. What are you looking for, and what can we expect to hear from the company that'll have a read across to the space?
Yeah, I think earnings will we'll continue to see what we saw in the first 3 quarters. Pricing will still have an impact on earnings. I think more importantly is the guidance that the company's going to give in terms of sales. I don't think you know, we're going to see the high double digits that we saw in the last few years. You know, last year, 2023, they sold 1.8 million. We're probably looking around 2.1 million in 2024. So, and you know, that's on the back of price cut in 2023, but there could be more to come.
Okay. Steve, thanks a lot. Bloomberg Intelligence automobiles and industrials analyst Steve Mann joining us there with the look at Ford reducing production of the F-150 Lightning. S&P 500, 22 points higher. That's up about 0.5%, 4803 on the index. You're listening to and watching Bloomberg Markets. I'm John Tucker, along with Bailey Lipschultz. That brings us to 12:18 on Wall Street. And let's get company news now. And for that, here's Steve Rappaport.
John, Spirit Airlines says its deal with JetBlue Airways remains in full force and effect as the carrier explores ways to shore up its liquidity, offering investors a measure of relief after a federal judge blocked the multi-billion-dollar buyout. The company also detailed efforts to refinance debt in a wide-ranging update. We get more on that from Bloomberg's Kriti Gupta.
So it looks like a lot to really reassure investors around just the idea that even in the absence of this JetBlue deal, which is kind of thrown cold water on, Spirit Airlines can still survive and do it with quite a bit of liquidity, and that's really being rewarded this morning in the stock market.
That's Bloomberg's Kriti Gupta reporting shares of Spirit Air currently up more than 20%. One of Detroit's big three is making changes as demand for electric vehicles slows down. Bloomberg's Kimberly Adams has more.
Ford just announced it's cutting production of the F-150 Lightning electric truck. The automaker says it will transition its electric vehicle center to a single shift starting April 1st. Ford says about 1,400 employees will be impacted.
That's Bloomberg's Kimberly Adams. The company said it expects continued growth in global EV sales in 2024, though it will be less than anticipated. And shares of Wayfair are up after the home goods retailer announced it's cutting more than 1,600 employees, roughly 13% of its global workforce. Wayfair expects the restructuring to save the company more than $280 million a year. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets on the radio and on the web. That's coming up right after this. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 12:21 on Wall Street. We check the markets for you all day long here at Bloomberg. Stocks are surging today. We have stronger than expected consumer sentiment and waning inflation fears. That's the big assist today. But Ben Emmons, head of fixed income at New Edge Wealth, says you shouldn't be too worried about the economy, even if the Fed keeps rates higher for longer, because he's pretty sure the economy won't crash. Here's why.
Part of this soft landing, or strange landing, how you want to call it, is that the economy is not going to recession because spending levels remain so high and it's invested in the economy.
And Emmons there on the Bloomberg Markets podcast. The Dow right now, it is up about 0.4%, better by 150 points. The S&P 500 better by 0.5%, 28 points higher. And the NASDAQ surging 0.7%, better by more than 102 points. We did hit that new record high for the NASDAQ. We'll see if we can hold on to that gain. The yield on the 10-year right now, it is slipping. We have 4.16% right now. Spot gold, fractionally higher, and NYMEX crude, it's been lower all day. Right now, NYMEX crude looks like it's down about 0.9%, 78.47 a barrel. Comerica says net income will probably slide 11% this year. That stock's down about 0.5%. It's talking about a plunge in fourth quarter profit on a series of one-time charges. And Spirit Airlines says its deal with JetBlue remains in full force as the carrier explores ways to shore up its liquidity, offering investors what you might call a measure of relief after that court decision blocked the multi-billion-dollar buyout. That's the Spirit and Spirit shares right now. They are higher. And that is your Bloomberg Business Flash.
Denise Pellegrini, thanks very much. You're listening to Bloomberg Markets. I'm John Tucker along with Bailey Lipschultz. We are in for Matt and Paul. On to our next subject. Looks like they achieved something in Congress, Bailey, at least for the time being. Bloomberg News congressional reporter Laura Davison is covering the kicking of the can down at the road. What's the next milestone I have to worry about?
Well, so the first week in March is going to be the next set of deadlines. March 1st and March 8th is when this current round of government funding expires. You know, we're now, this is a very common thing for Congress to do. They get up to a deadline, realize they can't get a deal in a couple days, and just push the deadline down 6 or 8 weeks down the calendar. This is really because, a couple reasons. You have, conservative Republicans who basically can't agree with others in their own party about what spending level should be. Plus, there's other things, other priorities, other spending things that aren't in that main bill funding the government, but that other lawmakers want to get done. These are things like a border security deal that has Ukraine aid in it, also a tax deal that some lawmakers stayed back in Washington today to try to advance that. So over the next couple of weeks, the two things that Congress is going to be focused on are this, border security Ukraine deal, as well as tax policy. We'll see if they can get any of that done. What we've seen in Congress recently is that really they only can do what has to be done without some grave consequences. Stuff that is kind of nice to have usually gets left by the wayside.
Laura, are there any winners or losers from this agreement and kind of what's on the horizon?
Yeah, so right now, Mike Johnson is a winner. He still has his job. He is subject to the same rules that former Speaker Kevin McCarthy was subject to. This is not clear how long he will continue to have the support of his party. Excuse me. Remember, all it takes is one Republican to say, "Hey, I want to vote of no confidence in this guy." And because of the very slim margins Republicans have, it just takes 2 or 3 people to join with Democrats to vote him out.
But
so
didn't Mike Johnson have to make a Faustian bargain, or with, maybe that's a little too extreme, with Democrats? And what happened there? He was actually talking to Democrats at one point, wasn't he?
Yeah, so Republicans and what they call the Big Four. So this is the Republican and Democratic leader in both the House and Senate met with Biden earlier this week to talk about this border security deal. And they, had expressed some cautious optimism earlier in the week that they might be able to get towards a deal. Then, not even just a couple hours later, Donald Trump came out and said, "Look, Republicans hold strong. Don't agree to a deal unless Republicans are getting absolutely everything that we want." And of course, in a divided government where you have a Democrat in the White House, a Republican House, and a Democratic Senate, nobody is going to get exactly what they want. So the likeliest scenario, if Republicans hold true to what Trump wants them to do, is that nothing will happen.
Is it surprising at all that Donald Trump still has so much power and control over kind of the path of not only Republican politics, but U.S. politics as a whole?
It definitely, if you had asked this question a year ago, it would have been surprising. The Republicans were just coming off doing worse than expected in the midterm elections. But now, a year later, you have Donald Trump, who looks like he's going to be the likely presidential nominee for the Republican Party.
But they kind of ignored him with this negotiation, right?
Well, not really. They sort of ignored him, and then he kind of came out strong and said something. And now you kind of see everybody, scurrying around trying to figure what that means. The Republicans that you have that are pushing the most for this deal are folks like Mitch McConnell, who don't really care about Donald Trump, don't have a good relationship. But where the issues are going to be in the House, where you have a lot more support for Trump, and the margins are just much more unfavorable to getting a deal done.
Okay, you had mentioned a couple of issues, border and I think Ukraine funding. How did they play into this, if at all, and what's the future of those two issues in this Congress?
Yeah, so the reason that these two issues got paired is because Republicans were very anti doing something on Ukraine. This is something more that Democrats are wanting. But they kind of came to this deal of, okay, look, we really care about, our southern border. We want to do something. Republicans said that, and Democrats like, look, we need to continue to support our ally in Ukraine, and they're running out of money. They're in the middle of winter, and they're going to need more support from us. So this came up over, months and months of posturing. They finally said, okay, this is going to be the deal that we want to pursue. But this is really tough stuff. Both sides generally agree they want this deal to come together, but it's when you start talking about what are the bullet points, what are the actual spending levels, what are going to be in there, that's when you get both very willing to walk away from a deal.
Laura, I just want to step back briefly. We've got about 6 weeks of funding, and I believe 3 of those weeks the House is scheduled to be on break. So what actually can and could actually feasibly get done over the next 6 weeks before, as JT put it, the can gets kicked down the proverbial road yet again?
Yeah, the most likely scenario, and if anyone's betting on this, the best bet with Congress is that they will do the least hard thing. So in this situation, that means that they would likely just extend this current funding deadline yet again, kick it down another 6 or 8 weeks. Where we start getting into issues is at the end of April. So April 30th is when some spending cuts would start to go into effect per a deal that Democrats and Republicans made about a year ago. So that's the real deadline for them to actually figure out how they want to fund the federal government. This is tricky. It was last summer under Kevin McCarthy, when he was still speaker, that Biden and McCarthy hashed out a deal on kind of what the top level spending levels would be. And then it's up to Congress to look at everything below that and figure out how much they're going to spend at each individual agency. That's the work that has to get done. Republicans want to move each of these bills individually, and that's technically how Congress is supposed to work, that you move all these separate bills. But generally, what Congress has done, because it's a cumbersome process, and a lot of times these bills get waylaid, is you move them all as one big package. So these are the kinds of talks they're going to be having over the next several weeks, and they're ultimately going to need more time, particularly because they're out for 3 of those 6 weeks that they have.
And so how do the dynamics change as silly season progresses as we get closer to the election?
Yeah, so one of the things that's really going to be happening, over this same time period is it's very likely that Donald Trump will lock in the presidential nomination. So he will have even more sway. There will also be some discussions about, okay, if Trump is president, what do we want to get done before he's president? Interestingly, Democrats and Republicans both recognize it's going to be more difficult to get an immigration border security deal done if Trump is in the White House. Democrats are just not going to agree to a deal in the same way that they would now when they have a little bit more leverage with Biden. Some Republicans are also saying, look, we want to have this as an election issue. We want to be able to hit Democrats on this in the 2024 election. Let's not make a deal now, because then we lose some of our leverage there. So this, is kind of a complicated dance that frankly both parties don't agree on. You have a lot of different viewpoints within each party about what both the policy path should be as well as the political.
Yeah, I just wanted to ask, you're in D.C. So what's the feeling in D.C. as we head into the New Hampshire caucus about what the state of the Republican Party is and what November is going to continue to shape up like?
Yeah, so New Hampshire is an interesting state. It's very different from Iowa. It's a much more moderate state. You have more college-educated voters, more older voters there. And they are really kind of the last never Trump state on the calendar. Unlike Iowa, where Trump won by 30 points, Nikki Haley and Ron DeSantis were second and third, very close, but only getting about 20% of the vote each. In New Hampshire, Trump is polling about 40%, and Nikki Haley's somewhere in the mid 30s. So they're a lot closer. There's a chance she could win, but even still, even if she is able to upset Trump, the calendar going forward for her gets very difficult. The next race is in South Carolina. That's her home state, but it's actually a state that favors Trump now. So there's a lot of questions right now. If Haley is able to pull an upset, is she able to get donor support and other support? Will Ron DeSantis drop out? And that creates potentially more of a lane for her. But right now, the odds are on Donald Trump being president, but there's always surprises. He, of course, is somewhat of a wild card. There are all of his legal issues. So that's sort of Nikki Haley's theory of the case on why she could stay in.
Bloomberg News congressional reporter Laura Davison. I bet she owns a snow shovel. Thanks very much.
It all comes back to that in the S&P 500.
You think I'm living this down? No way. S&P 500, 31 points higher, 48.12 on the index. And that brings us to 12:33 on Wall Street. Let's get an update on news from around the world. We head to the Bloomberg 99.1 newsroom in Washington, and that's where you find Nancy Lyons. Hi, Nancy.
Hey, John. You've been talking about it. All sides are breathing a sigh of relief that a partial government shutdown has been avoided for now. The House followed the Senate's lead yesterday and approved an extension until March. President Biden is expected to sign the stopgap bill today. 5 Arab nations are quietly touting a settlement for post-war Gaza, for which they've secured the backing of the U.S. Just one problem. The Israelis are not keen on the concept of a two-state solution, which is at the center of the proposal. Bloomberg's Roz Matheson has more on the dilemma.
The starting point for the US and countries in the region is that you have to have a two-state solution to have a proper resolution of this issue in the longer term. So they can't agree on that. They won't be able to agree then on who's going to rule or manage Gaza in the aftermath of this conflict. Benjamin Netanyahu is now saying it can be a civil authority, but it has to be the one that he's comfortable with.
Bloomberg's news director for Europe, the Middle East, and Africa, Roz Matheson. Arab nations say they're also willing to invest in rebuilding Gaza, but they must have a promise from Israel the buildings will not be damaged or destroyed. Thousands of anti-abortion activists are marching in the nation's capital today for the 2024 March for Life. It's the group's second march in Washington since the Supreme Court overturned Roe v. Wade. Turnout, though, is expected to be lower than normal following a snowstorm in Washington. It's about to cost more to send letters in the mail. Come Sunday, the U.S. Postal Service will increase the cost of a first-class forever U.S. postage stamp from the current 66 cents to 68 cents. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 12:40 on Wall Street. We check the markets for you all day long here at Bloomberg. Stocks are higher, flirting with record highs, as a matter of fact. You know how usually in January consumers are in kind of a funk as we stare down those credit card bills from the holidays, wonder how we'll pay for them? Well, that is not the case this year, apparently. Consumer confidence unexpectedly surging in early January. Inflation concerns waning. But watch out, all this optimism could mean more economic strength. According to Margie Patel, Senior Portfolio Manager at Allspring Global Investments, she says the Fed might not cut rates this year as soon or as deeply as some people think.
I think really we'll see rate cuts, maybe one or two in the second half. I don't see any reason to expect them to act in the first half. But of course, they'll want to be clear of the election. So if they don't act by summer, then they'll really be in a holding pattern until after the election.
Yeah, and Patel there on the Bloomberg Surveillance podcast, which you can download wherever you get your podcast. Investors apparently not really too focused on this risk, though. Right now, the Dow up almost 0.5%, better by 174 points. S&P 500 up 0.6%, 29 points higher. NASDAQ up 0.8%, 128 points higher. Yield on the 10-year right now lower, 4.16%, we'll call it. NYMEX crude, it is down about 0.4%, 73.76 a barrel. Spot gold is up 0.2%. Amazon's proposed $1.4 billion acquisition of Roomba maker robot expected to be blocked by the European Union's antitrust regulator. That is over concerns the deal will harm other robot vacuum makers. Amazon shares, they're slightly higher on this. iRobot shares, they are plunging. They were down by almost 30% just a second ago. And that is your Bloomberg Business Flash.
All right, Denise Pellegrini with the Bloomberg Business Flash. Thanks very much. Appreciate it. You are listening to Bloomberg Markets. I'm John Tucker, along with Bailey Lipschitz today. We are in for Paul and Matt. They always told me don't fight the Fed, but it looks like somebody's fighting the Fed, at least the bond market is. Will the markets and the Fed interact with how they're going to interact in 2024? Hans Olsen is CIO at Fiduciary Trust Company, joining us now, I think from Boston, to discuss. Boston, right? Did you get snow yet?
That's right, John.
Okay.
No snow yet.
All right. Well, I can tell you it's on its way. We're sending it up to you guys. So the market, as I said, the bond market at least is fighting the Fed. Does this set us up for some kind of disaster now?
I do think that this market is certainly overbought and overconfident, and I think you see it, the overbought view when you look at sort of the S&P's RSI, right, the relative strength. It has had one heck of a run. And it's corrected a bit from that, but now it looks like it's making another run to a real overbought position. And the overconfident bit is really clearly seen when you look at the difference between what the market expects for rate cuts and what the Fed is telegraphing. And so far, the economy is suggesting that perhaps the Fed is more right than is the market.
We were talking about it this morning. What do you make of the University of Michigan sentiment data, and how does that kind of impact your view on the path forward for markets and also the Fed?
Yeah, that's a good question. I tend to focus on what people do versus what they say, and especially in markets, right? You follow the money, and without a doubt, I mean, it was a good read. I look back at what happened with retail sales in December, and that was pretty good. If you look at what's happening with employment, that's also quite good. So people, I think, are in pretty good rude economic health at the moment. Housing looks like it is going to be just fine, with the exception of today's numbers. But I think if you look forward with permits and the like, that all suggests that the economy is in rude health. So if that is the case, then one has to rethink sort of the timing and the extent of the interest rate cuts. And as you know, that 16% run in the end of 2023 was powered in large part by expectations around rates. It wasn't powered by earnings.
So we are headed for soft landing, no landing, hard landing, and which one of those scenarios do you think it's going to be, and what is that going to mean for risk assets?
Yeah, John, that's an interesting question because if I had told you last year at this time that we would have interest rates where they were without some sort of resetting of economic activity or certainly the market, we thought it'd be barking mad, but that's exactly what happened. So last year, in many respects, was a year of no landing because we didn't hit the Fed's target and the market was fine and the economy was fine. I think in many respects, there's a good chance that this year is going to be a year of either a softish landing or indeed possibly no landing, maybe a go round, right? Where we don't hit that Fed target. The economy is actually stronger than people are giving it credit for right now. And the markets can do pretty well with that. I think, though, the way that you make money in that environment is different than the way that you made it last year. Returns last year were all driven by multiple expansion, and it really happened in Q4 on the belief of rate cuts. So really that powered it, and it was not powered, was not assisted at all by earnings. This year, I think it has to be assisted by earnings. So, and I'm not sure that we can expect much on the multiple expansion front. So this is the year where I think stock picking really starts to matter. A focus on profits is probably the way to go here. So you get away from necessarily incredibly high valuations, but more to high quality, profitable companies being the prominent feature that people should be emphasizing in their equity portfolios this year.
Yeah, Hans, let's stick on that note in terms of what areas you do like. You mentioned profitability, maybe lower multiples. What areas, industries, or sectors are you liking for 2024 when it comes to the equity market?
Yeah, I think it's important because it'd be easy to talk sectors, but even within each sector, there are companies that have these features of what you would want this year. So, even some of the higher valued sectors, you would find companies that are incredibly profitable, really good allocation of capital, and which will drive some nice returns. I think from a sector standpoint at this juncture, software, banks, oil and gas, computers, those would be areas that we can see companies living in that have the features that we want. And you can see that if you drill down into companies like an ExxonMobil, a Berkshire, and NVIDIA and the like. These are companies that they should have the wind at their back because the earnings are there and they're likely to grow. So I think that's how I would come at it, rather than just sort of do the passive S&P 500 exposure.
If we agree we're in a disinflationary environment, what does that do to earnings and sales?
Yeah, that's an interesting question because it's disinflationary to what, right? So if we went from 9 to 3, I think we've seen that largely play out. If it goes from 3 down to where it had been for the last 5 or 6 years, that'd be another case. But I don't think that that's going to happen. I think it's really going to be now about margins and earnings growth. And to the extent that your cost of goods sold has some mixture of fixed in it versus floating, right? So you're not as susceptible to your input costs rising as much if you've hedged some of your inputs and the like. You could actually, interestingly, see your earnings rise in an environment where there's a bit higher inflation. So the details will matter in an environment like this.
Hans, thanks a lot. I appreciate it. I was going to say snowy Boston, but not yet. It's on its way, Hans. I bet he has a shovel. Hans Olsen, CIO of Fiduciary Trust Company, joining us from Boston right now. Market reset. Yeah, 48.12 on the S&P 500, 31 points higher. So we are in course for a record close. If this holds up 0.7% right now. Don't jinx it.
Dow
Jones
6 points from the intraday high, which is when you will see that nice hot head cross the terminal.
Okay. The Dow 204 points higher right now. That's up 0.5%. 37,670, and the Nasdaq 100 continues to add to its record close yesterday. It is up 1%, up 184 points, 17,166. This is Bloomberg Markets. And that brings us to 12:15 on Wall Street. Let's get an update on company news with Bloomberg's Steve Rappaport.
John, shares of Spirit Airlines are flying high as the carrier breathes hope into a grounded partnership. Bloomberg's Kimberly Adams has more.
Spirit Airlines is downplaying talk of a bankruptcy filing now that its planned sale to JetBlue has collapsed. At the same time, Reuters is reporting Spirit is seeking to convince JetBlue to appeal the decision, blocking their merger, but JetBlue has yet to decide on a course of action.
That's Bloomberg Kimberly Adams reporting. A federal judge concluded the $3.8 billion deal would stifle competition and drive up fares, but JetBlue argued the merger is vital to compete effectively with larger carriers. Amazon's proposed $1.4 billion takeover of Roomba maker iRobot could be in jeopardy. Bloomberg's Gina Cervetti reports.
Bloomberg News has learned the deal is expected to be blocked by the European Union's antitrust regulator over concerns it will harm other robot vacuum cleaners. And here in the U.S., the Federal Trade Commission is said to be drafting a lawsuit that would seek to block the deal.
That's Bloomberg's Gina Cervetti reporting. And Prince Harry is dropping his libel lawsuit against the publisher of the Daily Mail tabloid. No reason was given, but the move follows a ruling last month where the Duke of Sussex was ordered to pay Associated Newspapers more than $60,000 in legal fees. That was after he failed to win a summary judgment, which would give him a victory without going to trial. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. More Bloomberg Markets coming up right after this.
You're listening to Bloomberg Markets on Bloomberg Radio.
And that brings us to 12:55 on Wall Street. I'm John Tucker along with Bailey Lipschultz. Let's get an update of news from around the world now. And for that, we head to a snowy Bloomberg 99.1 newsroom in Washington and Nancy Lyons.
Thanks, John. Well, the snow is not letting up, as you mentioned, along the eastern seaboard. Bloomberg meteorologist Rob Carolyn says while this storm is not particularly powerful, it is affecting quite a bit of real estate.
For the major cities, it's a couple of inches around New York and also in the Baltimore and Washington areas. Boston will see less than an inch. Looks like some of the towns south of Boston, though, could see as much as 1 to 3 inches.
Bloomberg meteorologist Rob Carolyn says the most snow, though, is expected between Philadelphia, Trenton, Dover, Delaware, with 4 inches expected. Airports continue to see delays and cancellations. Senate Democrats are renewing calls to reauthorize pandemic preparedness legislation. We get more on that from Bloomberg's Amy Morris.
After a Senate hearing on long COVID, Democratic Senator John Hickenlooper of Colorado said it would be, quote, very feasible to reauthorize the Pandemic and All Hazards Preparedness Act with funding. But Democrats recognize immigration and the budget will be dominating the conversation on Capitol Hill for a while. PAHPA, or PAPA, expired September 30th, and the latest stopgap bill only extends some health security measures through March 8th. In Washington, Amy Morris, Bloomberg Radio.
President Biden is forgiving nearly $5 billion in additional student debt as the administration seeks to deliver on one of his signature initiatives. With extremely high stakes for his 2024 re-election campaign, almost 74,000 student loan borrowers will see debt canceled as a result of administrative changes by the U.S. Education Department. This is in the latest round of relief. Those affected include borrowers enrolled in the government's income-driven repayment and public service loan forgiveness programs. The NFL divisional round of the playoffs kick off tomorrow. The Houston Texans will travel to Baltimore to take on the Ravens. In the NFC on Saturday night, the Green Bay Packers head to the West Coast to face the San Francisco 49ers. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
I'm going to guess you're a Ravens fan, right? Ravens?
Oh, yes. We got to have the Ravens win.
Okay, Nancy.
The Packers fan, too.
I'm a Packers fan. Actually, a Packers owner, so double duty.
What do you mean?
But I'm rooting for the San Francisco 49ers this time.
I guess we're not going to talk on Monday or Tuesday or Wednesday.
Whatever it is.
I have one of my former neighbors, plays for the 49ers, so.
Oh, wow. Very impressive. Nancy Lyons from the Bloomberg 99.1 newsroom in Washington. One of the most read stories, the Bloomberg terminal, this has to do, these are always popular stories like rankings, like, who's the richest, whatever, who's doing the most deals. This one has to do with states. Who's the richest? Which is the richest state in terms of per capita income?
Right now, it is Massachusetts.
Because Massachusetts has just beat out Connecticut and beat them out by a measly $10 in per capita income. Is that right?
That was 2020.
Oh, okay.
2020. Now it's about $1,200, but it was $10 in.
It's still pretty close, though.
Yeah, they're neck and neck. I mean, the gap between them and our Garden State is closer to $6,000, which is.
New Jersey, I should point out, where we both live, is in third place, and it's not like we contribute to that number in any way, shape, or form. So.
And California's in fourth. California's always a state, JT, that I wonder if you broke these up by southern versus northern, how that breaks down, because you have to imagine.
Well, I would like to see it broken down by counties or even towns, because in my neck of the woods, the town over is just like,
huge,
millionaire plus territory.
Yeah, I'm a couple towns over from where Aaron Rodgers bought a house. His property looks nothing like mine. He has someone who shovels his driveway, unlike me.
Bailey Lipschultz with us today on Bloomberg Markets, and I have to compliment you because you've been doing some magnificent metaphorical shoveling for the past 3 hours or so. I'm John Tucker, and I guess I'm in for Paul. You're in for Matt Miller.
Yeah, we're a point away from S&P 500 intraday high. Just going to say that right before we sign off.
Okay, 48.17 on the index, up 36 points. That is up 0.75%. Stay with us. Bloomberg Sound On. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
It's the final stretch to New Hampshire, and a big endorsement coming, it seems, for Donald Trump. Welcome to the fastest show in politics, the Friday edition of Sound On, as the candidates descend on Manchester, and now news that Senator Tim Scott will back the former president. Is this over, or can Nikki Haley pull a rabbit out of a hat? That's what we're talking about today as we discuss the seeming inevitability of a Donald Trump nomination with the man who wrote the book. Tim O'Brien is here, Bloomberg opinion columnist, the author of Trump Nation, The Art of Being the Donald. The government will not shut down today, I can tell you that, as the snow falls in Washington. But that's about all we can tell you as Speaker Mike Johnson faces a growing rebellion on his right flank. We'll talk it all out with our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino are with us for the hour. And we get to all of it after a look at Wall Street. We go to New York right now for an update on trading from Denise Pellegrini. Hey, Denise.
Thank you. It is 101 on Wall Street. We check the markets for you, of course, all day long here at Bloomberg. Stocks flirting with record highs. We do have word, though, that Macy's and Wayfair are cutting thousands of jobs. Macy's shares, they are lower. Wayfair shares, though, they are surging. And Dan Suzuki, Deputy CIO, Richard Bernstein Advisors, says, don't worry too much about the retail industry.
My personal opinion is if you look at the drivers of consumption like labor and wages and overall economic growth, it's going to be gradually slowing here. And so I think it's normal to expect that to gradually slow, but clearly not fall off a cliff.
And Suzuki there on Bloomberg Television. As I mentioned, we've got green across the screen. The Dow up just about 0.6%, 242 points better. The S&P 500 up almost 0.8%, 36 points, so close. We're just 1 point off an intraday record high right now. Working on it for you. We'll see if we can squeeze that out. NASDAQ higher again today as well. The yield on the 10-year right now, lower, 4.15%. Spot gold, it is higher, better by just about 0.2%. And NYMEX crude, it is lower. It's been lower all day, down about 0.7% at 78.51 a barrel. And Apple shares, they are up almost 1%. As we've been talking about Apple's Vision Pro mixed reality headset up for pre-orders today. Either there aren't very many of these, Joe, or demand is strong, because if you look now, you will have to wait until March. The first people to order will be getting theirs February 2nd, if you ordered one early this morning. And that is your Bloomberg Business Flash, Joe.
Denise, thank you. We'll check in a bit later for an update on trading throughout the program. Welcome to the Friday edition of Bloomberg Sound On. I have news. Before we get to the news, this is the last edition of Sound On as you know it, as I know it. When we come back on Monday, we'll be at an earlier time, 12 noon Washington time. And it's going to work a little bit differently here. And by that, I mean in a better way. We'll have our first hour on the radio as it is now and on YouTube. And our second hour will be carried when Kaylee Lyons joins us for hour two. Will be carried on Bloomberg TV. And I hope that you'll be with us for the process. Our signature panel will be here, Rick Davis and Jeannie Sheehan Zaino. And, you know, we like to do things big. We're going to start this in New Hampshire on Monday. Yes, we're all getting on planes this weekend to bring you the very latest from the first in the nation primary, which could be a last stand for Nikki Haley. It could be the galvanizing moment for Donald Trump. It could be embarrassing for Ron DeSantis. We'll go through it together. And I have news here. We've been talking polls all week, but this is interesting and not the headline that I thought we'd see today. Senator Tim Scott, now set to endorse Donald Trump just days out from the primary, a former candidate and a man who is widely admired throughout the Republican Party. Getting involved on this level is pretty incredible. This is where we start our conversation with Tim O'Brien, Bloomberg opinion columnist, and of course, as I mentioned, the man who wrote the book on Donald Trump. Trump Nation, The Art of Being the Donald, is with us in studio. It's always a pleasure to have you in Washington.
It's always a treat,
sorry
Joe.
for the snow.
Washington snow is not bad snow.
Well,
I grew up in Chicago.
It's sweepable, right?
It's
Today,
sweepable.
no one's having a heart attack.
Yeah, it always
shoveling
cracks
this
me
stuff.
up how it shuts the city down.
They canceled school last night before a flake.
Yeah, it's
but
come
we
on,
could
people.
Do a whole show on
All right.
that. Donald Trump would still fly in and go back home and sleep in his own bed based on what we've seen. I want to talk to you about the apparent inevitability storyline here. But first of all, are you surprised to hear about Tim Scott?
I'm not. I mean, I think that anybody who sees themselves as a Republican in Donald Trump's Republican Party is inevitably going to come in behind him. I think it's craven because we're in primary season. And so we haven't really road tested these ideas with a general electorate. And I think it was ordained that he was going to do well in this primary because the most motivated part of the Republican base comes out in the primaries, and that's right now the MAGA base.
Yes. You'd think maybe he'd do this on the eve of South Carolina, which is still weeks away. But he's jumping in before New Hampshire, clearly an attempt to winnow the field or maybe eliminate the field. Is that
and I also think to get, a possible position in a Trump administration, which is, and I think, I think one of the problems with Nikki Haley's candidacy is that she hasn't been sharply defining herself apart from Trump. She's watching people like Chris Christie, who fell by the wayside, who did. So there's a political calculation in here.
Is she keeping the door open for something or just wants to be available for the MAGA base if Donald Trump is not?
I can't, that was Ron DeSantis' strategy, and that has failed.
How about it?
And there is only one Donald Trump for the MAGA base. And I don't think Ron DeSantis was Trump light. I think he was a bad candidate. He lacks Trump's charisma. He lacks the real emotional bond Trump has with his voters. You can't fake that. And it's a real, it's one of Trump's great political strengths and advantages is that he has an authentic emotional bond with his core supporters.
Well, so knowing him to the extent that you do, are we really going through this all over again? Have you committed yourself to another Trump-Biden race?
Well, yeah, I think it's absolutely going to be Donald Trump and Joe Biden. I think people that thought Joe Biden was going to step aside misunderstand how long he's wanted that job. People who thought Donald Trump was going to step aside misunderstood how long he's wanted to be perpetually in the public spotlight. And he's got legal issues hanging over his head that his presidency would solve.
Joe Biden's conventional wisdom until now was that's the one guy we want because we know we can beat him. We were afraid more of a Nikki Haley or maybe a Ron DeSantis becoming the nominee. Is that a foolish view based particularly on some of the swing state polling that Bloomberg has done?
I think that I think it's true that Trump is the most ideal candidate for Joe Biden to run against.
You think he can beat him again?
I think it's going to be on a razor's edge. I think that I think he would have had more trouble with Nikki Haley than he will have with Donald Trump.
Are you counting her out then? This is
I think she's probably done. I think both she and Ron DeSantis are done by South Carolina.
Wow.
I could end up being wrong. I think she'll come in second in New Hampshire. The polls are suggesting she's 8 points behind. It might be more than that. DeSantis will be nowhere in New Hampshire. And if she loses in South Carolina, which is her home state, she was the governor of South Carolina. I don't see how, Michigan follows, and then you have Super Tuesday. But we don't really, not even get to Super Tuesday. And obviously, it's the same is true of Biden with the Democrats. It's he's going to be the nominee.
So this is Donald Trump's, third, technically, presidential campaign. What will an emboldened, post-January 6th, emboldened Trump look like this time around?
As a candidate or as president?
As a candidate.
As a candidate, I think he'll do what he's continued to do, which is, both the entrance and the exit polls in Iowa, two of the top responses for why Trump appealed to his voters were he fights for us and he shares our values. And I think when his supporters say he fights for us, he is fighting for, he identifies as being a victim. Despite the fact that he's a wealthy white male who's had every advantage in life. The idea that he's a victim is comically absurd, but he understands and he's played that card repeatedly. I feel your pain. Sure. The institutions are out to get you. They're out to get me. They're coming at me in a different way.
A billionaire in that case.
And a celebrity and a president. He has so many disadvantages: wealth, celebrity, white American. It's the things he's had to struggle with are extraordinary.
Bone spurs.
Right, but bone spurs, yeah. But he has said that there's no traction of these legal charges against him. It is the institutions coming at him in the same way they've come after you, dear voters. Therefore, I might be a dictator for a day. It'll only be a day. Right. I might try to run again after this administration. Who knows? I know that legally I'm not allowed to, but I might do it anyway. Because you need a dictator to take care of you. And this has real traction with his voters.
A lot of people think they do, apparently.
Yeah.
And would go through 30-degree below zero weather to caucus for him after dinner in Iowa.
Yes.
We're watching this happen in real time. How far out of the lines, though, could he be playing as a candidate this time? Because he knows that he's the exception to every rule.
He is, but also, one of the things he's doing now that he didn't do in 2016 when he first came on the scene in a seismic way is he has professionalized his campaign operation. Right. He had, I think, over 1,000 precinct captains on the ground in Iowa. He wasn't there. He didn't need to be there. The victory speech he gave in Iowa was for Donald Trump, about as diplomatic as you get. It lasted about 10 seconds, but you got some of it.
Speech,
and good job, Nikki, and good job, Ron, and my mom and dad are looking at me from heaven, and all that stuff. And as opposed to, I'm going to rip your guts out and hang you in the public square, which is generally where he resides.
It was about 24 hours before the racial slurs started,
started
against
rolling.
Nikki Haley on Truth Social.
Yeah.
The missives on Truth Social would suggest that we have not matured, maybe gotten worse when it comes to that.
It works for him.
Yeah.
It's not just, we have to really understand Donald Trump through the prism of the people who support him, not just Donald Trump himself. And what he has done is peeled back this Band-Aid on ideas we have in the U.S. about how much progress we've made around racial justice or economic equity. That there's still a lot of that boiling over with the electorate itself.
Yeah. Will he sink a border deal if one comes along? He's on the phone apparently with the Speaker of the House on the regular.
This Congress and this Republican Congress has no interest in getting a border deal done because they want to hang the immigration albatross around
So this is all a charade,
Biden's neck.
in your view.
There are, Lindsey Graham is saying, there's a number of Republicans who are saying this is the best border deal they're going to get, even if Trump comes in the White House.
That's right.
It should get done, and yet they're not doing it.
Those who have been there are saying this, those with experience.
Yeah, so if they cared about public policy and taking care of the border and our border states that are dealing with an out-of-control migration problem, they would get this deal done. And they're not getting it done to score political points. It doesn't make sense from a public policy standpoint.
Wow.
It doesn't make sense from a national standpoint. But it does make sense from scoring points. And I think the Biden administration will have to point out to voters that the reason immigration is now in chaos from a policy standpoint and from an enforcement standpoint along the border is because this Congress doesn't want to pass the legislation that would address it.
That's going to be a tough sell because they hold up H.R. 2 and then the thing goes around again. You asked me, as a candidate or as a president? Now, Donald Trump as a president, let's see, he closes the deal. Then we really drain the swamp. We put in the action plan to replace the bureaucracy with something we've never seen before.
Right. I think there's two things there. He will not drain the swamp because he lives in the swamp. And he said he was going to drain it last time, and he just brought in bigger alligators.
Okay.
So he has no interest in sort of ending the money wheel in Washington. I do think he has an interest in dismantling the federal government, the agencies that exist as part of the executive branch. And I think in an ideal world, we would have a very healthy public debate about where expertise should reside around policymaking. Should it belong in agencies? Should it belong in the Congress or in the Supreme Court? And then how do we use that effectively to drive policy? That's not the conversation he wants to have. He just wants to get rid of most agencies but keep the Defense Department and the Justice Department so he can weaponize both against his critics.
Wow. You ready to cover that?
We have to cover that. This is a seismic moment in American history. This isn't just another political race. This is really testing how we think about American democracy and the rule of law and the Constitution. And I think the more we cover it as a horse race and the less we look at foundationally who we are as a country, I don't think we serve our listeners and readers well.
Will you stay in touch with us through the year on this program?
If you'll stay in touch with me, because I always like talking to you.
This is really important. I don't know if I'm allowed to ask you this. What's it like to be sued by Donald Trump?
Oh, you can ask me, and I'll give you an answer that drives my wife, who's a lawyer, nuts,
Okay.
is that I actually enjoyed the process because we deposed him and we got access to his business records and bank records and through the litigation, and the work stood up. The court upheld the integrity of the work. He lost the case.
Was your phone ringing at night, though? People were driving by the house?
There's always a price of covering Donald Trump where the people who support him come after you personally. but c'est la vie.
Tim O'Brien, great to see you.
Thanks
you,
Joe.
for coming.
Good to see
we're
you.
off to New Hampshire tomorrow, and we'll talk to you when we get back. All right. He runs the Bloomberg opinion operation here, which you can always find on the terminal and at Bloomberg.com. Tim O'Brien, the author of the book Trump Nation, The Art of Being the Donald, as we get things started here, going into a weekend that might play in a very big way for Donald Trump. Let's assemble the panel. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Rick, you've spent more time in New Hampshire than most Republican strategists. How are you feeling on this weekend before the primary?
You know, I'm actually surprised there's not more sort of cliff-hanging indecision by people. The polls are all coming in really consistent, and you know, polling is got a rich history in New Hampshire. There's an enormous amount of data available from just really fantastic organizations that are used to doing it. And it all usually turns out to be a little bit wrong. So today we wake up and Donald Trump's winning this thing. He's got over 50% in a few of these really credible surveys. And that's going to be really hard to overcome for Nikki Haley. For whatever reason, Donald Trump benefited from his time in Iowa and she didn't. She's kind of stalled out in these polls with what she had going into Iowa. And maybe it was Vivek Ramaswamy's endorsement and his votes. But the bottom line is she's got to be really coming from behind to make this work. And tons of good questions out there about what level the independents are going to show up, the unaffiliateds. They always play an important role in New Hampshire primary politics. And that's probably the biggest question right now.
Jeannie, Nikki Haley held a town hall on CNN last night. She was asked about some of the insults that she's been getting from Donald Trump recently. She said, do you really want two 80-year-olds running for president when we have a country and a world on fire? But she said, I will continue to focus on things people want to talk about and not get into name calling. Is that the right tone here on the eve of the primary?
It's not working for her, and the polls tell the story. And I'm glad she was out on CNN, but quite frankly, people in New Hampshire report she hasn't been out on their airways enough. She needs a Hail Mary at this point. She doesn't seem like she is jumping at one. She's turned down some interviews. She's been, out on the stump, but it's been in northern New Hampshire and other places. So I'm not sure that her argument she's going to stay above the fray is working for her. Yeah. And in fact, if you believe the polls, they're saying it's not.
We're going to find out together. Rick and Jeannie are going with us. We're headed to New Hampshire this weekend. We're going to pick up on this news of an endorsement, though, as we get the panel's reaction to Tim Scott making it official, coming in behind Donald Trump just before New Hampshire. It's the fastest show in politics from snowy Washington. I'm Joe Matthew. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 1:21 on Wall Street. I'm Denise Pellegrini. We check the markets for you all day long here at Bloomberg. The S&P 500, well, it has just hit another intraday high. And that's all on the back of unexpectedly strong consumer sentiment and also waning inflation concerns. The Dow right now better by 0.8%, 302 points higher. The S&P 500 up 0.9%, 44 points higher, sitting at 4824 right now. Just about 6 or 7 points higher than the previous intraday high. We'll see if we can hold things there and get another record close for the S&P 500. And the NASDAQ up 1.2%, 174 points higher. The yield on the 10-year right now, it is lower, 1.4, that would be amazing, 4.16% right now. Spot gold up 0.2%. NYMEX crude down just about 0.7%, 73.56 a barrel. And Brian Vending, president at MJP Advisors, well, he tells us there are a lot of opportunities in investing in certain sectors right now. He picks healthcare.
We are looking at areas of some of the biotech, some of the big pharma space areas, because the big pharma companies, they're building out, they're going out and acquiring other companies right now and building out their pipeline for new therapies and drugs. And I think as rates change, we might see a little bit more in that M&A space from healthcare.
And Vendig there on the Bloomberg Markets podcast, which you can download wherever you get your podcasts. And speaking of healthcare, shares of Humana, they're among those in focus. They're trading lower today. You know, they're down more than 10% on the year. And that is your Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Piece of news from the White House. In my constant effort to say something positive on this broadcast, the government is not going to shut down today. I say that officially. Just got word from the White House. The president has signed the stopgap government funding bill that Congress ushered through yesterday. So there we go. We head into this weekend without a shutdown on our hands. The question is what happens in March, because we've got another ladder here. This would mean an expiration March 1st and on March 8th. And if you think about what's going to happen in that period of time between Super Tuesday, the potential start, the scheduled start of Donald Trump's trial, and President Biden's State of the Union, that should be interesting. None of these things happen in a vacuum, right? Keep that in mind. Speaking of which, big news on the campaign trail as we prepare to go to New Hampshire. This is the one Nikki Haley was, gosh, she must have been hoping for. Everybody was. To get the endorsement of Senator Tim Scott. It's going to Donald Trump. And this is an important bit of reporting on behalf of Bloomberg. He will endorse Donald Trump this evening at a rally in Concord, New Hampshire, according to those familiar, speaking on condition of anonymity. Let's reassemble the panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. This is one that actually could make a difference in terms of helping Donald Trump, Jeannie. No?
It could. I mean, it is her home state. He is senator in large part because of her. They did mix it up a bit in the debates, of course, but the idea that he would endorse now, it really, I think, shows you and is a reflection of how much the Republican establishment, and not just the MAGA wing of the party, is owned by Donald Trump. You know, Tim Scott follows Marco Rubio. You know, just the sheer number of endorsements that Donald Trump has out of Congress is a reflection of his strength and his ownership of the party, making it all that much more tougher for Nikki Haley to have any kind of surprise win in New Hampshire. It could happen, but it is becoming increasingly less likely as the hours go by.
What do you make of the timing here, Rick? Not only is the call coming from inside the House, this endorsement from South Carolina that he could have waited a couple weeks, you know, to have an impact in his own state. Doing this on the eve of New Hampshire, does this feel like a party that wants to get this over with?
Yeah, I'm sure the Trump people pressed him to do it while they are in the pre-New Hampshire balloting. Look, I mean, it's not like he's going to help Donald Trump with conservatives, which is his base, and especially evangelicals, because Trump's already getting a lion's share of those votes. There's nothing really going to be beneficial to him, but he could have been a gateway to those voters looking and saying, well, if Tim Scott's going to go for Nikki Haley, then we're comfortable doing that too. So the predicate now isn't going to get set. And Nikki, although she's doing extremely well with independents in New Hampshire, she failed in really crossover voting and getting conservatives in Iowa, and she needs those conservatives in New Hampshire to compete with Donald Trump, and she's just not getting them. So this is a huge disappointment, I'm sure, for Nikki Haley and her campaign, because they, I think, saw Tim Scott as that permission structure for Republicans who are conservative or evangelical to be willing to support her. And now she's not going to get it.
You can frame that, Rick, about how sought after that was. Maybe I should ask that in a different way. How popular he is inside the party. He has the respect of his colleagues.
Yes, I mean, both on Capitol Hill with his fellow senators, so within the institution of the Senate, he's considered a very solid, very thoughtful member. But at home, he's the hometown kid. He's the guy from the other side of the tracks who made good. His personal story is immensely compelling to South Carolinian voters. And even though he wasn't successful conveying that to a broader audience of Republicans around the country, he was able to have an impact in a lot of circles in this campaign. And so, yeah, I mean, he's kind of the gold standard of Republicans, especially in the South right now, when you have the swirl of discussions around slavery and racism that have sort of populated this last couple of days on the campaign trail. He is the safest harbor you're going to find politically.
Jeannie, are you feeling like this is over now, that it's a party that wants to pull the ripcord and just make Donald Trump the nominee?
Well, historically, New Hampshire has delivered surprises. So that is always something I keep in the back of my mind. But and Rick knows that better than anybody, but if you trust the polls, which I know a lot of people don't, I do, they would have to be wildly off for her to win. Could she come in close? I think that's possible. But even if she does, she's going to do it on the backs of independents, Democrats, and that is going to be something that Donald Trump is just chomping at the bit to use. She has a big problem now. She has been defined oddly as Chris Christie and Asa Hutchinson and other never Trumpers have left the race. She has become really the poster child of the never Trumpers, which is, not a place she wants to be if she hopes to win the Republican primary at this point. And of course, it's stunning because this is Nikki Haley. Let's not forget, she had the endorsements of Mitt Romney and Sarah Palin to become governor. She was part of that Tea Party movement, but now she is nothing of the sort.